Alright students, let's go ahead and now start with our revisions for customs. Now when you go ahead and start your revision for custom, in the custom you'll see the first chart which is given is the definitions ka chart. Now listen to me carefully. These definitions, although from exam point of view it is C graded, in the exam they hardly go ahead and ask any definition. Sometimes they go ahead and ask also. So what I've gone ahead and done is all the important definitions which are there, I've gone ahead and put it over here. This first chart is just for the purpose of your reading. You can read, go through them quickly, and then move to your first chapter, which is there, the levy and exemption ka chapter. Now, sir, also I have given this first chart over here because it acts as a supportive chart for the other chapter. For an example, when you read levy and exemption ka chapter, you need goods ka definition, you need India ka definition. In that scenario, you can quickly refer to this chart because goods ka definition is given over here, India ka definition is given over here. So this first chart which is there is just a supportive kind of a chart which you can just quickly go through, glance through once, and then you can go ahead and start with the revision from chapter number 1. So let's get it started with chapter number 1 now. Alright students, let's go ahead and now revise our customs. In the custom, we'll be going ahead and revising the first chapter today. The first chapter is levy and exemption from custom duty. Everyone over here, the first thing which you will have to go ahead and see over here is the word custom. How does the word custom evolve? Because the Custom Act, the Custom Tariff Act, the word custom is being used. How did the word custom evolve? We have to go ahead and see the historical background. Custom means a habitual practice. In the earlier time, what used to happen? It was a customary that the traders from one kingdom, when they used to go to other kingdom, they used to go ahead and offer some gift to the king so that the king is happy and he allows them to sell their goods. Now, this was earlier a custom. During those days, the gift was a custom. Now, it is being collected by the government as custom duty. Right, everyone? Now, whenever you go ahead and talk about custom law, entry number 83 of the union list, article number 246. Article number 246, 7th schedule, union list. Basically, 7th schedule mein there are 3 lists: union list, concurrent list, and the union list, state list, and the concurrent list. In the union list, entry number 83 gives the parliament the power to go ahead and make the law with respect to custom. Now, when I go ahead and talk about the custom law has Custom Act, Custom Tariff Act, custom rules, and the regulations which are there. Custom Act goes ahead and gives you the entire law relating to the import and export. Custom Tariff Act goes ahead and provides you the import duty ka rate and the export duty ka rate. The rules which are there are being issued by the central government, and the rules are to carry out the purpose of the act, and regulations which are issued by CBIC are also to carry out the purpose of the act. Also remember, Custom Tariff Act, you have 2 schedules. First schedule gives you import duty, second schedule goes ahead and gives you export duty ka rate. Now when we go ahead and read section number 12 of the Custom Act, it goes ahead and tells you that custom duty, section number 12 of the Custom Act, basically the levy section, goes ahead and tells you custom duty is levied on goods which are imported or exported from India. When I go ahead and tell about custom duty is levied on goods, what do you mean by goods, everyone? Goods ka definition goes ahead and says goods means vessel, vehicle, and aircraft. Goods means stores, goods means baggage, currency and negotiable instrument, and any other kind of movable property. So sir, goods means vessel, vehicle, and aircraft only when they are permanently imported, and not if they are imported as conveyance. If they are coming and going as conveyance, then custom duty can't be levied on them. But if they are imported as permanent import, then custom duty will be levied. Jal Udyog ka case law is there, wherein it was held that whenever all this conveyance etc. is coming as, all this vessel, vehicle, and aircraft is coming as conveyance, then in that scenario custom duty can't be levied. If they are permanently imported, custom duty will be levied. Then sir, custom duty is also levied on goods, and goods includes what? Stores. What do you mean by stores? Stores means those goods which are used by vessel or aircraft, and it includes fuel, spare parts, and any other equipment, whether for immediate fitting or not. Everyone over here, stores means basically those food which is being used by human being, life jackets, etc. And ship ke liye whatever fuel, spare part is there, those are known as stores. And whenever you are importing store is also goods. Then they went ahead and told baggage. What do you mean by baggage? Baggage means those goods which basically a passenger gets along with him from outside India. If you read the definition, baggage, they go ahead and say baggage includes unaccompanied baggage. So if you are coming from outside India, you get a suitcase along with you. Might be when you are coming from outside India, you got a suitcase along with you. That's your accompanied baggage. For an example, Priyanka Chopra came from outside India. They had 10 suitcases with her. Now the flight company went in and sent 1 suitcase with her. That is her accompanied baggage. 9 suitcases were sent later. Those are unaccompanied baggage, and that is also baggage. Always remember, when you read the definition of baggage, baggage says it includes accompanied baggage or unaccompanied baggage, but it does not include motor vehicle. For baggage, what happens? 35% duty is there. People will say, I will take motor vehicle along with me, and on motor vehicle also 35% duty, and hence government went ahead and told baggage includes unaccompanied baggage but does not include motor vehicle. Right, everyone? More discussion in your chapter of baggage. The next is currency and negotiable instrument. Currency and negotiable instrument is also goods, because you should be bringing as per FEMA. And then any other kind of movable property is also goods. Any other kind of movable property means TV, mobile, iPad, intangibles put on media is also goods. Now intangibles put on media, supposingly you went ahead and got a CD mein software is there, that is also goods. You went ahead and got some sketch, etc. Basically those sketches are on a paper, etc. So basically those sketches are also goods. Always remember, here there is a case law which is Associate Cement Companies ka case law, where Supreme Court went ahead and held that drawings, designs, manuals, technical materials are goods and liable to custom duty. Always remember one thing, custom duty is levied on goods. Goods means vessel, vehicle and aircraft. Sir, goods means stores, goods means baggage, goods means currency and negotiable instrument, goods means any other kind of movable property, sir, and it includes intangibles which are put on media. Associate Cement ka case law is there. Right, everyone? Custom duty is levied on goods which are imported into or exported from India. What do you mean by imported into or exported from India? Sir, import means it is a taxable event. Always remember one thing. Sir, imported means it is the import or export is the taxable event. Custom duty is levied on goods which are imported into or exported from India. If you go ahead and read about India, India ka definition goes ahead and says India includes the territorial waters of India. Now, sir, India will always include the territorial waters of India, that is up to 12 nautical miles. Now, everyone over here, what is the significance of the territorial water? Import and export is determined by the territorial water. If ship comes inside the territorial water, it is import. If ship goes outside the territorial water, it is export. Right, everyone? Then we have something called Indian custom water. That, sir, up to the exclusive economic zone, the water which is there in is the Indian custom water. Basically up to 200 nautical miles, it is the Indian custom water. Indian custom water ka significance is that the officers of custom, Indian custom, have the power till the Indian custom water. They can go ahead and stop any ship. They can search any ship. If they go ahead and find any violation is there, they can arrest a person and also confiscate the ship and the goods over there. Right, everyone? The next one over here is, sir, is India including exclusive economic zone and continental shelf also? Baba, in custom, exclusive economic zone and continental shelf are not part of India. Always remember, they are not part of India, but central government, by using the power under the Maritime Zone Act, can go ahead and extend the validity of the Indian Custom Act and the Custom Tariff Act up to specified areas of the exclusive economic zone and continental shelf, only for the purpose of what? Only for the purpose of exploration of mineral oil, petroleum or natural gas. And central government has gone ahead and extended the Indian Custom Act and the Indian Custom Tariff Act applicability to those specified areas of the continental shelf and exclusive economic zone, and hence not the entire exclusive economic zone but only specified area of exclusive economic zone and continental shelf where oil exploration etc. is happening. Those places become part of India. Are we clear, everyone? Always remember, India means India will always include territorial waters of India, and territorial waters of India will help you in determining import or export. Now, exclusive economic zone and continental shelf are not India, but government has gone ahead and extended the applicability of the Custom Act and Custom Tariff Act to the specified area of continental shelf and exclusive economic zone, and those specified area are part of India. Right, everyone? Always remember one thing, sir, custom duty is levied on goods which are imported or exported from India. Now, sir, import means bringing into India from a place outside India. Export means taking from India outside India to a place outside, taking out of India to a place outside India is export. Forex realization in case of export is not important for it to be called as export. Right, everyone? Now listen to me very carefully. Import means bringing into India from a place outside India. So if a ship is coming and it enters the territorial waters of India, it is import. But the taxable event, what will be the taxable event? Court went ahead and decided in case of Garden Silk Mill, court went ahead and told when the ship enters the territorial water, it is import. But that time the import starts. Import will continue. Import commences when the ship enters the territorial waters of India, but import will continue and it will be completed. Basically, the taxable event will be reached when the importer basically goes ahead and files a bill of entry and he is willing to take the goods out of the custom boundary. Always remember one thing, Garden Silk Mill ka case law, government went ahead and told, court went ahead and told, import commences in case of goods cleared for home consumption. The import commences when the goods cross the territorial waters of India, but continues and is completed when goods become the part of the mass of the goods within the country. The taxable event is what? When the goods reach the custom barrier and you file a bill of entry for home consumption, that time basically the taxable event is reached and you will be liable to pay the duty. Sir, in case of Kiran spinning mill, what happened? Goods were imported, shifted to the custom warehouse. What is the taxable event? The taxable event started when the goods crossed the territorial waters of India. The taxable event is continuing, but the taxable event is completed. Sorry, the taxable event means the import started when the goods crossed the territorial waters of India. Then the import continued, but the taxable event is reached when you are trying to take the goods out from the custom barrier, basically from the custom warehouse, and you file a bill of entry for home consumption. Kiran spinning mill, in case of goods cleared from for warehousing, custom barrier is crossed when they are sought to be taken out of the custom. That is, the taxable event is when bill of entry is filed for home consumption to clear the goods from the custom warehouse. Then the next case was Mangalore Refinery and petrochemical ka case law. Whatever amount of goods was actually mentioned in the bill of lading was not received in India, or actually so you will be liable to pay the duty on the actual quantity which is received in India and not the quantity mentioned in the bill of lading. Then the next one was Urban Lloyd Chills Offshore Limited. Everyone listen to me very carefully. In case of Urban Lloyd Offshore Chills, what happened? This area in the EEZ, basically where the oil refinery is there, is what? Is part of India. Now, Urban Lloyd Offshore Chills Limited, what happened? They went ahead and got some machinery or some goods on their exclusive economic zone. Sorry, they went ahead and got on the oil field which was located, which was an offshore unit in the exclusive economic zone, and that's a part of India. So if you go ahead and get some goods on the oil field, then it is deemed as import. That was being told over here in Urban Lloyd Chills Offshore Limited. Goods imported for consumption in an oil rig which is in the continental shelf or exclusive economic zone. It will be, because oil rigs are treated as what? Part of India, it will always attract import duty. I hope everyone is clear. The next one is export. What do you mean by export, everyone? Export means taking from India outside India. Now there is Rajendra Dyeing and Printing Mills ka case law. What happened over here? One ship was going. Now what happened? The ship was going, and it became tightening before crossing the territorial waters of India. It will not be export because it did not cross the territorial waters of India, and no export benefit will be given to the exporter. Sir, supposingly, what happened in the next case? Sun Industries ka case law. What happened? Sir, the ship was there, ship went, crossed the territorial waters of India, then it returned. In that scenario, because it had already crossed the territorial waters of India and it returned because of some problem, then they are going ahead and telling, because you crossed the territorial waters of India, it is export, and the exporter will be eligible for all the export ka benefit. I hope you guys are clear till here. Always remember one thing, custom duty is levied on what? Goods imported or exported from India, but this levy which is there is subject to some other sections, some other remission, some other abatement, and some exemption. Section number 13 which is there goes ahead and says, sir, generally custom duty will be levied on goods imported or exported from India, but if you go ahead and import some goods and at the port there is some pilferage which is happening, pilferage means small theft, then you will not be liable to pay any duty. Are we clear, everyone? No duty liability if goods are pilfered after unloading, but before clearance order for home consumption or warehousing is given. Basically, the pilferage should happen at the port, in the custody of the custodian. Always remember one thing, Pilferage ka case mein, no duty is liable to be paid. Can I go ahead, everyone? The next one over here is because goods pilfered, duty also pilfered. Section number 23, subsection 1 goes ahead and talks about remission, means you don't have to go ahead and pay the duty on goods which are lost or destroyed. Always remember, lost means big theft has happened. Pilferage means small theft. Now, whenever goods are lost or destroyed, destroyed means they are completely unusable, then you can go ahead and tell the department and they will not be asking you the duty on the goods which are lost or destroyed, but it is your duty to go ahead and satisfy the AC or DC saying that, sir, goods have actually been lost or destroyed. Everyone over here, section number 23 applies only when there is no pilferage. Pilferage, then go to section number 13. Burden of the proof is always on the importer. You have to go ahead and prove to the AC or DC that goods are lost or destroyed. Loss or destruction should happen before clearance from custom, that is, it is applicable to warehouse goods also, in the port also, or might be in the warehouse. Wherever lost or destroyed goods are lost or destroyed, you will not be liable to pay the duty. Simple. Goods lost, duty lost. Goods destroyed, duty destroyed. The next one is section number 23(2), remission of duty on abandoned goods. They went ahead and told, if you got some goods from outside India and the goods are not as per specification, or might be there is a breach of contract, breach of term or condition is there is some breach of contract and you are not willing to take the goods, or might be goods when they reached India, they have been damaged or deteriorated, you don't want to take the delivery, leave the goods to custom and they will leave the duty. Always remember one thing, if it is offensive good, in case of offensive goods, you can't go ahead and abandon it. Now they will send you to jail also. Can we go ahead, everyone? Here they are telling remission of duty on abandoned goods. Owner of the goods before clearance or depositing in the warehouse can relinquish the title and they don't have to pay any duty. No relinquishment in case of offensive goods, and importer may relinquish if the goods are not as per specification. You told iPhone, they send you pineapple phone, then goods are damaged or destroyed during voyage, or there might be a breach of contract and you are not willing to take delivery. Don't take delivery, we will not take duty. Can I go ahead, everyone? The next one is section number 24, power to make rules relating to denaturing or mutilation. Always remember one thing, if goods have been imported into India, supposingly alcohol, and alcohol can be used for home factory consumption also, it can be used for human consumption also. So if you have gone ahead and imported alcohol and you are telling I am going to use it for factory consumption, power of under section number 24 is given to the custom officer. He can go ahead and denature the goods. Now he'll mix some chemical in the alcohol and make it denatured. Now you have to pay duty as if that alcohol had come into India in such denatured form. Now there is power to make rules for mutilation. One machinery was imported and it can be supposingly cleared as to machine also, it can be cleared as scrap also. You are telling I want to clear as scrap, then they will go ahead and mutilate, break it into piece, and now you can clear the machine as if it was imported in such scrap ka form only. Right, everyone? That power to denature and mutilate is there with the custom ka officer. The next one over here is section number 20, which goes ahead and says, sir, if you imported some goods, if you re-importation of goods produced or manufactured in India, always treat as fresh import and liable to duty. I went ahead and exported some goods. If I re-import, section number 20 says re-importation is always fresh importation and I'll be liable to pay the custom duty again. I exported it. Now if I re-import, I will have to pay the complete custom duty. Everyone over here. But then there is some concession which is being provided. So there is some concession etc. which is being provided. They are going ahead and telling, if you go ahead and exported the goods, you got duty drawback. Re-imported, it is fresh import, but what is the concession? Whatever duty drawback you got, please pay it back. You exported the goods, you got some GST ka refund. When you re-import, please give the GST ka refund back. You went ahead and exported, you gave the bond, means you did not pay IGST, you re-imported, please go ahead and pay the IGST which you had not paid at the time of exportation. This is the first one which is going ahead and telling. The second one over here goes ahead and says, sir, goods imported, you imported some goods, some problem happened and you re-exported for repair, and that person will repair and give it back. Now when you are getting it back, re-importation is fresh importation, you will have to pay duty, but then they went ahead and gave some exemption and they went ahead and told, sir, you imported some material, some AC supposedly, you already paid the duty, now you are exporting it for repair, going and coming ka, freight and insurance, plus the fair cost of repair, material plus labor ka, whatever is the fair cost of repair, total amount pay, you'll have to pay the duty. What is the amount you have to pay the duty? You send some machine for repair, it is coming back. So first you had imported the machine, you paid the custom duty. Now you are sending it for repair, going and coming ka, create an insurance plus material and labor ka fair cost, whatever is the total amount, on that you are liable to pay the duty. Custom duty on the fair cost of repair, cost of material used, insurance and freight, two-way. But for the point number 1 and point number 2, where they are going ahead and giving you concession, they are going ahead and telling, sir, re-import should happen within 3 years plus 2 years ka extension can be given. Secondly, what you had exported only should come back. What you had exported only should come back. Same goods should come. And thirdly, they are going ahead and telling no change in ownership between the time of export and re-import. When you exported, Ram was the owner. When you re-imported, also Ram is the owner. Export and import ka case mein, whenever you exported your machine, by the time it came back, you only are the owner. Always remember one thing, ownership should not have change. Then they are going in and telling if goods are manufactured in India and exported outside India, and now might be outside India when you export it, there is some repair which has to be done. You make in India goods ke liye, basically government is going ahead and telling you made some goods in India, exported outside India, and now it is coming back for repair. It should come back for repair. Re-importation is fresh importation, but government is telling we will give you concession. You don't have to go ahead and pay any duty. Re-import, do the repair and send it back within 6 months. Government went ahead and told you re-import. You sold one machine outside India for an example. You re-import within 3 years. In case of Nepal and Bhutan, within 10 years. You do the repair and send it back within how much time? 6 months plus 6 months. You don't have to pay any duty at the time of re-importation. I hope everyone is clear. But if you go ahead, made some machine, send outside India, made in India, send outside India, you are getting it for refining. Refining ka case mein only 1 year is allowed. Repair is always for defunctional item. Refining is always for refining the process. It was still working. You got it for refining. In that scenario, you will get only 1 year. But the whole condition over here is that, sir, if the machine has come back, re-imported, you should re-export after how much time? You should export it back within 6 months plus extension can be given 6 months. Sir, same goods which you had imported, you have to re-export it and ACTC will satisfy himself and execution of bond at the time of re-importation. Means when you are re-imported, you have to go ahead and give a bond. Sir, I swear I will go ahead and re-export within 6 months plus extended time limit. If I don't go ahead and re-export, then whatever is the duty, I will go ahead and pay. Then the next one over here is section number 22. Everyone, section number 22. Can you tell me, everyone, what did we go ahead and learn till now? We went ahead and learned about section number 12, which went ahead and told, sir, custom duty is levied on goods imported or exported from India. Now, section number 12 may, when goods are imported or exported, custom duty will come. But that is subject to section number 13, goods pilfered, duty pilfered. Section number 22, goods lost, destroyed, duty lost, destroyed. Goods abandoned, duty abandoned. Section number 24, goods mutilated or denatured, duty on such denatured or mutilated goods. Section number 20, re-importation is fresh importation, but some concession is given. Then we have section number 22, abatement, discount. Sir, goods came into India, damaged or destroyed, but you went ahead and told the government, damaged or destroyed goods pay. Damaged or destroyed goods, if I abandon, I don't have to pay the duty. But if I want to clear, they will give me a discount in the duty, and that is known as abatement of duty on damaged or deteriorated goods. If, sir, always remember one thing, damage ka case mein they have gone ahead and told damage can be claimed even if goods have damaged before, during unloading, at the port, or might be in the warehouse. Always the abatement shall be available. But, sir, in case of deterioration, at the port if it is happening or in the warehouse it is happening, it is your mistake, and hence in case of deterioration means fall in quality with the passage of time. Mangoes came into India, it is your mistake if you did not clear at the port or you did not clear from the warehouse, and hence they are telling deterioration means fall in the quality, and because of fall in the quality we will give you abatement only if it happened before or during unloading. Before or during unloading, abatement shall be available. After that, abatement will not be available. Always remember one thing, custom duty, how much will you have to pay? For an example, 1 crore ka goods it was before damage deterioration and 10 lakh was the duty. Now the value has become 50 lakh of the damage deteriorated goods. So you will always also have to pay duty half. Value of the goods fell half, duty also will fall half. So you always have to remember custom duty on damaged or deteriorated goods will be custom duty before damage deterioration divided by the value of the goods before damage deterioration multiplied by the value of the goods after the damage or deterioration, basically value of damaged or deteriorated goods. Sir, how will we go ahead and find out the value of damaged or deteriorated goods? It will be ascertained by the proper officer, or if you don't agree with the officer, they will go ahead and sell your goods and through auction or tender, and that value will be taken as the value of damaged or deteriorated goods. It is the option of the owner. Then comes section number 25. Section number 25 goes ahead and says government has the power to go ahead and grant exemption. Section number 25(1), central government in public interest can go ahead and issue a notification in the official gazette and exempt some goods from custom duty. Section number 25(2), special order. Then central government in public interest may go ahead and give special order in each case and exempt goods from custom duty. Section number 25(2)(a), that central government, if it wants 1 year from the issue of exemption, they can go ahead and insert an explanation. Explanation inserted will always have retrospective effect if it is inserted within 1 year. Section number 25(3) is not relevant. Section number 25(4), which is there, goes ahead and says that, sir, section number 25(1) or 25(2)(a), if any exemption ka notification is issued or any explanation ka notification is issued, they will always be valid from the date of issue and not the day it was made public in the official gazette. Notification under section number 25(1) or 25(2)(a) shall take effect on the date of issue by the central government for publication and not the day it was publicly made available in the official gazette. Sir, this rule is not applicable for special orders. Special orders ka case mein what happened? It is given to a special person and that special person ko it is communicated, hence there is no date etc. ka requirement. Section number 25(4)(a), very very important, conditional exemption. Always remember one thing, conditional exemption shall, unless otherwise specified, if one conditional exemption is issued by the government, if government have not specified any date, then conditional exemption shall always be, if government have gone ahead and specified a date, then it is valid up to that date. If government withdraws it, then baba, till the date of withdrawal it is valid. If nothing is told, then it will always be valid. The year it is issued, from that year you see 2 months, means supposingly 2 years, 2 years. For an example, it was issued on 1st of May 2021. 1st of May 2021, say you have to see 2 years first. 1st of May 2022 and 1st of May 2023, and then 1st of May 2023, 23, 24, basically 31st March 2024. I'll tell you once again, everyone listen. For an example, in the year 21-22, 1st of May 2021, one exemption, conditional exemption notification was issued and there is no date which is mentioned when it will be expiring. Then from here you will have to see 1 year, 2 years. So it is 1st of May 2022, 1st of May 2023. So in the year 23-24, in the year 23-24, it will expire on 31st March 2024. So that is what is being told over here. Conditional exemption shall, unless otherwise specified, varied, rescinded, be valid up to 31st March, falling immediately after 2 years from the date of grant or variation. I hope this point is clear. Can we go ahead, everyone? The next one is section number 21. Section number 21 goes ahead and says goods derelict, jetsam, flotsam, wreck, brought to India or coming into India shall always be dealt as if those are goods imported in India and leviable to custom duty, unless you prove to the proper officer that, sir, these goods which have come into India are non-leviable to duty or are exempted from duty, then you don't have to pay any duty. I hope you guys are clear till here. The next one over here is some case laws. Hanil Era Textile Limited ka case law. Hanil Era did what? They went ahead and imported DG set and furnace oil. From the DG set or furnace oil, they went ahead and generated electricity. Electricity was used to make goods and goods were being exported. There was an exemption notification which went ahead and told, if you import DG set and furnace oil, make electricity, make goods and export it, then the DG set and furnace oil pay, you don't have to pay the duty. Now, Hanil Era Textile did the same thing. They went ahead and DG set imported, furnace oil imported, they went ahead and generated electricity. Electricity was used in production of electricity was used in the production of goods and goods were being exported. But there was some surplus electricity which they went ahead and sold in the domestic tariff area, and the officer went ahead and told, selling of electricity in the domestic tariff area, why did you do it? You are supposed to use it in exported goods and export it. You are supposed to use it in making of goods and export it. Why did you use the electricity in why did you sold the electricity in the domestic tariff area? I want the duty on the furnace oil. And the DG said. Now Anil Era Textile went ahead to the court, and court went ahead and told, when the notification was issued, it was told that you have to generate electricity and use it for what? Goods, and goods should be exported. Anil Era Textile went ahead and did what was told in the notification. In the notification, there was no restriction saying that surplus electricity, if generated, can't be sold in the domestic tariff area. If they go ahead and sell that electricity in the domestic tariff area, they have not gone ahead and done any violation, and hence exemption will be given. You can't go ahead and claim, department can't go ahead and say we want the duty on the furnace oil, and the DG said. In absence of any restrictive clause in the notification, there is no violation of any condition of the notification, no duty for surplus power sold in the domestic tariff area, because they could not go ahead and store the power. They went ahead and sold in the domestic tariff area, and there is no violation of any condition which is done in the notification. Anil Era Textile did not have to go ahead and pay any duty on the DG set and furnace oil. I hope everyone is clear. The next one is Tullow India Operations Limited. What happened in Tullow India Operations Limited? The assessee was there. Importer's claim for exemption was denied. It was rejected because he did not go ahead and fulfill a compliance which was not within his power and control. Assessee went ahead and told the public functionary to give him a certificate, and public functionary did not give him a certificate, and because of that his exemption was being denied. So Tullow India went ahead and imported something. On that, exemption is there, but you have to get a certificate from the public functionary. Public functionary did not go ahead and give the certificate on time, and hence Tullow India ka exemption was being rejected. Now Tullow India went to the court, and court went ahead and told it was not the mistake of Tullow India over here. They have gone ahead and fulfilled all the condition, and the condition which is not in their power and control, because of that you can't go ahead and deny the exemption ka benefit. It was a mistake of the public functionary and not the taxpayer, or basically the importer over here. Then the next case came of BPL display. BPL display went ahead and imported some items. Now out of those items, some items were being damaged. There was an exemption notification in force saying, supposingly, for an example, screens, if you import and make TV out of the screen, and TVs is being exported outside India, on the import of screen you don't have to pay any duty. So they went ahead and imported, for an example, some screens, and out of those screens, 3 screens, 4 screens or 5 screens were broken. Now those broken screens could not be used for the final product and be exported, and hence the department went ahead and told, for the entire lot we will not go ahead and give you the exemption. For the screens which you can't use because they were broken, we will not go ahead and give you any exemption, and you have to pay the duty. Now here the court went ahead and decided that in case of BPL display, this case had come, and court went ahead and told the importer had gone ahead and imported, basically BPL display had gone ahead and imported the whole lot to go ahead and make the television and ultimately export. Means they had gone ahead and imported the item to use in the final product and export. If they could not use it because it was damaged, you can't go ahead and deny the benefit of exemption with respect to the lot which is damaged over there, and hence benefit of exemption available with respect to the entire lot including damaged. You can't go ahead and say for damage we will not give exemption because it was not used for the final product. The intention was to use for the final product, and the entire lot including damage ke liye you have to give the exemption ka benefit. Right everyone? The next case was Tirupati Udyog ka case law, wherein supply from domestic tariff area to the SEZ will not attract section number 12 and no export duty. Means if you go ahead and sell the goods from the domestic tariff area to the SEZ, it is not export. Export means taking from India outside India. SEZ is within India. So neither in section number 12 of the Custom Act nor the SEZ Act, nowhere it is told that selling goods from the domestic tariff area to the SEZ will go ahead and attract what? Export duty, and hence whenever you sell the goods from domestic tariff area to the SEZ, it will never be export, and export duty will not come. Always remember that, right everyone? Because neither the Custom Act nor the SEZ Act goes ahead and says that it is export and export duty should come. Right everyone? Now, one more thing which is there over here, you should always remember in case of customs, The common portal is the icegate.gov.in. Just for your knowledge, you should always remember icegate.gov.in is the common portal under custom. Right everyone, I have gone ahead and completed the quick revision of my A graded topic over here. Always remember what is the important point in this chapter. The important point over here to remember as A graded is section number 13, as A graded is section number 23, as A graded is section number 22, as A graded is section number 20, and Baba section number 25 also you can go ahead and remember as A graded. B graded are all the case laws. Case laws ka name if you don't remember, no problem, at least remember what is there in the case law. Secondly, B graded can be also section number 21 and section number 24. Right everyone, all other things I have gone ahead and told. Right everyone, we will go ahead and close all our discussion on the chapter of levy and exemption from custom duties over here. Congratulations people. Done? Alright students, let's go ahead and now revise the second chapter in our customs ka revisionary. It is importation, exportation, transit and transshipment. Again, let's go ahead and do it. First, we'll go ahead and understand the import procedure. When you are going ahead and getting the goods from outside India into India, what is the procedure of getting the goods? What is the procedure of clearance? Let's go ahead and understand. First of all, section number 25 comes into, section number 29 comes into picture, which goes ahead and says whenever a ship is coming into India, or might be a vehicle is coming into India, or a plane is coming into India, always remember the landing by the aeroplane, or might be the quelling by the vessel, or by the vehicle when it is coming, it should always happen at a custom port, custom airport, or land custom station. Whenever a ship is coming, it should come at a custom port. Aircraft is coming, a custom airport, or vehicle is coming, should come at a land custom station. But when you are coming, if by chance there is any, you are compelled by accident, or might be there is a stress of weather or any unavoidable circumstance, then the person in charge, who is the person in charge everyone? The person in charge in case of vessel is master, in case of aircraft it is the commander or pilot, in case of rail it is the conductor or guard, in case of any other conveyance it is the driver. So person in charge can come to any other place other than the custom port, airport or land custom station if there is a stress of weather or might be any other accident has happened. But whenever you come to any other place, then first of all you should go ahead and immediately report to nearest customs officer or officer in charge of a police station. Right everyone? And you shall not, without the consent of the officer, unload the goods or allow anyone to depart. Are we clear till here? Then, but if it is necessary for the reason of health, safety, preservation of life and property, then Baba, you should just tell the people, take your goods and run. Nothing shall prohibit the departure of crew, passengers and removal of goods if it is important for the safety of life and property. Right everyone? Now whenever you are coming into India, always remember section number 30. Section number 30 says the person in charge or his agent basically or any other person should go ahead and deliver arrival or import manifest in case of vessel or aircraft and import report in case of vehicle. Sir, always remember vessel or aircraft ka case mein arrival manifest or import manifest should be delivered prior to arrival and it should be given electronically. Vehicle ka case mein import report within 12 hours post arrival manual filing is also possible. Sir, delay in filing without cause, you will have a penalty less than equal to 50,000 and belated filing will be allowed only on valid grounds. Sir, if I want to go ahead and do any amendment in the import manifest or import report, then Baba, if the proper officer is satisfied that import manifest or import report is incomplete, incorrect or fraudulent intention is not there, then only the officer will go ahead and allow you to go ahead and do any amendment. Now, once the ship has reached, only in case of vessel, sir, the person in charge has to go to the proper officer and ask for an entry inward. Section number 31 talks about an entry inward, wherein entry inward is nothing other than a written permission to unload. A master of the ship shall not allow unloading unless it has been granted an entry inward. Entry inward shall not be given if you have not gone ahead and filed a import manifest or arrival manifest, and entry inward is not required for going ahead and unloading what? champ. What is champ, everyone? C for crew member or passenger baggage. Sir, H crew member, C for crew member, H for hazardous goods, A for animals, M for mail bag, and P for perishable item, perishable goods or passenger baggage. For champ, you don't need any entry inward, and entry inward is also not required for vehicle or aircraft, right everyone? Now always remember, in case of vehicle and aircraft, entry inward is not required, and entry inward is also not required in case of champ. Now, once you have got the entry inward, you will go ahead and start the unloading. Then 3 sections come over here. Unloading should always happen. Section number 32, 33 and 34 says, unloading when it is done, unloading should happen only of those goods which are specified in the import manifest or import report. Unloading should happen only at approved places and under the supervision of the proper officer. GPS. Approved goods, basically those goods which are mentioned in the import manifest. Approved place, which is landing place, and under the supervision unloading should happen. Sometimes what happens when the mother vessel has come over here, but sir, unloading could not be done. When the mother vessel has come and unloading could not be done, because the mother vessel is big, it could not come to the port. Then mother vessel can stand outside and small boats can be used. Basically, mother vessel could not come to the port, or mother vessel does not want to come to the port. In that scenario, section number 35 says, no goods shall be waterborne unless they are accompanied by a boat note. Sir, you should go ahead and accompany your boat with a boat note. Unload from here goods and you can get it to the port. Small boats are also known as barge or lighters. Everyone over here, whenever you are coming, you have to come to a custom port or airport. That is told by section number 29. But if compelled by stress of weather, etc., you can go to any other place, but you have to immediately report to the custom officer or police in charge. Right, everyone? Whenever you are coming, section number 30 goes ahead and says you have to deliver arrival manifest or import manifest or import report, right everyone? Along with that, also there is section number 30A. Along with section number 30, also one section number 30A comes, which goes ahead and says you should also go ahead and deliver passenger and crew arrival manifest and passenger name record information. Passenger and crew arrival manifest, basically the details of the passengers have to be given in a PNR. Basically, passengers who have come with you and their passenger ka name record information, PNR information has to be given. Sir, person in charge has to deliver to the proper officer before arrival, and in case of vessel or aircraft, in case of vehicle, it has to be given upon arrival. Delay in filing if of passenger and crew arrival manifest without sufficient cause can lead to a penalty up to 50,000. And always remember, PNR records which are there are basically prepared by the operator of the aircraft, vessel or vehicle or their agent, right everyone? So whenever you are coming, you have to come to a custom port or airport. Before coming, please file import manifest or import arrival manifest, or after coming, in case of vehicle, you can file import report. And also passenger and crew arrival manifest, passenger name record information has to be filed. Now once your ship reaches over here, the person in charge will go and take entry inward from the proper officer. Entry inward is only applicable in case of vessel. Now unloading will start. Unloading ka case mein section number 32, 33, 34 says unloading should happen only unload the goods which are specified in the import manifest or import report. Unloading at approved places, and unloading should happen at the supervision, under the supervision of the proper officer. And section number 35 comes that, sir, when mother vessel can't come to the port, might be the port is shallow or they don't want to come. In that scenario, what will happen? Small boats can be used, but this boat should be accompanied by boat note. That is told by section number 35. Now, sir, section number 36 comes, which says that you can't go ahead and do any unloading on holidays or after working hours, but if you want, there is an exception. You have to give a notice and a prior merchant overtime fees, basically prior notice and merchant overtime fees has to be paid. Only then goods can be unloaded on a holiday. Always remember, there is no fees for unloading of baggage and mail bags. And also in GST you will be learning merchant overtime fees pay. There is no GST also. GST is exempted. Now after the unloading is done, the vessel which is there will be leaving, but before leaving, section number 42 says they should go ahead and take one written order, which is a departure order, which will be given by the proper officer saying get lost, right everyone? That is given under section number 42. No conveyance to leave without a written order from the proper officer. Now your goods have reached to the port. When your goods reach with the port, reach to the port, they will remain with the custodian. Section number 45 says goods after unloading till clearance will remain with the custodian. He shall go ahead and keep records, and he will not allow anyone to take your goods and go. Also remember one thing, if by chance any goods are pilfered, custodian under section number 45 subsection 3, basically the private custodian who is there, he will be liable to pay the duty on the pilfered goods, because section number 13 says you are not liable to pay any duty on the pilfered goods. Right everyone? Always remember, custodian who are private custodian appointed under section number 45 by the commissioner are liable to pay the duty on pilfered goods. However, if he is a custodian who is appointed under Major Port Trust Act, then that custodians are not liable to pay the duty on the pilfered goods. However, that custodian, being the bailee of the goods, will be liable to pay the value of the goods to the importer if there is any loss that has happened in the custody of the custodian. Remember one thing for your exam, private custodian under section number 45 not liable to pay duty on goods pilfered, but custodian under Major Port Trust Act not liable to pay duty on the pilfered goods. Right everyone? Now your goods are with the custodian, you want to release the goods, you are the importer, you will have to go ahead and file a bill of entry. You will have to file a bill of entry electronically on the icegate.gov.in. Sir, white bill of entry if you want to clear for home consumption. You want to put it in the warehouse, then yellow. From warehouse you want to clear, then it is green ex-bond bill of entry. Bill of entry, always remember, if your goods have come into India today, by yesterday your bill of entry should have been if your goods have come to India today, by yesterday your bill of entry should have been filed. Right everyone? Now if I go ahead and tell you, so for an example, your goods have come into India on 16, your goods are going to come into India on 16th of August. 15th August is a holiday. Always remember, by 15th of August, even though it's a holiday, your bill of entry should be filed. So bill of entry should be filed before the end of the day, including holiday, preceding the day on which the goods conveyance arrives at the clearance port. So if conveyance is going to arrive on 16th of August, 15th August is the holiday, still your goods should have reached to the port by 15th of. Still you should have gone ahead and filed the bill of entry by 15th of August. Next, however, the board, the CBIC may prescribe different time limit for presentation which shall not be later than the end of the day of such arrival. If CBIC want, they can go ahead and extend the time. They can go ahead and prescribe different time, but that can be maximum till the date of arrival, means the end of the day of arrival of the vessel basically. Sir, prior bill of entry is also allowed 30 days prior to the expected date of arrival, and warehousing without warehousing concept is also allowed. Sir, what do you mean by warehousing without warehousing? If your goods have come to the port and you are not able to clear the goods because you don't have any document with you, might be the document which is bill of lading, you want to clear the goods, you need bill of lading, but you don't have the bill of lading. For want of document, you are not able to clear the goods, then you can request the officer and shift the goods from the port to the warehouse without warehousing provisions being applicable on you. And this is the concept of warehousing without warehousing. Without warehousing provision being applicable on you, your goods will be put in the warehouse, that is known as warehousing without warehousing provision being applicable on you. So what is warehousing without warehousing? If your goods have come to the port and you are not able to clear it because you don't have the requisite document, then for the time being you can keep it in the warehouse. Keep the goods in the warehouse by requesting to the commissioner, and that is the concept of warehousing without warehousing provision being applicable on you. Now my goods have come, I want to go ahead and clear the goods. I filed bill of entry, self-assessment I did the payment of the duty on the date of presentation of bill of entry. The day you are filing the bill of entry, the same day you have to go ahead and make the payment of the duty. If you don't go ahead and make the payment of the duty on the date of filing of bill of entry, then interest at the rate 15% per annum shall be payable. Also remember one thing, deferred payment of duty is also allowed. What do you mean by deferred payment of duty? Clear the goods now, pay later. Basically postpaid facility is also allowed. What is postpaid facility, everyone? Clear now, pay later. Clear first, pay later facility, wherein what happens, everyone? Who are the people who are eligible? Authorized economic operator tier 2 and tier 3 are allowed, and authorized public undertakings are allowed to go ahead and pay later. Right everyone? Now what is the due date for payment? For the bill of entries which were returned, means you filed the bill of entry, it was checked and returned to you between 1st to 15th, 16 will be the due date. Sir, for bill of entry returned between 16th to the last day of the month, 1st of the next month will be the due date. Sir, for bill of entry which is 16 to 31st of the March, bill of entry returned between 16th to 31st of the March, then it will be 31st of the March which is the due date. Always remember, non-payment of the due date, you will be paying interest at the rate of 15%, and if you go ahead and default in any due date, then sir, once in 3 months, more than once in 3 months, if you have defaulted in paying on due date, then interest is okay. But then they are going ahead and telling more than once, then we'll go ahead and withdraw the deferred payment ka facility. Besides that, one e-payment option is also there to make the payment online, and e-payment facility has to be used by whom? Accredited client program, people under accredited client program, and also when you have to make the payment where duty is more than equal to 10,000, more than equal to 10,000. Now you went in and filed your bill of entry, you did the self-assessment, made the payment of the duty, and where payment of duty is not required to be paid, now you went ahead and now you will go ahead and take the documents and visit the custom. You will make a file with the bill of entry, bill of lading, invoice, certificate of origin, packing list, etc. is also there, payment challan, and you will visit the custom officer. Custom officer will go ahead and check. After inspection of goods and verification of document, if you find that the self-assessment was correct, you have gone ahead and applied the rate of duty correctly, all the duties are paid and your goods are not prohibited, he will issue you a clearance order. Take the clearance order to the custodian. He will allow you to take the goods home. Sir, if his officer goes ahead and does the checking and he finds that there is some mistake, then he will go ahead and do the reassessment. When he does the reassessment, he will go ahead and tell you to pay the differential duty within 1 day from the day he returns you the bill of entry. Now, once you go ahead and make the payment, he will check whether goods are not prohibited and all the duties and other dues are cleared. Then he will issue you a clearance order. Go to the custodian, take your goods and go home. Sir, goods have come in the port. I am not going ahead and clearing them. Either you are not clearing for home consumption. Section number 48 goes ahead and says, if goods have come to the port, you are not going ahead and clearing for home consumption, or you are not going ahead and putting it in the warehouse, or you are not going ahead and doing a transshipment within how many days? 30 days of unloading. Custodian has the power that custodian can go ahead and sell after giving a notice to whom? To the importer, and also with the proper officer ka permission. This 30 days ka time limit is not applicable in case of animal, perishable, hazardous goods. They may be, with the prior permission of the proper officer, be sold anytime. Arms and ammunition which are there, you can't go ahead and sell just like that. Arms and ammunition may be sold at such time, such place and in such manner as the central government may direct. Right, everyone? We went ahead and understood section number 29. When you are coming, please come at the custom port or airport. When you are coming, section number 30, please file import manifest or import report. Section number 30A, passenger and crew arrival manifest or passenger name record information. Then entry inward is granted. Then approved goods. Only those goods which are mentioned in the import manifest, import report has to be unloaded. Approved placement unloading should happen. Unloading at the supervision of the proper officer will happen. If the big vessel can't come, you can use small boat. That is told by section number 35. Section number 36 went ahead and told, sir, no unloading on holidays except with the prior permission and on payment of merchant overtime fees. Now the goods are unloaded, the ship will tell a bye-bye, a departure order shall be given and it will go. Now your goods are there with the custodian. Custodian will go ahead and keep in his custody. Any pilferage he will be liable to pay. You will file bill of entry, you will make the self-assessment, make the duty ka payment, go to the custom officer will check, everything is fine, he'll allow you to take the goods and go. Not fine, differential payment to be done, then he will allow you to take the goods and go. If you don't take the goods and go within 30 days of unloading, custodian will sell your goods and recover the money. Basically, his charges, etc. he will go ahead and recover. But for that, he will give you a notice and he will go ahead and take the proper officer ka permission. Here we are done with your import procedure. Import procedure is done. Come to the next one, everyone. Import procedure is done. Now, the next one over here is export procedure. What happens in export procedure? You want to go ahead and export your goods. First, you have to go ahead and section number 50 says you have to file a shipping bill in case of sea or air and bill of export in case of land electronically on the IceGate website. You will have to go ahead and do self-assessment, pay the export duty. Now you will have to visit the customs. Custom officer will go ahead and you have to visit the custom with the shipping bill, bill of export and the payment challan, invoice, etc. Custom officer will go ahead and do the inspection of the goods. He will verify the document. If goods are not prohibited, all the duties are being paid along with all the charges. He will go ahead and proper officer is satisfied. He will go ahead and he will pass an order permitting clearance and loading, which is known as a late export order under section number 51. Sir, if he is not satisfied, he will do reassessment, tell you to pay the differential and then give you the late export order. Now you have the late export order with you. You sit and wait for a vessel now. Vessel, vehicle or aircraft. You have to send the goods by vessel, vehicle or aircraft. Now what will happen? The master of the ship, he has to take the goods from India and go outside India. So first, he has to take a permission from the proper officer only in case of vessel. It has to be taken, a permission has to be taken, which is known as an entry outward. Section number 39 says, grant of entry outward to vessel, master not to permit loading of goods without entry outward. Entry outward is not required for baggage and mail bags. Entry outward is only applicable to vessel. Now here there is a ship, here there is an aircraft, or here there is a motor vehicle. What will happen? Loading will start. Always remember, loading on the conveyance for exportation. Conveyance can be vessel, conveyance can be aircraft, conveyance can be a vehicle also. Section number 40 says, whoever is the person in charge, he will not allow loading unless it is accompanied by a shipping bill in case of sea or air. In case of export by land, it is bill of export, and also in case of transshipment, bill of transshipment also has to be there. Along with that, it has to be duly passed by the proper officer, means proper officer should have given let export order, right everyone? In case of baggage and mail, if permitted by the proper officer, that is also enough. Now goods have to be loaded over here everyone, goods have to be loaded. Always remember one thing, loading will happen at approved places. Loading will happen under the supervision of the proper officer, and supposingly the mother vessel is standing very far, then small boats can be used. That is told accompanied by a boat note, that is told by section number 35. And then section number 36, no loading on holidays or after working hours unless you go ahead and give a notice and you go ahead and give what? Merchant overtime fees. No fees for loading of baggage and mail bags. Now loading has happened. Now once the loading is done, the person in charge will go ahead and file. Section number 41 it is told, person in charge or any other person, might be his agent, will go ahead and before departure they will have to go ahead and file that, sir, I am taking these goods and going. You will have to go ahead and file one departure or export manifest. In case of vessel or aircraft, electronically, export report, which is to be filed manually in case of vehicle. Now if you go ahead and file this, after this you also have to go ahead and tell this was because you are taking the goods and going. For people who are coming along with you, for that you have to go ahead and file passenger and crew departure manifest and passenger name record information. Delay in filing of either the departure manifest or export manifest or passenger and crew departure manifest will lead without cause, if you have not gone ahead and filed, means delay in filing will lead to a penalty up to 50,000, right everyone? Now once you go ahead and tell him what are the goods you are taking and going, who are the people coming along with you, he will go ahead and tell you bye bye. Basically section number 42 will come into picture, which goes ahead and says no conveyance to leave without a written order, means once the officer gives you a written order, departure order, only then you can depart. So issue of departure order will happen. Person in charge to permit conveyance to depart only after proper officer issues a written order, which is a departure order, right everyone? Now okay, one small point is over here that clearance order may also be issued by custom automated system. This let export order, no, if you are a good person who is always not going ahead and doing ever cheating, then you are given let export order automatically nowadays. Means the proper officer does not check also, automatic clearance order also given, that is being told over here. Then you have section number 51A. Section number 51A basically goes ahead and talks about custom में e-cash ledger. So whenever you have to go ahead and make, Baba, not GST wala e-cash ledger, in custom also they are telling we will go ahead and maintain e-cash ledger. So payment of duty, interest, penalty, etc. if you have to go ahead and do, every deposit towards duty, interest, penalty, fees or any other sum payable under the Custom Act or Custom Tariff Act or any other law shall be credited to the e-cash ledger. First you have to deposit in the e-cash ledger. Now amount available in the e-cash ledger can be used by you for making payment of what? For making payments towards duty, interest, fees, penalty or any other amount under the Custom Act, Custom Tariff Act or any other law in prescribed manner and condition and prescribed time limit, but nothing has been prescribed now. Balance in the e-cash ledger after payment of all the duty, interest, penalty, fees or any other amount can also be taken as a refund. Now there comes section number 51B, which goes ahead and talks about ledger for duty credit. Remission of any duty means e-credit ledger in the customs is known as what? Ledger for duty credit, which is e-credit ledger for custom. Basically remission of any duty if you have to receive duty, tax leviable on material or used in the manufacture of goods that are exported. So if you have gone ahead and exported some material, on that you had paid some duty, that duty ka refund will be given to you. They will be put in the e-credit ledger. Or any other financial benefit, if it has to be given to you, they will be put in the e-credit ledger, which is maintained under the custom automated system. Duty credit may be used by the person to whom it is issued or the person to whom it is transferred. It means you can go ahead and transfer it to someone, and he can also use it to pay the duties under this act or the custom tariff act. Always remember, duty credit ledger mein whatever duty is there, duty can be used for payment of duty only. You can transfer it to someone also, and he can also go ahead and use it. Under GST, transfer of credit is not there, but in customs you can go ahead and transfer the credit, and it can be used by the person to whom the credit is transferred for the payment of duty only. Then comes the next chart. The next chart is on transit and transshipment. What do you mean by transit? Transit means basically goods have come from outside India in a ship. For an example, Carnival is coming from outside India in a ship. Carnival has got, for an example, 4 containers along, 2 containers unloaded at the Mumbai port. Remaining 2 containers remain in the ship, and it is being unloaded in Kerala port, or might be it is going outside India and it will be unloaded at an Australian port. What does transit say? Transit says that when one custom officer who was there at the Mumbai port saw that there was 2 containers in the same vehicle, same vessel which is going forward, on those 2 containers, duty will not be liable to be paid at the Mumbai port. Basically, for the Mumbai port, it will be goods in transit. Now, when in the same scenario, if the goods are coming in a vessel, vehicle, or motor, whatever it is, then if out of that all the containers are unloaded, but 2 containers will be loaded in a separate ship and taken to some other vessel, some other port, in that scenario also, duty on those 2 containers will be payable at the destination port. Those containers will be known for the Mumbai port as what? Goods in transshipment. Everyone over here, what do we mean difference? What is the main difference between transit and transshipment? Transit means the vessel is not changing or the vehicle is not changing, but in transshipment, the vessel or the vehicle is changing. Transit and transshipment. First of all, section number 52 says the provision of this chapter shall not apply to baggage, post or stores. BPS. Always remember BPS code. These provisions are not applicable. Section number 53 and 54 ka provisions are not applicable in case of baggage, post and stores. Why? Because for them special provisions are already there. Now section number 53 goes ahead and talks about goods in transit. Further transportation of the goods in the same conveyance from outside India, Carnival mein goods are coming and they are being transported further in the same conveyance is known as transit. Where any goods in the conveyance plus mentioned in the arrival manifest, import manifest or import report as transit cargo, then the person as transit cargo within or outside India, the proper officer may allow the goods and the conveyance to transit without payment of duty. The proper officer, these 2 cargo which is there in the same ship, will not go ahead and charge any duty, and he will tell, okay, you go further, whatever is the destination port, there you will have to go ahead and pay the duty. Same document can continue. You don't have to go ahead for the separate port. You don't have to file one more import manifest. Same import manifest will continue. No new document required, and import duty is always payable on goods in transit which remain in the ship and going further. On those goods in transit, duty will be payable at the destination port. If the destination is outside India, the outside India port will be deciding whether to charge duty or exempt duty. It is their call, not our call. But if it is going in India, then within India, duty will be payable at the destination port. The next one over here is goods in transshipment. Further transportation of goods in any other conveyance. The goods came in supposingly Carnival. All the goods are unloaded over here and 2 goods will be loaded in Vikrant and it will be taken further. Then this is known as goods in transshipment. These 2 goods for the Mumbai port, these 2 containers will be known as goods in transshipment, which duty will not be charged at the Mumbai port by the Mumbai ka custom officer. It says over here that, sir, further transportation of goods in any other conveyance is known as transshipment. When goods imported in a conveyance and mentioned in the arrival manifest, import manifest or import report as transshipment within or outside India, the proper officer, this proper officer will allow or may allow the goods to be transshipped without payment of duty. Bill of transshipment means when you are loading the goods in the ship, then you will have to go ahead and present what? Bill of transshipment to the proper officer. He should have passed it. You have to show it to the vessel ka person in charge. Only then he will permit the loading. Bill of transshipment shall be presented to the proper officer for transshipment of goods, and import duties payable at the destination port or destination station. If the destination port is in India, then in India you will pay the duty. If the destination port is outside India, the government will charge the duty or not charge the duty. It is their call. Can we go ahead, everyone? The next one over here is declaration of transshipment. Whenever Indian government and some other country ka government have a bilateral agreement between the Indian government and some foreign country, then instead of bill of transshipment, one declaration of transshipment can also be presented to the proper officer. Bill of transshipment is not required, right, everyone? Declaration of transshipment, when goods are being transferred under a international treaty or a bilateral agreement between government of India and foreign country, a declaration instead of bill of transshipment shall be presented to the proper officer, right, everyone? It's a B graded chapter, but import procedures are A graded, wherein you can be asked, I am telling you again and again, deferred payment of duty can be asked, bill of entry ka filing, warehousing without warehousing is something important. Remember section number 48 also, and also remember import procedure, how the flow happens. That's first section number 29, 30, 30A, 31, 32, 33, 34, 35 and then 36. This flow has to be remembered. They can ask you a short question on import procedure. Then in this, okay, this is a B graded chapter. Import procedures are A graded in this chapter. Then export procedures are C graded. But this section number 51A and 51B is something which you should remember. And then transit and transshipment, they can go ahead and ask you a short note on transit and transshipment. Might be a C graded point, but still you can go ahead and remember. And also remember that transit and transshipment provisions are not applicable on BPS, baggage, post and stores. Congratulations, people. We are done with your chapter of import procedure, export procedure, transit and transshipment. Done. Now, a small change in your export procedure, section number 51A. Baba, section number 51A, payment of duty, interest, penalty, late fee or any other amount, you have to go ahead and use your e-cash ledger which is maintained under the custom automated system. Now here, e-cash ledger is not applicable in some cases, and those cases are over here. Number one. So you have to remember, whenever you have to make the payment of duty, interest, penalty, late fee or any other amount, you have to go ahead and make it through the e-cash ledger. But with respect to this, you don't have to use your e-cash ledger. With respect to goods imported or exported in custom station where custom automated system is not in place, okay. With respect to goods imported or exported at international courier terminal, terminal, okay, at international courier terminal, it is not applicable. Then e-cash ledger maintained under the custom automated system, you don't have to use it for making payment. Manual payment can be done. With respect to accompanied baggage, you are coming from outside India, some goods were there on which you have to pay the duty, e-cash ledger you will have. No, you don't have e-cash ledger, you can make manual payment here. Other than those used for making electronic payment. So sir, wherever electronic payment is told, for an example, bill of entry where the amount is more than 10,000, electronic payment is told, e-payment is mandatory. But supposingly you have to make a payment of duties of customs, cess, etc., which is basically only 2,000 rupees, 3,000 rupees, then also manually you can generate a challan and make the payment. In that scenario, you e-cash ledger using and making the payment is not required. Means depositing the money in e-cash ledger and making the payment is not required. This was a small amendment in the chapter of export procedure. Done. Import and export procedure. Chalo, let's go ahead and now revise the next chapter. The next chapter is classification of goods. What do you mean by classification, everyone? Classification means going ahead and finding your correct HSN code of the imported or exported goods in the custom tariff act. Baba, when you go to the custom tariff act, you have the first schedule which gives you import duty ka rate, the second schedule which goes ahead and gives you the export duty ka rate. Always remember, first schedule goes ahead and contains, Baba, when you see the schedule, you will be able to see how many columns are there. 5 columns are there. The first column is the tariff item, the second is the description of the goods, the third is the unit, the fourth is standard rate, and the fifth is the preferential rate of duty. Basically, rate of duty when you are getting the goods from preferential area. Always remember, Classification means finding out the correct HSN code, and HSN code is 8-digit ka code which has been given to every traded item by the World Custom Organization. Sir, when we go ahead and do the classification, Baba, classification means going ahead and finding your correct HSN code, and HSN code you have to go ahead and find in 98 chapters which are given. The 98 chapters which are being divided into 21 section. So I am talking about schedule 1. Schedule 1 we have how many sections everyone? 21 section. Now when we read the HSN code is 8 digit. The first two codes are your chapter number, the second two are your heading, the third two are your subheading, and the last two digits are your tariff item. When we go ahead and do the classification, we have to read the general rules of interpretation and do the classification, and we also should take care of what everyone? Explanatory notes. Remember one thing, general rules of interpretation, we have how many rules everyone? 6 rules are there. Rule number 1 which goes ahead and says the title of the section, section ka name, chapter ka name or sub-chapter are just for your ease of reference. They do not have any legal force. When you are going ahead and doing the classification for legal purpose, classification should always be done according to what? Terms of the heading, name of the heading has to be read, section or chapter ka notes have to be read, and accordingly you should go ahead and do the classification. When you are doing the classification, read the section ka notes, chapter ka notes, heading ka name, and then to go ahead and do the classification. If unable to classify using this rule, then you have to apply rule number 2 to rule number 6. Sir, what do you mean by section notes and chapter notes? Section notes and chapter notes are given at the beginning of a section or chapter. Baba, they are a part of the statute and they have legal authority in determining the classification of the goods. When you are doing the classification of the goods, if you do the classification as per the section note, chapter notes, they have legal force. The next one is rule number 2, classification of incomplete, unfinished, unassembled, disassembled goods. Basically, incomplete knockdown or semi knockdown form. Then, Baba, always remember, an heading includes an item complete, incomplete, unfinished, unassembled, or disassembled also. So, you have to go ahead and classify an incomplete, unfinished, unassembled, disassembled item and the heading of the complete article. Classify under the heading of the complete article. Heading always includes article incomplete, unfinished, unassembled, or disassembled unless the incomplete, unfinished, unassembled, disassembled item has the characteristic of the complete article. Car without seat will be car only. Dismantled cycle will be cycles only. The next one over here is, sir, rule number 2B, mixture or combination of material or substances. Always remember, article includes an item mixed or in pure form. For example, gold jewelry, which is not being mixed with any other item, is still gold jewelry. Gold jewelry mixed with some other item is also gold jewelry only. Sir, coffee with chicory is still coffee. Milk with vitamins is still milk. Cornflakes with nuts is still cornflakes only. Are we clear, everyone? Cornflakes includes cornflakes which are not mixed with anything, or cornflakes mixed with nuts is also classifiable under cornflakes only. That is what they are telling. Classify under the main article. Heading always include mixture or combination of that material with other material or substances. Coffee with chicory is coffee. Natural rubber covers mixed with synthetic rubber also. Milk with vitamins is still milk. Cornflakes with nuts is still cornflakes. Always remember, rule number 3 over here is very important. If one product is classifiable under 2 or more headings, and Baba, if by applying 2B or for any other reason goods are classifiable under 2 or more heading, always remember, you will always go ahead and prefer specific heading over general heading. Always specific should be preferred over general. Leather bags should always be classified as bag. Electronic shaver should be classified as saver and not electronic item. TV should be classified as television and not electronic item. Remember, note, mixture or composite goods or item in a set, MCI. Mixture or composite goods or item in a set, each heading will be treated as equally specific. Now, if all the headings are specific, you will always go ahead and apply what, everyone? Essential character test in case of mixture, composite goods or item in a set. Mixture, composite goods classify as if they consist of what? Material or component giving it the essential character. Laptop loaded with software is still classified as laptop. Sir, you bought a book, along with the book one CD came, but was still classified as book because book gives the essential character. Sir, I bought a software, along with the software one manual came. Classify as software because software gives the essential characteristics. The next one is, sir, if an item is classifiable under two or more heading, and Baba, specific over general rule is not applicable. Essential character test also you are not able to apply. Then apply what everyone? Later the better rule, which goes ahead and says if A or B is not applicable, two or more heading and all are specific, then please go ahead and classify in the numerical order, and whatever heading comes in the numerical order in the last heading, the later heading, you have to go ahead and classify that article. For example, Mahindra Imperio, which is there, if supposingly, I'll tell you only for not the exact one, but supposingly it is classifiable under 8705 and 8707 both, then sir, where will you classify? You will classify in the later wala heading, classify under last heading in the numerical order. The next one over here is rule number 4. Rule number 4 says whenever an item you are not able to classify under any heading, basically there is no heading which is there, the heading only is not available, means rule number 2, rule number 3, rule number 4, you are not able to apply only, heading is only not there, then Baba, please classify that item in the similar heading. Classify under the similar heading. It says generally applied when heading is unavailable, classify under similar goods ka heading. Similar goods ka heading which is there, you can go ahead and classify. For example, plastic film for car being classified under builder wares of plastic shutter. The next one over here is rule number 5. Packing cases, container or material. Always remember one thing, if camera, necklace, gun box, etc. drawing instrument ka cases are there, cases which are specifically shaped or fitted to contain specific article or set of article, they are suitable for long term use or presented with the main article, please classify with the specific article. Are we clear everyone? So camera with camera ka box is to be classified with camera, gun with gun ka box is to be classified with gun only. Are we all clear? Camera with camera box or camera ka case is to be classified along with camera, gun with gun ka box to be classified with gun only. But sir, always remember this rule is not applicable, means classify separately when durable container or are capable of repetitive use. So if you have any containers which are there which are capable of repetitive use, then it is to be classified separately. The next one is containers which give itself the whole essential characteristic. For an example, gold jewelry came in gold jewelry ka case, normal case, then it is to be classified along with jewelry. But gold jewelry came with container, the case which was there was diamond ka case. Array, the container or the case itself has its own characteristic to be classified separately. Gun with gold gun ka box, that gold ka box will be classified separately, gun will be classified separately. Are we clear everyone? And if any article comes in a container which is to be repetitively used, then please classify the container separately. The next one over here is packing material or container of a normally kind which is normally used. For an example, you got from outside India mangoes. Mangoes came in a carton box. Remember one thing, it is presented with the goods. Please classify with the goods only. The next one over here is rule number 6, which says classification of subheading. Baba, how we went ahead and classified heading? The same way you should classify subheading also. They are telling apply terms of the subheading, read the name of the subheading, and then apply subheading ka notes which are there, and then apply rule number 1 to 5 mutates. Heading ke liye we learned rule number 1. Rule number 1 we learned wherein we have to do the classification as per the chapter notes, section ka notes, and Baba by reading the terms of the heading. Rule number 2, incomplete unfinished article, mixtures ke liye we read. Rule number 3 we read, which is specific over general, essential character test, and the last one is later the better. Rule number 3. And then rule number 4, Akin rule. Rule number 5, packing material, containers, etc. Rule number 6 says subheading ke liye also apply rule number, basically the previous rules which are there, rule number 1 to 5. Read the terms of the heading, then classify, plus subheading ka notes if there are anything, and then apply rule number 1 to 5 at mutates mutandis. Now over here, after the general rules of interpretation, to classify, you also need what everyone? Explanatory note. There are 3 explanatory note. Always remember, whenever you are going in and classifying, explanatory note. Number 1, when they say dash is the sub classification. So people, when you go ahead and see the custom tariff act, if I go ahead and show it to you, in the custom tariff act, you will be able to see over here one dash. Correct everyone? What is this dash? This dash is the sub classification of the immediately preceding heading is described as dash. What is dash dash? Dash dash is the sub classification of the heading which is described by what? Only one dash. Baba, double dash ka further classification is dash dash dash. And Baba, again, if you have further classification, that will be dash 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 dash. Always remember one thing. What are they telling over here? Dash is the sub-classification of the article covered by heading. Dash dash is the article sub-classification of the immediately preceding article with dash. Dash 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 or dash 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 is the article, is the subclassification of what? Of the immediately preceding article with dash or dash dash. The next one over here is when they say percentage. What do you mean by percentage over here? Percentage of what? Percentage of the value of the goods under section number 14. Baba, duty shall be levied at such percentage on the value of the goods under section number 14. Sir, if one custom tariff act may supposingly preferential rate is not there, it means on my article duty will not come. No, Baba, you have to apply duty at standard rate applicable if preferential rate is unavailable. The next one is market or trade parallel theory. For an example, soft serve, which is given in McDonald's, is what everyone? It is ice cream. Sir, Dabur Dant Manjan Lal. What is it, everyone? It is toothpaste and it is not Ayurvedic medicine. And hence, gourmet, Baba, in case of soft serve is what? Ice cream, and it is not other dairy product. McDonald's went ahead and told it is other dairy product. Court told it is not other dairy product. As per the common understanding of customer and trade, it is ice cream to be classified as ice cream. So, Baba, whenever court has any problem, if product is not defined in schedule and section and chapter notes in the custom tariff act, it should be classified according to its common understanding by trade or dealers or consumer. For an example, soft serve in McDonald's is ice cream and not other dairy product. Dabur Dant Manjan Lal is toothpaste and it is not a Ayurvedic medicine. Are we clear, everyone? The next one over here is project import. Project import, custom tariff act, heading number 9801. It is concessional rate which is charged on project import. Project import means import can be for a new project or substantial expansion of a project which is greater than equal to 25% of the existing project. Project can be industrial project, irrigation project, power project, mining project, oil exploration project, which is, or any project which is notified by the central government. Currently, the notified projects are metro project, monorail project, airport development projects, etc. Sir, what are the eligible imports I can get under project import? All the machineries, instrument, apparatus and equipment, ancillary auxiliary equipment, component and raw material required for the initial setup or expansion. Spares also can be bought. Other raw material and consumable for the maintenance of project and plant and project का maintenance के लिए if you are getting some raw material and consumable, that will be only 10% of the value of the goods. Treatment, all the imports to be classified under 9801. One rate of basic custom duty will be applicable. Social welfare surcharge which is 10% and IGST at the rate of 18%. Now on the right hand side you have over here one small question which they go ahead and ask in the exam sometime. Standard unit of quantity. What do you mean by standard unit of quantity? It's a unit of measure. It is a unit of measure. It is prescribed in column number 3 of the 1, 2, 3 of the custom tariff act. You will be able to see in the third column. It facilitates the collection, comparison, analysis of trade statistics. Very important line. If by chance they ask you have to remember, it facilitates the collection, comparison, and analysis of trade statistics. Unit is indicated by abbreviation like G for grams, not G for genius, G for grams, U for numbers, etc. Are we clear, everyone? Here I am done with a quick revision of your small and sweet chapter of classification of goods. Sir, what kind of a chapter it is? You can call it B graded or C graded kind of a chapter. One small 2 to 3 mark question they can go ahead and ask in the exam. Sir, what kind of a question they can ask? Rule number 2, there can be a small question. The standard unit you can go ahead and expect might be a small 2 mark question. Rule number 3, very, very important. C graded chapter ka A graded question can come out of rule number 3. Then packing material wala chapter point which is there is also very important. Remember, packing materials which are capable of repetitive use always to be classified separately. Done, everyone? The next one, market parallels or trade parallels theory, they can go ahead and ask you a small question. And project import, you can have a small question. So please be very careful. One is rule number 2, rule number 3. Then we have rule number 5, which is there. Standard unit, I told you, market parallels, and I told you project imports. Other than that, also no, these explanatory notes which are there, because 3 mark 3 explanatory note wherever they can give. Correct, everyone? So please be very careful about it. I'll go ahead and close my revision on the chapter of classification of goods. All right, students, let's go ahead and now revise the next chapter. The next chapter is valuation. Sir, valuation under customs. Everyone listen to me very carefully. Once you have gone ahead and imported some goods, you have to pay custom duty, right, everyone? Custom duty is to be paid on value multiplied by rate of exchange into rate of duty. So in this chapter, we'll be going ahead and learning how to go ahead and calculate the value on which you will multiply the rate of exchange and then the rate of duty, and you'll find out your custom duty. From exam point of view, A plus graded chapter, 6 marks to 100% are going to come. Everyone over here, when you go ahead and understand valuation chapter, in valuation, you have to go ahead and understand certain terms which are being used in international trade. Now, when I go ahead and talk about those certain terms which are used in international trade, now there are certain types of contracts which are there. There are certain types of contracts which are there. Now, if I go ahead and tell one person that I want a machine, he can go ahead and tell me the X factory price. What do you mean by the X factory price? X factory price means the production cost plus the profit, which will give me the X factory price. He'll tell me, sir, I will leave the machine at my factory gate. You can pick the machine and you can go. So that's the X factory price which is there. Now, sir, if I go ahead and tell one person that I want the machine at least till the port you make the machine reach, then he will go ahead and give me as free alongside ship the price, which is free. What is free alongside ship price? That, sir, he will say, okay, I will load the machine in the truck, I will pay the loading cost, transportation cost, then whatever is the freight insurance in our country, we will pay, and we'll make the goods reach till the ship ka port. Besides the ship will make it reach. That is known as free alongside ship contract. Under FOS contract, basically the seller is required to deliver the machine alongside the ship till the goods reach the alongside the ship. All the expenses are borne by the seller. Post that, the risk of the goods get transferred to the buyer. Now I am supposed to load the goods and take the goods to India. Sir, what is the next kind of contract? The next kind of contract is FOB contract. In an FOB contract, what happens? The goods, the cost of loading the goods and export duty, etc., also comes on the seller. So if seller has gone ahead and given me a contract where he is going ahead and telling me FOB contract, it means he is going to further load the goods in the ship. Whatever export duty, etc., is payable in the port of exportation, means the US port. Supposingly, if I'm getting the goods from US, then in the US port, whatever the expenses are there to load, export duty, etc., that will also be included in the FOB, free on board price. Now, if I have gone ahead and contacted one person and he told me, sir, I will go ahead and give you a CIF price, then CIF price means the cost, that is the FOB price, including the insurance and the freight, which is nothing other than FOB plus the insurance cost which is there, plus whatever is the on the way cost of transportation, cost of insurance included, it will give me the CIF, cost, insurance and freight, and the goods will reach to India. Always remember one thing, CIF is the assessable value on which you are required to pay the custom duty. Are we clear, everyone? Sir, once the goods have reached the Indian port, after that, any unloading cost which is there, port ka charges which are there, any extra expenses which are there are not to be included. Remember one thing, port dues, import duty paid, etc., all this will not be included in your assessable value. Basically, port due will not be included. Import duty too will be paid on the assessable value only. Port dues, etc., loading, unloading charges, people will not be included. Till the goods reach the Indian port, whatever the costs are there, X factory price, sir, then transportation till the port, loading in, unloading in the port, loading in the ship, export duty, cost of transportation, cost of insurance, till the goods hit the Indian port, all the costs are to be included. After the goods hit the Indian port, any costs which are there in the Indian port are never to be included. Are we all clear till here? Then, sir, might be after the goods hit the Indian port, transportation to an England container depot, container freight station, transit, transshipment costs. Remember one thing, transit, transshipment, all these costs are never to be included. Once the ship hits the Indian port, after that, none of the costs to be included. Now, one very good term which is there is a demurrage charge. Demurrage charges means when the goods have been unloaded, if you don't clear the goods from the shipping port, from the port of importation, this is the port of importation where goods have come for clearance. Baba, if you don't clear the goods within a time limit, then they go ahead and start charging you demurrage charges at the Indian port. If you pay any demurrage charges at the port of importation, remember one thing, never to be included, because once the ship has hit the Indian port, all the charges not to be included. But my next question over here is, sir, supposing this mother vessel is standing over here, the big vessel, this big vessel say unloading will be done in a small boat, and then the goods come to the India. Then, Baba, in that scenario, this big boat which is standing at the port of importation, although it is standing at the Indian port, but because this big ship is standing at the Indian port, it is usually before the Indian port only, but it is told that ship demurrage charges paid at the Indian port. So, Baba, the ship demurrage charges, this light small boat charges, unloading in the small boat ka charges, all remember one thing, all are to be included, because this, although the wording used are ship demurrage charges paid at the port of importation, but these are actually incurred before the port of importation, and these are to be included. But only demurrage charges at the Indian port not to be included. Sir, what if demurrage charges are there at the US port? Included. Can I go ahead, everyone? Anything paid, any charges paid before are to be included. Anything paid at the port of importation not to be included. And here I told you demurrage charges paid at the Indian port not to be included. But ship demurrage charges, mother vessel ka charges which are there, ship demurrage charges because the mother vessel was standing. Sir, all the small boats, lighter age, bar charges are to be included. This was one very important point which you have to take care. Remember, US if goods are coming into India, US is the port of exportation, India is the port of importation. Port of importation is basically that port where the goods have come so that you can clear it or you can ship, you can put it in the warehouse. Everyone over here. Now, when we go ahead and talk about valuation, remember one thing, valuation means accessible value. Value means always the accessible value. Custom duty is paid on what, everyone? Value multiplied by rate of exchange into rate of duty. When you are trying to find out the value by applying section number 14, section number 14 has section number 14.2 and 14.1. 14.2 goes ahead and says that, sir, value will always be the tariff value. Tariff value in which cases, everyone? Gold, silver, etc. cases may always remember government goes ahead and fixes a tariff value. If government has fixed the tariff value for your goods, whatever price you get the goods doesn't matter. Tariff value pay, you have to pay the duty. But sir, if government has not fixed the tariff value for my item, then I have to pay the duty on transaction value. Remember, what do you mean by transaction value? Transaction value means the price which you have paid or the price which is payable for the goods when the for the goods. It means the total amount paid or payable. Remember one thing, if you have gone ahead and got some goods from the US, supposedly for $10,000, and when the goods had come to India, international prices had come down and you had renegotiated and you had made the price, and the exporter made the price only $8,000. Now you are going to pay $8,000. The transaction value is going to be 8,000. The next one over here is price paid or payable when sold for export to India. When he has sold for export to India at the place of time and place of importation, at the importation port, whatever is the value, that is the transaction value. Is the CF value is your transaction value. When the buyer and seller should be unrelated and the price is the sole consideration. Price should be the sole consideration. Only then that can be the transaction value. Once the transaction value has been arrived by you, then now you have to go ahead and rule number 11 says you have to file a declaration. Baba, declaration as to the truth and accuracy of the value which you have declared, you have to go ahead and file. Declaration by the importer or his agent disclosing full and accurate value. Now, once you go ahead and make the declaration, if the officer has a doubt, then what will the officer do, everyone? Rule number 12, if the officer has a doubt as to the truth and accuracy of the value declared, then he will ask the importer to furnish information, documents, evidence, and after receiving, or if no response has been given by you, if no response has been given, proper officer still has a doubt, then he will reject the, or if you have given that document but he still has a doubt, then he'll reject the transaction value. And if you request, he will intimate the ground for rejection and also give you the opportunity of being heard. Once the officer goes ahead and rejects the transaction value, he will go ahead and apply what? He will do reassessment. Basically, what assessment you had done, self-assessment, he will reassess the duty by going ahead and applying the valuation rules. Are we clear, everyone? And valuation rules are always applied sequentially, means he will go with rule number 4, 5, 6, 7, etc. Everyone over here. Sir, for an accessible value is always the accessible value means on which I have to pay the duty. Accessible value is always the transaction value or the tariff value. Tariff value is not there, then I'll take transaction value. Transaction value may I'll go ahead and make a declaration. Declaration may officer does not have a doubt on my declaration which I have gone ahead and made. Then, Baba, always remember rule number 3.1 says your transaction value, which is your CF value, only will become a accessible value provided you fulfill the conditions which are given under 3.2. 3.2 में there are 4 conditions which are given. 3.2 का 4 conditions are over here on the left hand side. 3.2 का 4 condition. Number 1, no restriction as to the disposition. Means the exporter who has gone ahead and exported the goods to me, he has not gone ahead and given any restriction on the disposition or use of the goods by the buyer except Gopal condition. Baba, he has not gone ahead and given any restriction or he has not gone ahead and given any restriction as to the disposition, means how I am going to dispose the imported goods or how I am going to use it, except Gopal condition. G means geographical area ka condition. O means of other restrictions which are not impacting the price. PA means public authority ka restriction, and L means law related, if any restriction are there, those are fine. But other than that, if there is any restriction which is impacting the basically which restriction as to the disposition or use of the goods, then baba your value will not be accepted, and sir valuation rule will be applied. The next one is sale should not be a subject to a condition for which the value cannot be determined. Always remember it should be an unconditional sale. If conditions are attached to the sale, then valuation rule will be applied. The third one, you should not be paying anything subsequently to the seller. If you are going ahead and paying any subsequent sale proceed to the seller, value can be identified, then baba adjustment will be done in the CIF value. But if value could not be identified, what are you going to pay in the future? Subsequent sale proceed could not be identified, then baba for which adjustment cannot be made, then in that scenario valuation rule will be applied. The next one is buyer and seller should be unrelated, only then transaction value will become your assessable value. But if buyer and seller are related also, rule number 3.3 goes ahead and says, even if rule number 3.3 says, even if the buyer and seller are related, transaction value will be accepted if relationship did not influence the price, or you prove that sir importer demonstrate that declared value closely approximates the value under valuation rule number 4, 5, 7 and 8. Are we clear everyone? But if you can't prove that, then officer will go ahead and apply valuation rule and find out the value. Always remember, in customs, what do you mean by in custom? What do you mean by related person? Scope plus family plus sole agent, which we had learned in GST. Same to same over here. Scope plus family plus sole agent. But what they have gone ahead and told, scope may S means shares. S means shares greater than equal to 25% in both of them. That was in GST. But in customs, it is shares equal to how much, everyone? 5%. Shares equal to how much, everyone? Equal to or more than 5% in both of them. Both of them. Both of them. So if I'm holding A Limited is holding in B Limited 5% share, we are not related. I am holding in B also, I am holding in C also, then B and C become related. The next one over is control. If I am controlling the other person, control is always 51%. If I am holding in the other person 51% share, then baba I am controlling that person, and then we both are related person. For an example, if Ram Limited is holding in Sham Limited 30% share, is Ram and Sham related person? No, no, no. 51% is control. And because of shareholding, 5%, these two become related. You and this does not become related person. Are we clear, everyone? Shares greater than equal to 5%. 25 was in GST. In customs, it is 5% in both of them. C for control. Baba, what is control? If you are going ahead and controlling, it means you are holding at least 51% share in the other person. C means control. O means officer or directors of each other's business. P means partner. E for employer, employee. Family, baba, family has not been defined under Customs Act, but here you can take family as a normal family. Father, mother, son, wife, etc. And baba, sole agent over here. Sole agent is not related person in custom unless it falls anywhere in family plus scope. Are we clear, everyone? Only if sole agent. So if there is a sole agent only, then he's not a related person unless he's falling anywhere in scope plus family. Are we clear, everyone? Now listen to me very carefully. So you went ahead and one was the tariff value. But tariff value is not there in your case, then transaction value will come. You made a declaration. Officer did not accept your declaration, then valuation rule will come. Sir, officer accepted your declaration, but 4 conditions which were there, you did not fulfill. If you don't fulfill any one of the condition, then also rule number 3.4 goes ahead and says, if value cannot be determined under 3.1, means your transaction value is not accepted, then valuation rule will come over here. And valuation rule may, the first rule which comes is rule number 4. Rule number 4 goes ahead and talks about assessable value is the transaction value of identical goods. So if you had gone ahead and imported some certain item, and officer is going ahead and trying to find out the value, then officer will go ahead and apply valuation rule. The first valuation rule is identical goods ka rule. Identical goods ka value he'll go ahead and find out. So what do you mean by identical goods, everyone? He will say whatever is the, so if I went ahead and imported iPhone and officer is trying to find out the value, officer will go ahead and see if somebody had imported exactly the same iPhone, then what is the value that was accepted in this case, that will be accepted in your case also. Are we clear, everyone? So it says over here, identical goods means imported goods which are same in all respect except minor difference, produced in the same country by the same or different person, but does not include those goods for which design and engineering was undertaken by the buyer and provided to the seller free of cost at a reduced cost. So those will not be identical goods which design and engineering was undertaken in India. Are we clear, everyone? Then it says over here, identical goods. So if officer is going ahead and trying to find out the value of your identical goods, means your goods if he is trying to find out the value, then he will go ahead and apply the valuation which was adopted for what? Similar, not similar, identical goods. Identical goods means which were imported goods, same in all respect, basically same country, same person or different person, but those will not be identical goods for which design and engineering was undertaken in India. Are we clear, everyone? Now once the officer has gone ahead and found out the identical goods should be which identical goods? Which were imported into India at or about the same time, which are imported into India at or about the same time, same commercial level or substantial same quantity, or else Baba different commercial level or quantities subject to adjustment. The next one over here is once he has found out the identical goods ka value, then he will go ahead and further make the adjustment in freight and insurance. For an example, if officer was trying to find out the goods ka value of these goods, and some identical goods were of this goods ka value, officer is trying to find out, identical goods have come over here, and Baba here the freight and insurance were more than, and here might be imported from this person over here, and here say here also here goods had come. Now this identical goods which are there, the freight and insurance was more. So when you are going in and applying this goods ka value over here, then you will make the adjustment or freight and insurance. Adjustment for freight and insurance under section number 10.2 has to be done if significant differences were there. If minor difference, then they will ignore it. Remember, if more than one identical goods have come, lowest will be taken as the accessible value. Sir, the second one over here is rule number 5. Rule number 5 says accessible value is the transaction value of similar goods. What do you mean by similar goods? Exactly same as the identical goods, only similar means they are commercially interchangeable. Identical goods means exactly the same, minor difference but similar goods means not exactly the same, similar characteristic. It says imported goods not alike in all respect but have like characteristic and like component, enabling them to perform what? Same function and commercially interchangeable. Rest all these things should remain same in similar goods also, that it should be produced in the same country by the same person or different person, and it will not include, those will not be similar goods for which design and engineering work was undertaken in India and provided by the buyer to the seller free of cost or at reduced price. Are we clear, everyone? Now, if similar goods once has been identified, then everything remains the same. Similar goods which were imported at or about the same time, same to same. Imported at or about the same time, similar goods ka value. Which similar goods ka value will be taken? Which were imported at the same commercial level or same quantity, different commercial level, then adjustment will be done. Sir, freight and insurance ka adjustment to be done, and more than one similar goods ka value if it has come, then Baba, they will take the lowest. That is why it is told value will be transaction value of similar goods at or about the same time. Clause B, C, 2, 3. This one, B, C, 2, 3. Exactly of rule number 4 will apply mutatis mutandis. Are we clear, everyone? The next one over here is rule number 6. Rule number 6 goes ahead and gives gyan. Rule number 6 says if you can't apply 3, your value was not accepted, 4 was not there, 5 is not acceptable, then please apply 6 and 6, 9, 7 and 8. But here one important point which rule number 6 told is an importer can request and proper officer can approve that he can apply rule number 8 before rule number 7. Then Baba comes rule number 7. Rule number 7 is your deductive value. What do you mean by deductive value? India ka resale price say all the expenses will be deducted and the port ka value will be arrived at. It means the resale unit price of the imported or identical goods or the similar goods in the greatest aggregate quantity when it was sold. Baba, the identical goods, similar goods or the goods which are imported, the greatest aggregate quantity, you have to see the greatest aggregate quantity at which those goods were sold in India. From that, the commission paid, all the expenses in India to be reduced. Commission paid, profits made, general expenses, processing costs which are in India, cost of transportation and associated costs, custom duties and other taxes paid in India, you have to reduce and you'll arrive at the accessible value. Remember one thing, it is nothing. India ka resale price minus all the commission, general profits, general expenses, cost of transportation, insurance, custom duty, taxes, and you'll arrive at the port ka accessible value, and not that officer will go ahead and charge you the duty. Baba, port or airport also it can be if goods were imported by air. The next one over here is if resale price at or about the same time. If what is it, everyone? If resale price at or about the same time is unavailable, then they are telling unit price at the earliest date after the import but before the expiry of 90 days. Officer will wait for 90 days to go ahead and do the finally assess the duty. Everyone over here, finally assessment of duty will happen on the value. So for finding out the value and assessment of duty, officer will wait for how many days, everyone? 90 days. Once the goods are sold in India, that price will be taken, reduced, and deductive value will be arrived at. The next one is rule number 8. Assessable value will be the computed value. What do you mean by computed value? Baba, the person who has sold you. Deductive means India ka resale price is deduct and arrive. Computed means his price say the seller who has, or a person who has sent you the goods in India, his price say you'll keep making the adjustment under 10.1, 10.2 and arrive at the Indian selling price. So it says over here cost of material which the person has sent you the goods, cost of material, his processing cost which was there, then his profit, general expenses up to the port of origin, his port mein basically his cost of making the goods, then baba loading, unloading, handling charges till the port. Then baba cost of section number 10.2, cost of transportation, cost of insurance as per section number 10.2 will be added and Indian port pay value will be determined. Now people tell me one thing, rule number 4 identical goods not there, rule number 5 similar goods not there, rule number 6 told 7 and 8, 7 and 8 you could not apply it, or 8 and 7, first 8 and then 7, might be you imported some machine. People tell me one thing, you imported some machine from your parent company who had gone ahead and sent you the machine. Now the parent company when it sent you the machine, that machine never is sold in India, so you can't apply 7, so you'll apply 8. Are we clear? And then might be you can apply 7. And baba, if that is also not possible, always remember rule number 9 says assessable value by applying what? Residual method. Residual method says what? Value determined using reasonable means consistent with the principles and general provision of the rules and on the basis of data available in India. Reasonable means will be applied and you will find out the value. For an example, rule number 9 can say that sir, officer can do what? Identical goods from the same country are not there. Then from other country, identical goods, similar goods ka value can be adopted for your goods which you have imported. Are we clear everyone? But remember, rule number 9 says that for value determination, following shall not be the basis. Following cannot be the basis means officer cannot go ahead and apply this as reasonable means. Are we clear everyone? Machos D. What is Machos D? M for minimum custom values, A for arbitrary or fictitious values, C for cost of production not computed as per rule number 8. How rule number 8 has told you are not computing at that way. Then H for highest of two alternative. Officer is telling inky, pinky, ponky, I'll take the highest one. No, you don't do all those things. Highest and all those things. One is arbitrary and fictitious. That you can't do. Highest of two alternatives you can't do. Selling price of goods for export to a country other than India can't be taken. Then for O means other than India. Exporter sold the goods to any other country other than India. That price cannot be adopted in India. Then S for selling price of Indian goods can't be taken. Identical goods, similar goods, etc. Always they told imported goods. You can't tell take Indian goods ka selling price. And D for domestic market price of the exporting country may whatever the domestic market price was there, that cannot be adopted in India. Domestic market price of the goods in the exporting country. So these are not reasonable means. This means officer can't adopt and find out the residual method make value. Can I go ahead everyone? Now rule number 11, you went ahead and declared your value. Now the value can be rejected by the officer. What are the reasons for rejection that can be there? The proper officer has a doubt on that value declared under rule number 11 you are declared and he will reject. Why will he reject? He can reject because significant differences in identical or similar goods. You imported iPhone for 100 rupees. Officer will tell people are importing for 50,000. How did you get for 100 or 1000 rupees? Then sale involves abnormal or special discount, fraudulent or manipulated document, misdeclaration of goods in the parameter or non-declaration as per the parameter. In all these scenario, the officer can go ahead and reject the value. Are we all 100% clear? People listen to me very carefully. Whenever the officer is taking rule number 4, rule number 5, etc. my value of identical goods, etc., he will take already the value which is accepted under rule number 3 and not assessed provisionally. Means the final values only he will go ahead and take. Are we clear? For which the assessable value was already accepted, that value he'll take. He'll not take those goods ka value which was provisionally assessed. Are we clear everyone? Now listen to me very carefully. Under section 14.1, you took the transaction value, you made a declaration, officer liked your declaration, no problem at all. He did not have any doubt. Then Baba 3.2 ka condition also is satisfied. Then you come under 3.1 which goes ahead and says that sir, your CI value which is your transaction value will become your assessable value, but subject to adjustment under rule number 10. And rule number 10, so basically when you start rule number 10 ka adjustment, you should always start with FOB. FOB may you should do rule number 10 1 ka adjustment, which are 5 adjustments over here. And then Baba you will get adjusted FOB, and on that you should do 10.2 ka adjustment, cost of transportation and cost of insurance, and you will arrive at the CIF. This paragraph which is there, I've zoomed it and I've elaborated in the next chart which is more in detail. Please come to the next chart everyone. Now, determination of accessible value. People over here. First of all, when we go ahead and determine the accessible value means what, everyone? The CIF value basically is the accessible value, but CIF value adjusted as per section number 10.1 and 10.2. Okay, everyone. So in your exam, always remember one thing. First of all, never start solving your question with the CIF. Always first arrive at the FOB and then Baba go ahead and solve your question. Sir, why? Because by chance the question goes ahead and talks about air. In case of air, we always compare. So your CIF value which is there might be including the actual air freight which is there. So you have to go ahead and for the purpose of custom valuation, you have to first arrive at the FOB. Then air ka case mein we always take 20% is the maximum. And then Baba cost of insurance, and then you arrive at the actual CIF. Are we clear, everyone? So never start your question answer solving with what, everyone? CIF. Please arrive at FOB and then start. So sir, how do we do it? In the exam, first of all, your expected price will be there. Expected price ke saath you will take freight and insurance and all the expenses up to the port. Then you will get free alongside the ship. In the free along the side, then loading will be done on the ship. So sir, loading charges at the shipping port and export duty when he will give you FOB value. In FOB, we will go ahead and start adding section number 10.1, A, B, C, D, E ka adjustment, and then you have section number 10.2 ka adjustment. Section number 10.1 A goes ahead and says that the following, if incurred by the buyer, are not included in the transaction value, that is the price paid or payable. Commission and brokerage, please don't include. Remember, all the commission and brokerage should be included, but not buying commission. Please don't include any buying commission. That is paid by the buyer to his agent, not to be included. I have written it on the side over here. Buying commission, if paid by the buyer to the agent, is not included. Here I want to put one star and tell you that, sir, service charges which are paid to channelizing agent are not buying commission and always to be included. Channelizing agent ko service charges paid are not buying commission and they are to be included in the value. Can I go ahead, everyone? The next one is cost of container. Always remember, container ka cost is to be included in the value, but cost of returnable and durable containers exception, it is not to be included. The next one over here is cost of packing to be included. Remember, whether the packing cost ke liye whatever you are paying is for labor or material, that is to be included. The next one over here is any assistance which is given by the importer supplied free of cost or at reduced price to whom? To the exporter. Then they are going ahead and telling over here, please add the value as apportion. Please apportion and add. Are we clear, everyone? So if I have gone ahead and supplied material, some material are coming now, later some other material will come. So you have to apportion and keep adding to the value of the imported goods. So it says over here, first of all, material including raw material, component, part, item incorporated in the material which you have gone ahead and supplied free of cost. Please add it. Tools, dies, mold, similar item used in the production. Number one, which got incorporated and came back. Number two, the tools, dies, etc. which were used, that ka value should be apportioned and added. Thirdly, material consumed in the production, that should be added. Engineering, development and design work or plan and sketches undertaken elsewhere than in India only should be included. If design and engineering is undertaken in India, do not include. If design, development work, artwork is undertaken in India. Then the next one over here is royalty and license fees. Please include whatever the buyer is required to pay to the seller. Royalty and license fees is to be included. Includes, that is the payment which is made for patent, trademark, copyright. Process might be undertaken after import, but whatever the license fees etc. you're going ahead and paying, please go ahead and include. The next one over here is value of the sale proceed of subsequent resale, disposal or use of the imported goods. If any subsequent sale proceeds you are going to pay him and that amount is ascertainable, please include it in the value. If the amount is not ascertainable, subsequent sale proceed is going, and that scenario, valuation rules are applied to find out the correct value. Can I go ahead, everyone? Sir, remember one thing, dividends are never subsequent sale proceed and do not include dividends in your value. All other payment made as a condition of sale, Baba, all other conditions, all other payments, any other payment if you are going and doing to the seller which is as a condition of sale, either you are doing to the seller or to any third party to satisfy the obligation, it is to be included. Can you tell me any other payment ka example? Dismantling charges. You have paid to the seller any dismantling charges. Remember, any other payment for dismantling, supposingly you paid him an amount so that he dismantles a machine, puts it in a container and sends it to you. He charged you, you have to go ahead and include it in the value. So dismantling charges is one example. All other payment made as a condition to the seller or the third party to settle an obligation will be included and you will get adjusted FOB. The next one over here is section number 10.2. Section number 10.2 A is there and section number 10.2 B is there. Section number 10 to A. People over here. Section number 10 to A says cost of transportation, loading, unloading, handling charges associated with the delivery of the imported goods to the place of importation, means up to the place of importation. Whatever is the cost of transportation, loading, unloading, handling charges is there, you have to go ahead and include it. Now, sir, actual is available, take actual. Actual is not available, then take 20% of the adjusted FOB. This adjusted FOB you have to take 20%. Remember one thing, in case of air, we always compare the cost of transportation, loading, unloading, handling charges. In case of air, we compare actual and 20% of the adjusted FOB, whichever is lower, we go ahead and take it. Remember, cost of transportation is still the place of importation. Ship demurrage charges, barge, light rate charges also to be included in the cost of transportation. But remember one thing, whenever you take 20%, it is always assumed that 20% includes cost of transportation, loading, unloading, handling charges from the exporter's factory till India. Whatever the cost of transportation, loading, unloading, handling charges is there, all is assumed to be included in the 20% if you take 20%. But if you are taking cost of transportation, loading, unloading, handling charges on actuals, then you should always include ship demurrage charges, barge, light rate charges, only if transportation has been done on actual basis. But we don't include if calculated on 20% basis. Why do we don't include? Because in 20% it is already assumed that it is already ship demurrage charges, light barges, barge charges, etc. are already included. Now, one thing which students get confused about is ship demurrage charges and ship demurrage charges, barge charges incurred at the port of importation, or demurrage charges only. Remember one thing, what is ship demurrage charges? Baba, ship demurrage charges is because the mother vessel is standing over here and mother vessel say goods are unloaded in a small boat and brought to the Indian port. Baba, this mother vessel which is standing, for that ship demurrage charges and for the small boat barge charges are taken at the Indian port, but these costs are incurred before the Indian port only and hence it is to be included. But after the unloading of the goods, if the goods are lying over here, and at the port, if any demurrage charges, because you did not remove the goods, the demurrage charges were charged. Those are at the port exact charges and those are not to be included. But ship demurrage charges and bar charges are at the port of importation also are to be included, because they tell that it is at the port, but it is actually before only that the costs were incurred. Are we clear, everyone? And demurrage charges at the port do not include. So ship demurrage, bar charges at the port of importation included, but demurrage charges only not to be included, even though it is at the port of importation. Now, one point clear, everyone. The second point which I want to go ahead and tell you, once the ship hits the port, after that any cost is not to be included. Like, do not add transportation to ICD, CFS, container freight station, port to the ICD, port to another port, port to CFS, airport to airport, etc. Transit, transshipment charges, any transportation cost incurred post importation are not to be included. The next one, do not add any port dues, handling charges, demurrage charges paid at the port of importation. Remember one thing, once the ship hits the Indian port, none of the cost is to be included. Might be the ship has hit them in Mumbai port. Mumbai port ke baad the goods were taken to the Kandla port. Baba, the next port which is there, in that scenario, remember, those transit, transshipment costs, nothing is to be included. Once the ship hits the Indian port, none of the cost to be included. Prior to that, or up to that time, all the costs are to be included. Now here, everyone over here. Now here, one thought which is there, which lot of students get confused about it. Remember one thing. In your exam, if you are going ahead, and taking 20% as your cost of transportation, that 20% may always assume that cost of loading, unloading, handling charges from the exporter's factory till the Indian port are already included in the 20%. So when you're comparing 20% and actual may also used to take cost of transportation on the way ka transportation, loading, unloading, handling charges at the US port. Total you should take as actual, and that should be compared with 20% of the adjusted FOB, because in 20% of the adjusted FOB also you assume cost of transportation, loading, unloading, handling charges is there. So when you take actual cost of transportation, loading, unloading, handling charges and compare with 20%, in case of air, we go ahead and take whichever is lower. Are we clear? But in all other modes of transportation, we go ahead and take, if actual is available, actual. If actual is not available, then we take 20%. Please be very careful about this point. Are you guys able to recall the point? Yes, sir, we are able to recall. The next one, cost of insurance to the place of importation. Cost of insurance to the place of importation, actual, then Baba take actual. If actual is unavailable, till 1.125% of the adjusted FOB. And we'll get the CIF value over here. Remember, if combined FOB is given in the exam, FOB plus insurance is given, then cost of transportation is 20% of that combined FOB. If combined FOB, that is FOB plus transportation is given, then insurance will be 1.125% of the combined FOB. Earlier, there was something called landing charges, but now no more landing charges are to be included. Remember one thing, landing charges are not to be included. On the right hand side, is there anything additional? Baba, remember, demurrage charges paid for delay of clearing from the port are not to be included. Demurrage charges are paid at the Indian port, not to be included. Ship demurrage charges include only if you are taking cost of transportation on actual basis. If you are taking 20%, then it is already assumed to be included. Any duties and taxes incurred in India not included. Are we all clear with this point? The most important point over here is the calculation of cost of transportation. Remember one thing, I'll talk about vessel. Vessel ka case mein, if actual is given, take actual. Actual is not given, then take 20%. And that 20%, when you take, remember one thing, that 20% includes from the exporter's factory till the Indian port, whatever cost of loading, unloading, handling charges is there, that is assumed to be included in the 20%. Are we clear? In case of air, we always compare actual with 20%. Whichever is lower, that is to be taken. Only in case of transportation, we compare. In case of air, for cost of transportation, we compare and take whichever is lower. Please come to the next one, everyone. Now, once you have gone ahead and found out the CIF, now CIF has to be, so custom duty is what, everyone? Custom duty is the civil value, which is your CIF value or tariff value, multiplied by the rate of exchange into rate of duty. So, sir, how do we calculate the rate of exchange and rate of duty? Remember one thing, if goods are cleared for home consumption, that is direct clearance, imported by vessel or imported by aircraft, you always have to remember duty. Duty is always deferred. So in this scenario, bill of entry, filing date or entry in word, whichever is later. Deferred means later. Sir, in case of aircraft or vehicle, entry in word is not filed in case of aircraft or vehicle, and hence it is bill of entry, filing date or arrival date, whichever is later. Remember, rate of exchange in this scenario is always, you never take SBI ka reference, SBI rate, RBI rate, interbank rate, anything told in the exam, please don't take it. Please only take CBIC. CBIC ka rate of exchange has to be taken. What will you take? Rate of exchange given by the CBIC only has to be taken. Remember, it will be always, exchange means E. E means earliest bill. E means the earliest bill. Can you tell me, bill of entry or entry in word? Bill of entry or entry in word? Which is the bill over here? Bill of entry. So whichever is the date of filing of the bill of entry, that is to be taken. The next one over here is goods cleared for warehouse. In case of warehouse, you file into bond bill of entry first, and then you file ex bond bill of entry. Duty ka case mein, duty is always deferred, which is later, everyone. Ex bond, and hence it will be the date of filing ex bond bill of entry. Can you tell me exchange? Exchange means the earliest, and earliest means which is earlier, into bond or ex bond bill of entry? Into, and hence into is taken. In the exam, don't write into or ex, which is later, etc. Directly write over here. Is the point clear? The next one is in case of export. Export ka case mein, first you file shipping bill and then you file late export order, which is later, everyone, which is deferred. Late export order, and hence it is late export order because duty is always deferred. And Baba, rate of exchange ka case mein, it is the earliest bill, and earliest bill is the shipping bill. Are we clear? Late export order is not a bill at all. I hope this point is clear. The next one is, in any other case, it is always the date of payment of duty. And sir, these provisions are not applicable in case of baggage, goods imported by post or courier, because for them special provisions are there. The next one over here is section number 19 over here. Section number 19, before I go ahead and tell you, I want to go ahead and tell about the export valuation. Export valuation, always remember, custom duty is FOB, not the CIF. Export ka case mein, place of exportation mein, what is the value multiplied by rate of exchange into rate of duty. Rate of exchange and rate of duty I have already told you over here. And remember, in case of exports ka case mein, when you are calculating the custom duty, generally in case of imports, you calculate the custom duty. On that, you calculate 10% social welfare surcharge. But in case of export, never calculate what? Social welfare surcharge. Now we have section number 19 over here, special provision for classification of set of articles or accessories. Remember one thing, if articles are imported in set, and might be there's a single price which is given for the set of article, then remember one thing, articles liable to duty with reference to quantity. I want to go ahead and show it from the textbook. Just a second, everyone. I'll show you from the textbook so that you can remember the example also for this. Supposingly you entered and imported articles in a set with a saving kit, and all are liable to duty with reference to quantity. Per unit 10 rupees, 20 rupees, 30 rupees and 40 rupees. The total duty will be 10, 20, 30 and 40. Are we clear? So it says over here, if articles are liable to duty with reference to quantity, chargeable to that duty. Sir, if articles are liable to duty with reference to value and liable at the same rate. Sir, in the example, if they are liable to the same rate, then please remember, if the set of article has come for 500, one rate 10% will be applied and 10% will be the duty. Okay, sir. If the articles are liable to duty with reference to value, 500 rupees per duty will come, but all are different rates. Then remember one thing, if all are different rate, highest rate will be applied. Are we clear, everyone? The next one over here is, if chargeable to highest rate. If articles are not liable to duty, chargeable to duty at the rate at which articles liable to duty with reference to value are liable. For an example over here, if supposingly people over here, one item may there is no duty only and all the others are 10%, then the whole set of article pay 10% will be applied. If the whole articles pay, one item is not liable and all the other items are different rate of duty, then highest rate will be applied. Are we clear? For an example, one more example which I want to give over here. Supposingly set of articles have come, and rate of duties are given, and article is importer is giving evidence to the satisfaction of the proper officer that importer has imported into India. What? It consists of multiple article. Importer produces evidence to the satisfaction, or evidence is available regarding separate value. He is telling, sir, 500 rupees, I can give you separate values. Then Baba, separate rate will be applied. Are we clear, everyone? Sir, if article is supposedly 500 rupees ka set of article has come and one item ke liye has gone ahead and told that this is the value, other items ke liye I can't prove, then one article ke liye if 10 rupees is there, 10 rupees will be applied. Others ke liye if different rate of duties is there, highest rate will be applied. I hope this point is clear. The next one over here is, if you have gone and imported accessories, parts and implements, remember one thing, if accessories, parts and implement are supplied along and no separate charges, main article and API, accessories, part and implement will be chargeable at the same rate. Sir, if they are compulsorily supplied along but separately charged, then Baba, individual rate will be applied. Compulsory supplied along but individual rates are there, so individual value is there, individual rate will be applied. Then Baba, if accessories, parts and implement are optionally supplied, both ka case mein optionally supplied, no separate charges or charged separately. If no separate charges are taken, then Baba, highest rate will be there because it was an optional, but you still took it. It was optional and you took it. So what will happen over here? Highest rate. Optional and it was charged separately. They have charged you separately also. Then they are telling respective rates will be applied. Are we clear, everyone? Sir, what kind of a chapter it is, everyone? This chapter is A plus grade chapter. 6 to 8 marks will come out of this chapter. What is the main important part of the chapter, everyone? This chart is okay only for the purpose of understanding. In this chart, if you go ahead and see over here, this part which is there, rule number 4, rule number 5, rule number 8, rule number 7, 8 and 9. These rules you should be careful about it. In this rule number 4 and 5 is very important. Now, sir, if you see over here, sir, what are the reason for the proper officer to doubt the value which was declared under rule number 11? Can I go ahead, everyone? The value which you declared under rule number 11, when can the officer doubt it? Those points are important. Residual method, what is not reasonable means, this point also can be important. You please take care of it. Small question can be asked. C graded, B graded question. Actually, this says C graded question can come. This paragraph which is there is a B graded paragraph. But this chart which is there is A graded, everyone. One question, 6 marks will come out of this chart. Are we clear, everyone? And in this chart also, you should be very careful about the cost of transportation. If you have done the importation by air, always compare. And when you are comparing, please take actual. When you are taking actual, you should take actual cost of transportation, loading, unloading, handling, everything, and you should compare with 20%. Clear, everyone? Remember, landing charges are no more includable. This is very important. And the last chart which is there, Baba, this chart is very important because it will help you in determining the rate of duty and rate of exchange. Remember, duty is always deferred, later one. And exchange, E for earliest bill. Are we clear, everyone? Please practice question answers on this. Baba, this section number 19 can be a C graded question. Export valuation can be a C graded question which they can go ahead and ask. I'll go ahead and close my revision on the chapter of valuation. Alright students, let's go ahead and now revise the chapter of types of duties. Everyone over here, types of duties, always remember, when you go ahead and do the valuation ka chapter, once you are done with the chapter of valuation, either the value will be transaction value or the value will be tariff value. Transaction value or tariff value, on that you have to go ahead and charge the custom duty, and the different types of custom duties which are being levied when you go ahead and import the goods or when you export the goods, it is known as export duty. In case of import, you go ahead and levy import duties which are there. There are a lot of types of duties. Let's go ahead and start understanding about them. The first duty which is there is, sir, basically they are going ahead and telling on the assessable value, or the tariff value or the value identified by the officer using valuation rule, whatever is the value is known as the transaction value or tariff value. Now on the transaction value or tariff value, the first duty which is being levied is the basic custom duty. Always remember one thing, basic custom duty is being levied because it is told under section number 12 of the Customs Act 2000, Custom Act section number 12, Custom Act section number 12 goes ahead and says that, sir, duties of custom will be levied on goods imported or exported from India. Now duties of custom which are there, they are going ahead and telling basically, sir, duties of custom means custom duty. Custom duty will be levied on import or export. That custom duty which is levied as per the Custom Tariff Act. So custom duty is levied on goods imported at the rate specified in the Custom Tariff Act. So when you go ahead and read the Custom Tariff Act ka section number 2 goes ahead and says the rate at which duty shall be levied on goods imported or exported is basically told in the first schedule and second schedule. So first schedule goes ahead and gives you import duty ka rate. Sir, in case of export duty ka rate is basically given by second schedule. Now, when you go ahead and charge basic custom duty as per the Custom Tariff Act, first schedule, they are going ahead and telling there will be two types of rates which are there, standard rate or preferential rate. Always remember one thing, if preferential rate is given, then you can go ahead and claim preferential rate, but for that you have to go ahead and claim. Section number 4 of the Custom Act goes ahead and says that levy of duty where standard rate and preferential rate both are given, you will be going ahead and levying at preferential rate, but subject to condition. Number 1, you have to go ahead and make a specific claim. When you are filing your bill of entry, you have to claim that preferential rate of duty should be levied on your goods. Secondly, sir, importer also claims that the goods are produced or manufactured in the country, that country only from where you can claim preferential rate of duty. Basically, it has been manufactured or produced in the preferential area. Thirdly, the origin of the goods shall be determined by the government in accordance with the rule. And fourthly, they are going in and telling the area also should be notified as a preferential area by the central government in the official gazette. Only then preferential rate of duty shall be given. Always remember one thing, you have gone ahead and found out the assessable value. On the assessable value, you have to go ahead and charge. First is the basic custom duty, which is levied under section number 12 of the Custom Act at the rate which is told in the Custom Tariff Act. Custom Tariff Act ka first schedule goes ahead and gives you basic custom duty and preferential rate of duty. Basic custom duty is always charged, only preferential rate of duty is not there. But preferential rate of duty will be given to you only if you go ahead and make a specific claim. Secondly, you also claim that the goods are manufactured or produced in the specific area, basically preferential area. And thirdly, the origin of the goods, because you are telling it is from that country, government will go ahead and determine as per the rules which are made on this behalf. And the last one over here, the area should also be notified as a specific, basically preferential area. 4 conditions satisfied, then you will be getting preferential rate of duty, otherwise standard rate of duty will be applicable. Now once you go ahead and levy the preferential rate of duty or standard rate of duty, which is the basic custom duty, the next one over here is the protective duty. Protective duty is basically over here, everyone. Protective duty, section number 6 of the Custom Tariff Act goes ahead and talks about protective duty. What is the government? It is levied when? Levied by the central government on the recommendation of Tariff Commission, and it is levied to protect the interest of the domestic industry. So basically, if government goes ahead and says whatever rate is told in the tariff, they have gone ahead and fixed that rate as lower now government is realizing that the rate should be higher, then for the time being government will go ahead and levy the duty as protective duty. But actually it is because the basic custom duty was lower, it should have been higher, they go ahead and levy for the time being as protective duty, and for that they will go ahead and give one notification. When protective duty is imposed, it is always deemed that the protective duty was specified in the first schedule as the duty leviable on such goods. So in the first schedule it was written 10%, protective duty ka notification given, it will be deemed that actual duty on those goods was 20%, 10% basic custom duty, 10% will be levied as protective duty. Remember always, if notification is issued by the government going ahead and levying protective duty, and if the parliamentary session is going on, in that parliamentary session they have to go ahead and introduce a bill and make the amendment to the custom tariff act. Basically they should go ahead and amend the rate which is told in the custom tariff act. If parliamentary session is not there ongoing, the next parliamentary session a bill has to be introduced and the amendment should be done in the custom tariff act. Sir, if they introduce the bill and the bill is not passed within 6 months in the parliament, then the notification imposing protective duty will cease to have effect. I hope everyone is clear. Chalo. Now, protective duty is imposed. Now, they are going ahead and telling duration of protective duty in section number 7. Section number 7 goes ahead and says protective duty shall be effective up to the date specified in the first schedule. It can be increased and decreased by the help of notification. Government, as and when government thinks fit, government can increase and decrease it also. In case of increase, approval from the parliament will always be required. Right, everyone? Please come back. Now, one more section is there, section number 8 and section number 8A. Basically, section number 8 and section number 8A is whatever government is going ahead and charging duty, the basic custom duty on any item. If government feels in an emergency, government has to immediately increase or decrease any import duty or export duty. Then government can use section number 8 and section number 8A ka power. It is just the emergency power with the government to increase or decrease the custom duty. Right, everyone? Not very important from exam point of view, but I've gone ahead and given two small paragraphs over here. Everyone, please come back. We went ahead and learned assessable value. On the assessable value, basic custom duty, standard rate or preferential rate of duty. Then we levy protective duty. Whenever protective duty is imposed, always remember one thing, you have to introduce the bill in the parliament, get it passed. Right, everyone? And you have to amend the custom tariff act. Now, once the total has come over here, you will have to go ahead and levy what? CVD under section number 3.1. Everyone listen to me very carefully. What is CVD 3.1? CVD 3.1 is leviable on alcoholic liquor for human consumption, tobacco product and HP man, high speed diesel, petroleum crude, motor spirit, aviation, turbine fuel and natural gas, and it is levied at the rate of excise duty on like articles manufactured in India. As of now, there is GST, not many articles pay excise duty is there, but whatever like item excise duty is there in India, if you go ahead and import, they are telling we will not charge excise duty, we will charge CVD 3.1 to counterbalance the effect of excise duty on the Indian goods. Imported goods pay they levy CVD 3.1. Right, everyone? Not very important from exam point of view. I have given a small paragraph. You can go ahead and read it at home. The next one over here is total will come. What is the total, everyone? A civil value, basic custom duty, protective duty, total came. On the total, you levied CVD 3.1. Basically, on those items in India on which excise duty is there, if you go ahead and import, how much excise duty is there, that much they are telling we will levy CVD 3.1. CVD 3.1 on alcoholic liquor for human consumption, government goes ahead and notifies. Now the total will come over here. On the total, always remember one thing, not on the total, but on the whatever the duty is there, basic custom duty, protective duty and CVD 3.1, social welfare surcharge at the rate of 10% will be levied. Always remember one thing, social welfare surcharge is on CVD under 3.1, protective duty and basic custom duty. Social welfare surcharge which is there was introduced by the Finance Act 2018, section number 110. Social welfare surcharge is 10% on imported goods and only on imported goods and not levied on export. It is levied to fulfill the government commitment towards what? Towards finance, education and social security. Finance, education, health and social security, and it is levied. Only remember one thing, basic custom duty, protective duty and CVD 3.1 pay social welfare surcharge will be levied at the rate of 10%, not levied on export, only levied on import. Right, everyone? Now the total will come over here. After you levy basic social welfare surcharge, one total will come. Yes, everyone? On this total, you have to go ahead and levy CVD 3.5. What is section number 3.5 ka CVD, everyone? 35 ka CVD. Earlier on Indian goods VAT and sales tax was there. Now on imported goods also they are going ahead and telling earlier VAT and sales tax should be charged, but in the name they had gone ahead and named it as CVD 35. It was to counterbalance the effect of VAT and sales tax on Indian goods. They went ahead and introduced CVD 35, but now on Indian goods VAT and sales tax is not there, and hence the extent of applicability of CVD 35 is only limited to one item, which is what? HP man, and it is levied at the rate of maximum 4%. High-speed diesel, petroleum crude, motor spirit, aviation turbine fuel and natural gas pay 4%. CVD 35 is being installed. Not installed, implemented, basically charged. Now the total will be over here. Now on this total you go ahead and levy safeguard duty under section number 8B of the Custom Tariff Act. Everyone over here, when you come below safeguard measure, section number 8B goes ahead and tells central government, power of the central government to apply what? Safeguard measure. Now first of all, when will safeguard measure be charged? Whenever government goes ahead and sees, everyone, circumstances for which safeguard measures, not duty, safeguard measures will be imposed are if central government, after conducting an inquiry as it deems fit, is satisfied that any article is imported into India in increased quantity is coming into India, and that is going ahead and causing what? Causing or threatening to cause serious injury to the domestic industry. Always remember, causal link has to be established. What is the cause? The cause is increased quantity coming into India, and because of the increased quantity, what is happening over here? The injury is happening to the domestic industry. To protect the domestic industry, government will go ahead and say increased quantity we have to stop, and to stop that we will implement safeguard measures, right everyone? Then it may by notification apply safeguard measure to that article as it deemed fit. Basically injury margin, how much ever is the injury margin, that much safeguard duty is being charged. Sometimes instead of duty they go ahead and implement other safeguard measures also. Objective of safeguard is to protect the domestic industry in aiming to make them more competitive. Increased quantity is coming from US to India. Indian domestic industry is telling, sir, the market is flooded. Because the market is flooded, the price is falling. Now the imported goods, they are able to survive, but we are not able to survive because our cost is only too much. Government asked why? Because sir, we are not competitive, we don't have good machinery. So government will give you some time to become more competitive by going ahead and implementing on the imported goods safeguard measures, right everyone? Sir, what are the modes of safeguard? Number one, government can go ahead and what are the different ways to safeguard? Government can impose safeguard duty. Government can impose tariff rate quota. So government will go ahead and take last 3 years ka import. Average will be taken and government will say this much is the quota. For up to this much, if goods are coming into India. So last, supposingly calculators were imported into India. Last 3 years ka data, statistics, whatever is, for whichever last 3 years statistics is available, they will take the average of that import. Now average of that import, government will go ahead and say that this much is the quota. If you get up to this much item, if this much calculators are coming into India, no rate of duty or low rate of duty. After this, safeguard measures will be implemented or safeguard duty will be charged, and that is known as application of tariff rate quota. One quota will be fixed. Up to that, they will go ahead and charge no safeguard duty or low safeguard duty. But once you exceed the quota, then safeguard duty will be charged. So government, what are the measures of safeguard? Number one, they can impose safeguard duty. Number two, application of tariff rate quota. Number three, such other measure as the central government may consider appropriate. Government will impose some restrictions, etc. Sir, what is the minimum level of tariff rate quota? Minimum level is last 3 years ka average. Average of last 3 years of import, basically average level of import in the last 3 representing year for which statistics are available. Sir, what is the exemption for safeguard measures? Everyone listen to me very carefully. Who are the people? Exemption from safeguard measures. So if an article is imported from outside India, from one developing nation, remember one developing nation, brother nation, we are developing, he is developing, brother, plus the import is not exceeding 3% of the import of that article into India, then no safeguard duty exemption will be given. Now, if article is coming from more than one developing country, 3 developing country for an example, then remember, sir, if it is for more than one developing country, then you have to see which country say it is less than 3. So, supposingly this country it is 4%, developing plus less than 3% and total should be up to 9. Remember, less than 3% and total should be up to 9. For an example, this country is a developing but 4%. What will you do? No, sir, this country less 2%, this country 2%, take the total, it is only 4%, both country ka import will be exempted. So they are telling article originating from developing country, so long as the share of that article does not exceed 3% of the total import of that article. Article is originating from more than one developing country, then they are telling the aggregate of import with less than 3%, means all the countries with less than 3 and total should not be exceeding 9%, then all of them will be exempted. Remember, developing country less than 3, total up to 9. Then, sir, if import is made by SEZ or 100% export oriented unit, in that scenario also they are going ahead and telling we will not go ahead and impose safeguard measure, but if the EOU or the SEZ clears the goods into India or makes the goods and those goods are cleared into the domestic tariff area, in that case safeguard measures or safeguard duty will be imposed on those articles which were cleared into the domestic tariff area. Or if in the notification it is told that specifically that 100% EOU or SEZ importing also safeguard will be imposed, then safeguard duty will be applicable. Otherwise, safeguard duty is not applicable on EOU, 100% EOU or SEZ. Remember one thing, what are the exemptions given for safeguard measure? Number one developing country safe goods are coming and the share of import is up to 3%, no safeguard duty. More than one developing country, each with less than 3, up to 9 total, then no safeguard duty. And 100% EOU or SEZ if it is importing, then no safeguard duty. Sir, can provisional duty be imposed? Provisional duty, yes, government can go ahead and impose provisionally also. On finalization, whatever the difference is there, government will go ahead and refund. Maximum duration of provisional imposition is how much? 200 days. And sir, retrospectively not allowed. Maximum period of imposition 4 years and extendable up to what? 6 years. Total can be how much? 10 years. Now the next one over here, everyone listen to me very carefully. First, you will have to go ahead and take assessable value, basic custom duty, protective duty, total will come. On the total, you will go ahead and impose CVD under section number 3.1 and then the total will come on that social welfare surcharge. Then the total will come CVD 3.5, then the total will come and then safeguard duty will be calculated. Safeguard duty is generally calculated on the assessable value under section number 3.1. Always, 14.1 or 2, 14.1 or 14.2 on that assessable value, basically safeguard duty will be calculated. Now what happens? Sometimes some government go ahead and give subsidy to their people to go ahead and export the goods to India. In that scenario, Indian government can go ahead and charge what? Anti-subsidy duty. It is known as CVD on subsidized article under section number 9. Let's go ahead and read this. Section number 9 over here says CVD on subsidized article. So for an example, one country is going ahead and giving subsidy. Indian government will go ahead and give what? Charge anti-subsidy duty, which is also known as CVD on subsidized article. It is actually known as CVD on subsidized article. One country giving subsidy, Indian government charging anti-subsidy duty, which is CVD on subsidized article. So subsidy and injury, whichever is lower, will be charged at CVD on subsidized article. CVD is equal to amount notified that is lower of the subsidy or injury margin. Causal link, what is the cause? Subsidy. Because of the subsidy, what is happening in India? Injury. So sir, we will go ahead and charge CVD on subsidized article. Sir, what is the maximum CVD? The amount of subsidy. The amount of subsidy can be the maximum CVD that can be charged. When it is deemed, when is it deemed that a subsidy is existing? There are financial contribution by the government or any public body within the territory of exporting country. What is happening? The person who is exporting, for an example, China say one person is exporting and that person is given some financial contribution by the government. Government is going ahead and supposingly there is a direct fund transfer which is given by the government. Might be government revenues which are there, government is not collecting and leaving it off, saying taxes will not collect from you, and government provides goods or service other than general infrastructure. It will be deemed that in this scenario government is trying to help the person by giving him subsidy so that he exports the goods to India, and Indian government will charge CVD on subsidized article. The next one over here is government grants or maintains any form of income or price support which directly or indirectly increases the export of any article into India. So if government is going ahead and maintaining any form of support or grant, then in that scenario also it will be deemed that there is a subsidy in that country and Indian government will charge what? CVD on subsidized article, which is subsidy or injury, whichever is lower. Everyone, what is the ways of circumvention? What are the ways of circumvention? That person was going ahead and sending supposedly calculator into India. Indian government will then told on calculators from today we'll go ahead and charge what? CVD on subsidized article. Then what will they do to circumvent in order to avoid the duty and make it ineffective? They will go ahead and try to circumvent. They will try to find out the route how they can make the duty useless or nil. Basically, they are trying to find out routes how they can make the CVD ineffective. And sir, what are the routes to make the CVD ineffective? Circumvention by altering the description or name or composition of the article on which duty is imposed, by import of such article in unassembled or disassembled form, by changing the country of origin, sending it to Dubai, and from Dubai sending it to India, or sir, by any other manner whereby the CVD so imposed is rendered ineffective. These are the ways of circumvention. If government sees that there is a circumvention, what will the government do? Investigation will be carried out by the central government and CVD will be imposed on such article from such date, not earlier than the date of initiation of the inquiry, as the central government may by notification in the official gazette specify. Sir, can there be an absorption? What happened over here? In India, we went ahead and charged 10 rupees as CVD on subsidized article. The exporter over there in the exporting country went ahead and told, okay, fine. In order to maintain the same price in India, what he did to the importer, he told, I will go ahead and reduce the price further by 10 rupees. It means he has gone ahead and absorbed the subsidy, which was CVD on subsidized article, which was charged in India. The exporter absorbed it. And that is known as absorption of CVD. Absorption of CVD, when central government went ahead and on inquiry is of the opinion that absorption has taken place, then making the CVD ineffective, it may by notification, it may modify such CVD to counter the effect of such absorption. Everyone over here in India, we went ahead and charged CVD on subsidized article as 10 rupees. The exporter from the other country went ahead and reduced the price by further 10 rupees. It means he is going ahead and doing absorption. In that scenario, whatever price he is reducing further, that much amount of CVD will be charged by the government further. Government is telling, if you are absorbing, we will go ahead and increase the duty, we will modify the duty which was already levied. Right, everyone? From such date, not earlier than the date of initiation of the inquiry, as the central government may by notification in the official gazette specify. Sir, when is it deemed that absorption has taken place? Baba, if there is an export price which has come down, India ka resale price also should be coming down, but there is no change. What is happening? Export price has come down, but India may, it is still selling at the same price. Then it is meant that absorption has taken place. Everyone over here, if there is a decrease in the export price of an article without commensurate change in the resale price in India of such article imported from the export country or the territory, or under such other circumstances as provided by the rules. When is it told that absorption has taken place? Supposingly India may, we went ahead and India may the goods which is there is selling at 120. Now everyone over here, we went ahead and charged 10 rupees ka duty and he went ahead and reduced the 10 rupees. It means he is trying to do absorption. Export price came down. Indian price is not changing. India may it was selling earlier also at the same price, now also at the same price. Then they are going ahead and telling there is an absorption which has taken place. Can I go ahead, everyone? The next one over here is provisional imposition. Is it possible? Yes, but on finalization, whatever the extra taken will be refunded. No CVD if you are going ahead and importing. Who is importing? 100% EOU. CVD on subsidized article will not come. 100% EOU is importing, or SEZ is going ahead and importing. But if they clear in the domestic tariff area or make goods and clear those goods in the domestic tariff area, then CVD on subsidized article will be imposed. Can retrospective imposition be there? Yes, sir, from a date prior to the date of imposition, but not 90 days from the date of notification. What is the duration, everyone? 5 years, further extendable up to 5 years, means extendable by 1, 2, 3, 4, 5. Right, everyone? The next over here is, if duty is under review on expiry, then it will continue to be levied for a further period of 1 year. Sir, can the duty be revoked temporarily? Yes, sir. 1 year at a time, temporary revocation of CVD on subsidized article can be done. Everyone over here. Now, what did we go ahead and learn? We went ahead and learned a civil value. On that basic custom duty will be charged. On the basic custom duty, productive duty, then total will come. CVD under section number 3.1. Total will come. Then social welfare surcharge. Total will come over here. Then CVD 3.5 and the total will come on that. Safeguard duty will be imposed. CVD on subsidized article will be imposed. And now is the anti-dumping duty. Everyone always remember one thing. If one country, one person is going ahead and dumping the goods into India, whatever is the dumping he is doing or the injury, whichever is lower, that much amount of anti-dumping duty will be imposed. Let's go ahead and see anti-dumping duty. You dump the goods into India, we will go ahead and protect our domestic industries by going ahead and charging anti-dumping duty. Always remember one thing, anti-dumping duty over here, section number 9A says anti-dumping duty. Dumping happens when article is exported from any country at a price at lesser than its normal value. Normal value is supposedly 100 and you exported at 50. What is the margin of dumping? 50 rupees is dumping. Everyone over here, sir, how do we calculate dumping? Always remember one thing. USA, supposedly one person is going ahead and sending the goods. Normal value means its cost plus profit, or the normal selling price in that country is 100, or might be he is going ahead and selling the goods to another third country at 100 rupees. What is normal selling price? Normal value means the normal selling price in that country, or he is going ahead and exporting in other country at 100 rupees, or might be his cost of production plus profit is 100 rupees and he went ahead and exported it to India. Export price is 50. What is the margin of dumping, everyone? Margin of dumping is 50. The goods have come to India over here. In the Indian port, the goods have come. I am going ahead and clearing, and 50 rupees plus basic custom duty, social welfare surcharge, it is costing me 61. In the India, normal selling price or the landed price, you will have to see. What is the landed price? Value, whatever is the import ka value, basic CIF value, basically the CIF plus basic custom duty plus the, okay, I will do one thing. I will go ahead and take the CIF little more because it was exported at 50. CIF might be 60. Basic custom duty might be 20 rupees and social welfare surcharge is supposedly 20 ka 2 rupees. How much it is? 82 rupees is the landed price. 82 rupees is the landed price. But sir, normal selling price in India is supposedly 100 rupees. How much is the injury? 18. So sir, here margin of dumping is 50. Injury margin is 18 rupees. Whichever is lower, 18 rupees, that much amount of what will be levied? Anti-dumping duty. Are we clear, everyone? Anti-dumping duty, how to calculate? Sir, whatever is the normal selling price in the, basically, that country may they are selling at 100 rupees supposedly, or cost plus profit is 100 rupees. He is exporting at 50. Difference is margin of dumping. In India, the goods have come. In India, normal selling price of those goods, fair selling price is 100. And sir, those goods have landed at 82. Whatever the differential is the injury margin. Always remember one thing. They will go ahead and charge anti-dumping duty, which is lower of margin of dumping or injury margin. Margin of dumping means normal value minus the export price, which I have written over here. Injury margin also has been written. Injury margin is what, everyone? Always remember, fair selling price minus the landed value of the dumped goods. Right, everyone? Sir, when is the date of commencement of anti-dumping duty? Always remember that when there is no provisional duty imposed, the date of publication of the notification imposing anti-dumping duty in the official gazette, the day it is told that anti-dumping duty will be charged and it is published, that notification is published in the official gazette, the date of publication of the notification is deemed as the date when anti-dumping duty will be effective. Sir, when provisional duty is imposed, the date of publication of the notification imposing provisional duty in the official gazette, when anti-dumping duty is imposed retrospectively from a date prior to the date of imposition of the duty provisionally, such prior date as may be notified in the notification imposing anti-dumping duty retrospectively. Sir, what is the date of commencement? The date of commencement will be such retrospective date, but not beyond 90 days. Right, everyone? From the date of such notification of provisional duty. Can I go ahead, everyone? The next one over here, sir, whatever we went ahead and learned in CVD for subsidized article, circumvention measure, absorption, right, everyone? All will apply over here also. Then Sir, no anti-dumping duty on articles imported by 100% EOU or SEZ unless specifically made applicable or it is used for manufacture of goods cleared in the domestic tariff area or those goods are basically cleared in the domestic tariff area. Sir, provisional imposition, is it allowed? Yes, sir, pending determination. Refund will be given on final determination. No anti-dumping duty. This I have already gone ahead and told you. That you can cut this line. I have already told you. Retrospective imposition, yes, sir, but not beyond 90 days. Duration, 5 years plus extendable up to 5 years. So 5 years, 1, 2, 3, 4, 5. Again, if you want, you can further go ahead and charge for up to 5 years. Can I go ahead, everyone? If duty is under review on expiry, it will extend for 1 more year. Sir, if it can be revoked temporarily for a maximum period up to, means shall not exceed up to 1 year at a time. At a time, 1 year. Can I go ahead, everyone? Sir, refund of anti-dumping duty, supposingly, we are not talking about provisional refund. Provisional refund of anti-dumping duty is given under section number 9A. Section number 9AA says, supposingly, government went ahead and charged anti-dumping duty from an importer. Later, importer goes ahead and says, sir, what anti-dumping duty you are charging is 25 rupees, but actually margin of dumping is only 20 rupees. How can you charge more than the dumping? So, whatever is the extra amount that will be refunded by the government, that is told in section number 9AA. When importer goes ahead and proves to the government that, sir, whatever anti-dumping duty you are charging is in excess of the margin of dumping, then government will go ahead and refund the amount which was being charged excess. Right, everyone? Please go ahead and read this at your home. Now, sir, no levy under section number 9 or 9A. Section number 9B goes ahead and says there will be no levy of anti-dumping duty, so or CVD on subsidized article when they are going in and telling both duties first of all cannot be levied together, and then duties cannot be levied for what reason? You can't go ahead and give this reason and charge CVD on subsidized article or anti-dumping duty. They are telling both duties cannot be levied for the reason that the same is exempted from duty borne on like article when meant for consumption in the country of origin or by reason of refund of such duty. In the origin country might be a refund of duty is given and you are telling it's a subsidy which is there and I want to go ahead and charge CVD on subsidized article. No, you can't do. Might be the exporting country may refund of duty is given because exports pay refund of duties are given. You can't go ahead and call it subsidy, or you can't call it that they are going in and exporting to the country at a very lower price and anti-dumping duty will be charged or CVD on subsidized article will be charged. No, you can't do that. Then they are going in and telling if import is happening from a member of the World Trade Organization or most favored nation, you can't go ahead and charge CVD or anti-dumping duty unless you go ahead and determine what injury in the prescribed manner. Right, everyone? Please remember this point. They go ahead and ask sometime no levy under section number 9 or 9A, basically no levy of CVD or anti-CVD on subsidized article or anti-dumping duty if 3 points. Remember, both can be charged, both cannot be charged together. Then both duty cannot be levied because of the reason that the like article, the same is exempted from the duty or by the reason that sir, refund of such duties are given in the origin country or import of article, they are going in and telling if it is done from a member of the World Trade Organization or most favored nation, in that scenario you can't go ahead and levy anti-dumping duty or CVD on subsidized article unless you go ahead and determine the CVD or anti-dumping duty in the manner prescribed. Right, everyone? Everyone over here now. Sir, please come back. I went ahead and told you about safeguard, CVD and anti-dumping duty. The total value will come. Everyone listen to me very carefully. This total value is known as value under section number 38 and on the 38 ka value section number 37 mein what is levied? IGST. This value is also known as 310 ka value and on the 310 ka value GST compensation cess is levied under section number 39. Always remember one thing, on Indian goods IGST is levied 18%, on imported goods also IGST will be levied at 18% under section number 37. CVD under section number 37. CVD under section number 37 is levied on the value under 38. Then we have if Indian goods pay IGST is there, imported goods also IGST under section number 37. Indian goods pay GST compensation cess, imported goods also GST compensation cess under section number 39 on the value under section number 310. Right, everyone? And you will get a total. Now I have gone ahead and told about 3.7 over here. 3.7 means IGST is levied on, IGST shall be levied on any article imported into India except alcoholic liquor for human consumption and HP man, because on that GST is also not there. So section number 3.7 mein IGST also will not come. Then at the rate not exceeding 40% on a like article on its supply in India. India में if like article पे 18% IGST is there, import पे also 3.7 में IGST at the rate of 18% will be charged on the value which is determined under section number 3.8 or section number 3.8a. 3.8a goes ahead and talks about bond to bond transfer. Always remember, in case of bond to bond transfer, please go ahead and take for levy of IGST or GST compensation cess. Remember always, when you are going ahead and calculating the value for the purpose of levy of IGST, you can take on bond to bond transfer. On bond to bond transfer, take 3.8 ka value or the transaction value whichever is higher. For the purpose of levy of IGST under section number 3.7, you can take 3.8 ka value or 3.8a ka value. 3.8a ka value says, sir, this value which is determined under section number 3.8 or the transaction value whichever is higher. Everyone also remember one thing, sir, GST compensation cess is also levied under section number 3.9 and it is levied in case of bond to bond transfer. If it is there, it will be levied on 3.10 ka value which is over here or transaction value whichever is higher. So 3.9 is also imposed on 3.10 ka value or the transaction value whichever is higher, and this is told under section number 3.10a. I hope everyone is clear. Always remember one thing, everyone. Generally 3.7 ka IGST is charged on 3.8 ka value, 3.9 ka GST compensation cess is charged on 3.10 ka value, and this is over here. But if it's a bond to bond transfer, in that scenario it is being told that IGST or GST compensation cess will be charged on 3.8 ka value or 3.10 ka value or the transaction value whichever is higher. Sir, if bond to bond transfer has happened for partial goods, then for partial goods you take the 3.8 ka value partially or the transaction value whichever is higher, and for the remaining goods which you are going to clear, please take 3.8 ka value and accordingly make the tax ka payment. The same thing has been told 3.7, 3.8, 3.9, 3.10 and 3.10a. Then we have trade agreement over here. In trade agreement, what is being told, everyone? They are going ahead and telling whenever Indian government and any other country ka government have a trade agreement and there is some rate which has been specified, then the rate as decided in the trade agreement will prevail over the Custom Tariff Act ka first schedule ka rate which is being told. That will not prevail. What is told in the trade agreement will prevail. Homework, everyone, you can read at home. Might be they go ahead and ask you a small question. Write a note on trade agreement. Everyone over here, sir, whenever any duty is being charged from me, can I go for an appeal? Always remember, Central Excise and Service Tax Tribunal which is there, you can go for an appeal within 90 days with a fees of 15,000. Social welfare surcharge I went ahead and told you. The next one over here is Agriculture, Infrastructure and Development cess. Government has gone ahead and told on specified products at specified rate. We will go ahead and basically on notified or specified goods at notified rate. Specified goods at notified rate, government will go ahead and charge, like kabli, chana, gold, etc. Government will go ahead and charge what? Agriculture, Infrastructure and Development cess. This cess will be used for financing the development of agriculture and development needs of agriculture basically. And then this cess is also in addition to other duties of custom. The cess AIDC is calculated on the value under section number 14, basically section number 14.1 ka value or 14.2 ka value, which is the transaction value or the tariff value. Right, everyone? Remember, for your exam purpose over here, this chapter is an A graded chapter. The flow is very important. You have to remember, first of all, take the transaction value or tariff value, add basic custom duty, which is standard rate or preferential rate. Then you have to add protective duty, total will come. On that, you have to go ahead and add CVD 3.1 on the value under section, on the value which is A point over here. The total pay, you will have to go ahead and charge, not on the total. Now, on the basic custom duty, protective duty and CVD under 3.1, you will charge social welfare surcharge at the rate of 10%. Then on the total, you will go ahead and charge what? CVD under section number 3.5, which is to compensate VAT or sales tax, 4% only on HP man. Now the total will come. Then you will have to go ahead and charge Safeguard duty. Safeguard duty is always on accessible value. Basically, they will tell you in the exam how to calculate. Remember, safeguard duty, then CVD on subsidized article, and anti-dumping duty will be charged. Baba, always remember anti-dumping duty is 9A. Anti-dumping duty is under section number 9A, right everyone? Then the total will come over here. This total is known as 38 ka A, 38 ka total or 310 ka total. On 38 ka total, section number 37 my IGST is charged. 310 ka total is the same. On that, GST compensation says under section number 39 is being charged over here, right everyone? Now you will get a total. In the exam, if they go ahead and ask you, please tell the total of the custom duty. Remember, basic custom duty, protective duty, CVD under section number 3.1, then social welfare surcharge, CVD 3.5, all this safeguard duty, CVD on subsidized article, anti-dumping duty, IGST and GST compensation says this is the duties of custom. One more thing which I went ahead and told you over here, please remember that sir, whenever it's a bond to bond transfer on 3.8 ka value or transaction value, we'll go ahead and charge whichever is higher, on that we'll go ahead and charge IGST. Under section number 3.8 it is told that 3.8 ka value or 3.8 ka value, 3.8 ka value or transaction value whichever is higher, that is told in section number 3.8A, that on that IGST will be charged. Sir, then we went ahead and learned 310 ka value or transaction value whichever is higher, on that GST compensation cess will be charged in case of bond to bond transfer. Also remember one thing, bond to bond transfer mein last transaction value you have to take. Last transaction has to be taken. Last transaction value if it is a multiple sale which is there, right everyone? Sir, if it's a partial sale, partial was bond to bond, partial was normal. For normal 3.8 ka value, for bond to bond transfer, partial amount of 3.8 ka value and transaction value whichever is higher. I hope everyone is clear till here. Listen to me very carefully. Everyone over here now. We are done with the chapter. Listen to me very carefully. You have to remember one thing. This flow is very important. It's an A graded chapter everyone. 4 to 6 marks you can expect. This flow is very important for exam. Secondly, you should remember section number 3.7. You should remember section number 3.8. 3.8A, 3.9 and 3.10 and 3.10A. Besides this, if you remember safeguard measure, that is also very important. In that, CVD on subsidized article is also very important, and then anti-dumping duty is also very important. These 5 points, which is anti-dumping duty, CVD on subsidized article, safeguard measure, 3.7, 3.8, 3.9, 3.10 is also very important, and this flow is very important for your exam. Other than this also, I've gone ahead and revised everything. I will go ahead and close my revision on types of duties over here. Congratulations. Done. All right, students, let's go ahead and now start revising our next chart. The next chart is on baggage. Everyone over here. Baggage ka when you read the definition, baggage includes means first of all the baggages which you get along with you when you are coming from outside India, and also it includes unaccompanied baggage. Might be you are coming from outside India, you had 10 suitcase with you, 2 suitcase came along with you, 10 suitcase with the airline company told will send later are not accompanied with you, are not accompanied by you, but those are also unaccompanied baggages, and unaccompanied baggages also baggage provisions are applicable, but it does not include, baggage does not include motor vehicle. Baba, motor vehicle you can't go ahead and get you can't go ahead and get motor vehicle as baggage. Now baggage may we have section number 77 which goes ahead and says that the owner of a baggage has to go ahead and make a declaration of its content in baggage declaration form. So whenever you are coming from outside India, sir, whenever you are coming from outside India, you have to go ahead and make a declaration of the content of the bag in the baggage declaration form. Okay, sir. Section number 78 goes ahead and says the rate of duty and the tariff value applicable to baggage will be as on the date you are going ahead and filing the baggage declaration form. The day you file the baggage declaration form with the custom ka officer, that day ka rate of duty and tariff value will be applicable on baggage. Sir, basic custom duty on baggage is exceeding the general free allowance is always 100%. However, owing to an exemption, currently the rate of duty is 35% because 65% exemption is given. But always remember, 35% paid, 10% social welfare surcharge will be applicable, and hence the duty will become 38.5%. Sir, always remember, if you are getting in your bag Supposingly, firearm, cigarettes, cartridges means firearm ka bullets which are there more than 50, or cigarette, cigar, tobacco more than 100, 25 and 125 gram. So cigarette 100, cigar 25 stick, and tobacco 125 gram. More than that if you are getting, then 100% duty will be applicable. Plus courier imports ka case mein also 100% duty will always be applicable. ठीक है sir. Section number 79 goes ahead and says, always bona fide baggage will be exempted from duty. So the proper officer will always allow bona fide baggage to pass duty free. Articles which have been used of the passenger or crew member, your personal effect, they will always go ahead and allow you to clear without any duty. Any article for use of the passenger, family, gifts, souvenirs, etc., always within the limit as told in the baggage rules. Now, section number 80 over here. Section number 80 goes ahead and talks about temporary detention of baggage, where the baggage of a passenger contains dutiable or prohibited goods. Supposingly, you are coming from outside India, you have some dutiable goods or prohibited goods, and you have given a true declaration under section number 77. What are the content of your baggage? Then you can go ahead and request the proper officer saying, sir, I'm coming from South Africa, I'm going to Dubai. In India, I've come some for the time being. I don't want to clear these goods. You keep it with you. When I'm leaving India and going, I will take the goods and go along with me. Then, sir, PO may, at the request of the passenger, detain such article and return it to him on him leaving India. If the passenger is unable to collect, then return through other authorized passenger or as cargo. Done, sir. Now, sir, whenever computation of custom duty has to be done, remember one thing: three kinds of article, which is use personal effect. In the exam, always remember personal effect means always used only. You don't assume new personal effect. No, it is always used personal effect only. Like, sir, your clothes, might be your belt, etc. All these are your used personal effect, which are your daily necessity item. Personal effect means things to satisfy daily necessity, but excludes what? Jewelry. Jewelry is not personal effect. Personal effect and travel souvenir, always within limit. There is no limit. They will go ahead and always allow you to clear. So it says use personal effect, you can clear without payment of any duty. And next, travel souvenir, all this. So, sir, supposedly you went outside India to Paris, you got one small Eiffel Tower. All these are travel souvenirs. Bona fide purpose means might be you got 1, 2, 10, etc. Then they will allow you to clear without payment of any duty. And one laptop computer for passenger greater than 18 years, no value limit, you can clear without payment of any duty. Number 1, personal effect. Number 2, travel souvenir. Number 3, one laptop, no value limit, passenger greater than 18 years. Done, sir. Point is clear. Other than that, now when the officer goes ahead and starts checking, he will see first of all, if you have got annexure 1 item, there are 6 annexure 1 items which are there. Annexure 1 item you can't clear in your general free allowance. Remember, the general free allowance is told in baggage rule 2016. Remember one thing. Baggage rules mein the rule number 1 says my name is baggage rules. Number 2, rule number 2 gives you definition. Rule number 3 and 4 goes ahead and gives you the general free allowance which is there. So if you are a passenger who is arriving from countries other than Nepal, Bhutan and Myanmar, which are landlocked countries. If you are arriving from countries other than Nepal, Bhutan and Myanmar, because Nepal, Bhutan and Myanmar are landlocked countries, other than them, if you are arriving, might be from US, UK, etc. Then if you are an Indian resident, who is an Indian resident? Baba, a resident is a person who is holding a valid passport and normally residing in India. So if you are an Indian resident or you are a foreigner, US ka citizen might be residing in India now, or might be you are a tourist of Indian origin, you have settled now in London, but you have come back, you are a Indian origin ka guy, you have come back to India for a tour, but you are a tourist of Indian origin, then always remember general free allowance other than annexure 1 item. I'll talk about annexure 1 item. You will be given a general free allowance of 50,000. But if you are a foreigner and tourist, Baba, a foreign tourist, then always remember, other than annexure 1 item, your general free allowance will be only 15,000. Infant baby ke liye, infant means a children's up to 2 years, nothing, nil, no general free allowance. Baba, always remember, if infants are there, for infants only use personal effect will be allowed duty free, like their toys, all these used daily necessity items will be allowed duty free. Other than that, no general free allowance. So, sir, if I am a passenger arriving from Nepal, Bhutan and Myanmar, in this case they are going in and telling, except by road. If you are coming by air route, then if you are an Indian citizen, foreigner residing in India, tourist of Indian origin, or if you are a foreign tourist also, then Baba, remember the limit is only 15,000. But for babies, basically infants up to 2 years, the amount is nil. Please be very careful in your exam when to apply 50,000 and when to apply 15,000. Done, sir. Point is clear. Now, sir, whenever they are going ahead and clearing the other articles, they will go ahead and see if the articles are these are the articles which are not covered in general free allowance, that 50,000 or 15,000 ka limit also you have, but still you can't go ahead and clear this item. What are this item? Firearms, guns. If you are going ahead and carrying gun, sir, I will carry gun from outside India. No, Baba, no, I did not tell you. For some people it is allowed, but generally guns etc. are not allowed. Okay. Now, if you are allowed and if you are carrying a gun, then firearm, cartridges more than 50. Sir, cartridges up to 50, you have to clear in your general free allowance. But if you are getting cartridges more than 50, even if you have limit in your general free allowance, it will not be allowed. Because firearms will not be allowed in general free allowance. Even if you have limit, no, you will not be allowed. Cartridges more than 50. Cartridges means all these bullets more than 50 will not be allowed in general free allowance. CCT, Baba, cigarette, cigar and tobacco. Cigarette, how much? Remember, cigarette will be 100, cigar will be 25 and tobacco will be 125 grams. If it is more than this, if it is up to this, then you can clear in your general free allowance. More than that limit, that extra amount will be cleared under annexure 1. And Baba, remember, in this scenario, you will land up paying 100% basic custom duty plus social welfare surcharge. Annexure 1 may, they also talk about alcoholic liquor or wine greater than 2 liters. Supposing you got 4 liters of wine, remember, 2 liters you can clear in your general free allowance. Remaining 2 liters is annexure 1 item. And you know what? Alcoholic wines greater than 2 liters, you can't go ahead and clear it at all. It is a commercial import. Alcoholic liquor or wines greater than 2 liters cannot be cleared under baggage. Baba, it is what, everyone? Commercial imports, and the rate of commercial imports shall be applicable, and that is why they don't go ahead and ask this thing in the exam also. The next one is gold and silver in any other form other than ornament. If you are getting ornament, you can clear in your general free allowance, but sir, might be you are getting bricks, coins, etc. Then in that scenario, that's an annexure 1 item. And flat panel TV, LCD, LED, all these things are also general free allowance. Remember, for that also you have to pay 35% plus 10% social welfare surcharge on the duty which is there. Done. But alcoholic wine greater than 2 liters is always commercial imports which is there. The rate of duty will be applicable as applicable to commercial imports. And remember, gold and silver and flat panel LED or LCD, gold and silver other than ornament or flat panel TV, LCD or LED, 35% plus 10%. Also, supposingly I got a flat panel TV, I have a general free allowance which is there. They will not clear in general free allowance. I have to pay duty only and then I can clear. So these items you can't go ahead and clear in your general free allowance which is there, even if you have general free allowance. Done, sir. So sir, other than the 6 items, cigarette, cigar, tobacco up to 125, 125 gram right over here, alcoholic liquor up to 2 liter right over here, ornaments right over here, cartridges up to 50 right over here. Other article might be you got a personal computer. Personal computer is not laptop. You got a personal computer, you got a camera, you got any other item which is not your personal effect, because personal effect pe to there is no duty. Sir, then they are going ahead and telling. So in the exam, if they tell you camera, mobile phone, personal computer, all this you can write over here, total, and then you will be given a general free allowance as per rule number 3 or 4. Remember, nowadays they have started giving question where the general free allowance is not 50, it is 15,000. So please be careful. If it is a foreign tourist, then it is 15,000. If you are coming from Nepal, Bhutan or Myanmar by air, it is 15,000. Done, sir, and you will be given that deduction, and then the remaining pay you have to pay 35% plus 10%. Don't forget to give that 10% social welfare surcharge. The next one over here, rule number 1 done. Rule number 1 of your baggage rules is my name is baggage rules. Rule number 2 over here is sir definition. Rule number 3 and rule number 4 we learned about the general free allowance. Rule number 5 over here is relating to jewelry. Sir, if you are getting jewelry from outside India, which is ornaments, like all these things, with these are ornaments, then in that scenario, always remember, if your period of stay outside India was up to 1 year, then Baba, whatever is your general free allowance, 15,000 or 50,000, accordingly you have to clear. But if your stay outside India was more than 1 year, then you will have to clear 50,000 or 15,000 तो already their general free allowance. You will be given additional jewelry allowance which will be man के लिए 20 gram and value limit up to 50,000, lady के लिए 40 gram and value limit up to 1 lakh. Coin, bar, etc. are always annexure 1 item, and duty always on the full amount. There is no exemption. 35% plus 10%. So, sir, these 2 points can you please explain? Supposingly, there is one person who has stayed from outside India more than 1 year, and sir, general free allowance of 50,000 and 15,000 is utilized already. ठीक है. Then in that scenario, Mr. Tejas, supposingly he has come, Mr. 18 gram, okay, very good, within limit only, but value should be 50. Value has exceeded by 4,000 and 4,000 rupees pay, 38.50% duty will come. ठीक है. Mrs. Tejas is coming, 35 gram is within 40 gram ka limit, but 1,20,000, it means 20,000 has exceeded on 20,000 rupees, 38.50. ठीक है. Mr. Elden is 24 gram. 24 gram के लिए 48,000 means per gram it is 2,000 rupees. 4 gram exceeded, 4 gram into 2,000 rupees, 8,000 rupees pay. 38.50% duty has to be paid. Remember, if these people had their general fee allowance, then they could have gone ahead and cleared this within the general fee allowance and not paid duty. But here I have told the general fee allowance is deemed to be utilized. Done, sir. Point is clear. Other than that, I've gone ahead and told some important notes. Be alert when the question talks about is in relation to Nepal, Bhutan, and Myanmar. Be also alert when the question is talking about foreign tourist. Please be very careful. Foreign tourist. Always remember 15,000. Don't give 50,000. Okay, sir. Done. Passengers arriving by land route from Nepal, Bhutan, and Myanmar, only use personal effect is allowed. There is no general fee allowance because only in case of Nepal, Bhutan, and Myanmar, air route mein there is a general fee allowance of 15,000 for everyone. Infant, babies, etc. 2 years, up to 2 years, no, only use personal effect. Single article cannot be cleared by two passengers. For an example, Mr. and Mrs. went outside India. They got on returning personal computer 60,000 rupees ka. 50,000 Mr. ka allowance is there. Mrs. ka 50 is there. You can't club and clear one article. Either Mr. will clear or Mrs. will clear. So, sir, general fee allowance not allowed to be pooled. Resident ka meaning, tourist ka meaning. Tourist means a person who is not a resident of India enters India for stay up to 6 months in 12 months period for legitimate non-immigrant purpose. Laptop can be also termed in the exam as laptop computer, notebook computer. Please be very careful. Rule number 6 talks about transfer of residence. Generally, they don't go ahead and ask, but still it's there in your textbook. If you want to refer, you can refer. Otherwise, they don't go ahead and ask any question on this. Rule number 7, currency. Always remember, import and export of currency is always governed in accordance with the provisions of FEMA. Whatever is told in FEMA, that much currency you can get or you can take outside India. Done, sir. Rule number 8 goes in and talks about provision regarding unaccompanied baggage. So, supposingly Priyanka Chopra is coming from outside India and she is carrying along with her some baggages. 10 suitcases were there. She told, sir, I can take only 2. Remaining 8 suitcases, the airline company told, we'll send later. So, sir, unaccompanied baggage pe also baggage ka provisions are applicable. So, they are going in and telling provision regarding unaccompanied baggage. Baggage rules also apply to unaccompanied baggage, but unaccompanied baggage has to be in possession abroad. So, the passenger who has come, it was his or her possession of the passenger and it was dispatched within 1 month of his arrival or further period allowed by the AC or DC. So, supposingly Priyanka Chopra arrived over here. Now, once she has arrived, within her arrival, within 1 month of her arrival, it has to be dispatched. Then only it will be called as unaccompanied baggage. Within her arrival, within 1 month, it has to be dispatched. Dispatched within 1 month of his arrival or further period can also be allowed by the AC or DC. Sir, unaccompanied baggage might be before arrival only unaccompanied baggage landed. Then, sir, when can unaccompanied baggage land? Can it land prior? Then they are telling unaccompanied baggage may land 2 months before the arrival of the passenger. For an example, Priyanka Chopra is coming for a shooting. She told, okay, let me send my suitcases before only, then I will come to India. She sent her suitcase. Then within how much time she should arrive in India? They are telling within unaccompanied baggage may land. So, unaccompanied baggage has landed within 2 months, basically 2 months before the arrival of the passenger or such period not exceeding 1 year as the ACDC may allow for reason to be recorded. For an example, Priyanka Chopra ka suitcase came, landed, she could not come, might be she fell sick, might be pandemic came and hence she could not come. So, this 2 months ka period can also be extended by 1 year for reason to be recorded like illness, natural calamity, etc. This chapter from exam point of view, this baggage wala chapter which is there, baggage and baggage rules ka chapter which is there from exam. Okay, rule number 9 also is over here. Rule number 9 goes ahead and says application of baggage rules to crew members. Sir, on duty crew members who are there, they are allowed to bring chocolate, cheese, cosmetic, gift item for self or family only up to 15,000. But once they terminate their job, then baggage provision will be applicable to them as if they are applicable to normal passengers also. Baggage rules applicable to crew members as if he or she is a passenger. Done, sir. Point is clear over here. Baggage provisions from exam point of view. The things to be taken care, everything, all the important notes I have told. One thing which you have to be very careful, whether 50 is applicable or 15 is applicable, that is very important. Jewelry related, you have to be very careful. If the stay is more than 1 year, then sir, you will get additional jewelry allowance. That also you have to be very careful. So the calculation, computation of custom duty in case of baggage is very important. Secondly, the section number 80 also they go ahead and ask questions sometimes. So supposingly you are coming from outside India, you have got some prohibited item or you have got some item which you don't want to clear, dutiable item, then you can give a true declaration and you can keep the goods with the detain the goods with the proper officer, and when you're leaving India and going, you can take the goods and go, or you can send it outside India and there will be no payment of any duty which will be required. Baggage from exam point of view, I can say it's a B graded chapter. 4 to 5 mark is something which you can expect. Number 1 is computation of GST, computation of custom duty. Section number 80 is important over here. So this computation of duty may, all this whole point which I have drawn over here is very, very important. You also have to be careful about this general fee allowance, how much is allowed. This jewelry allowance, how much is allowed. This also you have to be careful. Done. Important notes to anyways I have told you over here. Done, sir. Point is clear. I'll go ahead and close my revision on baggage over here. Alright students, let's go ahead and now revise the next chart. The next chart is on assessments and audits. Sir, what kind of a chapter it is? It's a C graded chapter from exam point of view, but let's go ahead and cover it quickly. Everyone over here now. Sir, what do you mean by assessment? Assessment ka meaning, they can go ahead and ask you in the exam. So from here till here is your assessment ka meaning. It says assessment means determination of the tax liability of any goods. Sir, determination of the tax liability, okay, then the amount of duty, taxes or any other sum so payable if any under this act or under the custom act or the custom tariff act or any other law for the time being in force. With reference to tariff classification means when you are going ahead and doing the assessment, you have to refer to tariff classification, value, is there any exemption or concession, the quantity, if the valuation is quantity based, sir, weight, volume, measurement or any other specific, you should see the origin. Baba, if it's a origin which is basically supposingly, if I go ahead and tell over here, origin means if it is a preferential nation, in case of preferential nation, you will go ahead and get preferential country का केस में one preferential rate of duty, so origin also has to be seen. Any other specific factor, and it includes self-assessment, reassessment, provisional assessment, and any other assessment in which the duty assessed is nil, that is also included in self-assessment. That is also included in assessment. After that, now if I go ahead and tell you self-assessment and reassessment, what do you mean by self-assessment and reassessment? It says over here that sir, importer will file bill of entry under section number 46, exporter will file under section number 50. Importer or exporter self-assess the duty liability. They will go ahead and once they go ahead and file the bill of entry, for import ka case mein I'll file bill of entry, export ka case mein I'll file shipping bill or bill of export. Now once I go ahead and file bill of entry for import and export ka case mein shipping bill or bill of export, sir, proper officer will verify them. Now once the proper officer goes ahead and verifies, for the purpose of this for this purpose means for the purpose of verification, he can examine or test the goods also. And sir, selection of case for verification is based on risk evaluation, because generally when you file your shipping bill or bill of export or your bill of entry, custom automated system gives clearance orders automatically. But sir, if it's a bill of entry or shipping bill which has been picked up, then officer will go ahead and do the verification. If while doing the verification, he can require the importer or exporter to produce additional document or information, and on verification, if the proper officer finds that the self-assessment was done correctly, then he will give a clearance order. If the self-assessment is not given clearly, if the self-assessment is not done correctly, then sir, he will go ahead and do the reassessment. Now he will tell, hey, this much was payable, this much you have paid, pay the differential. Importer or exporter accept the reassessment, they pay the differential, then he will issue a clearance order, officer will issue a clearance order. But sir, if importer or exporter disagrees, then the proper officer will pass the reassessment order, and within 15 days of the reassessment of the bill of entry or shipping bill, he will go ahead and pass a reassessment order. Within how many days? 15 days of the reassessment of the shipping bill or bill of entry. He will go ahead and pass a reassessment order within 15 days. Okay, sir, point is clear. And always remember, reassessment order will be a speaking order. It should go ahead and state all the facts, etc. Okay, sir, point is clear. Now the next one over here, exam question. Write a note on assessment. Please remember, from here till here is a note on assessment. Exam question, write a note on self-assessment. So beta, this flow chart which I have gone ahead and told you, this you can go ahead and write. Sir, then the next one is provisional assessment. Provisional assessment read with customs finalization of provisional assessment regulation 2018. It says over here that, sir, what are the 4 situations when provisional assessment can be done? Remember one thing, everyone, 4 circumstances or situation when provisional assessment can be done. Number 1, I am unable. Importer or exporter is unable to make a self-assessment. I will tell, sir, I am unable to make self-assessment. Can you please go ahead and do? Then, Baba, he will go ahead and request the proper officer in writing that, sir, provisionally tell me how much is to be paid. Later, we can go ahead and finalize. And on finalization, if there is any differential, I will go ahead and pay. Sir, what are the other circumstances? It goes ahead and says, if proper officer deems it necessary to subject any goods to any chemical test, then proper officer will go ahead and tell these goods, I want to do chemical testing, other testing. Then for the time being, provisionally he will assess the duty and tell you, okay, once the chemical test ka report comes, then final assessment will be done. Okay, sir. Then importer or exporter produces all necessary document or information. You produce all the information or document which was required, but proper officer deems it necessary to carry further inquiry. Then in that scenario, if proper officer wants to do further inquiry, then, sir, he will tell provisionally I will assess the goods and clear it. Finally, what will happen once the inquiry ka report has come, then I will go ahead and do the final assessment. Sir, if necessary documents are not furnished, see here you had furnished, but here if you don't furnish and then if you are not furnishing for proper information or document and proper officer deems it necessary to make further inquiry, then what will happen? Then, Baba, provisionally he will clear the goods. Then he will tell inquiry ka report, let it come, and then I will go ahead and finalize the provisional assessment. And, sir, please remember, for exam it is important, what are the cases when provisional assessment can be done? And remember one thing, in GST, proper officer on his own, in GST he cannot do provisional assessment, but in customs you can also request and proper officer also can go ahead and do. Okay, sir, point is clear. Everyone over here now let's understand the procedure. When provisional assessment is ordered by the proper officer has ordered for the reason that necessary information or document was not given by you, or proper officer requires importer or exporter to produce additional document. In that scenario, what will happen, everyone? Number 1, sir, you will tell him, okay, sir, you want additional document, I will give it to you. But, sir, provisionally you clear the goods. No, later I will give you final documents, all the documents, then you finalize the assessment. So, sir, within 15 days, he will go ahead and tell you what are the documents or details or information required. You have to go ahead and produce within the next 15 days. If you produce, very good. Otherwise, if you don't go ahead and produce the document, then 3 months ka extension can be given by proper officer on his own or on request by given by you. Sir, then after 3 months, you should have given the information. If it is not given, then additional commissioner or joint commissioner can further extend the time limit to give the document by further 3 months. Sir, if I give it, very good. If I don't give it, then information on document not available, then again commissioner can give the extension as deemed fit. And, sir, supposingly till here time was there and here information or document given. Once you go ahead and submit the document, you have to inform the proper officer in writing that, sir, I have given the document. Then within the next 2 months, plus if you can't finalize within 2 months, then again 3 months ka extension can be given by commissioner and finalization of assessment will be done. Always remember one thing, everyone, whenever assessment is being finalized, in case goods are cleared for home consumption, provisionally you had gone ahead and paid 5 lakh, finalization you have gone ahead and paid, supposingly provisional assessment was finalized and 4 lakh you have to pay, then the excess will be refunded. Sir, if provisionally you had paid 5 lakh and finalization is the 6 lakh, then shortfall you have to pay along with interest. Okay, sir. In case of warehouse goods, always remember one thing, please remember, everyone, in case of warehouse goods, they have gone ahead and told final assessment, if greater than provisional assessment, you will have to give excess duty ka 2 times of the bond amount. 2 times of the bond amount has to be given. Okay, sir, point is clear. Everyone over here. Now, supposingly, you are going ahead and asking for provisional assessment. Might be the officer went ahead and told you, sir, we will do the provisional assessment. Why, sir? Because a chemical or other test report is required, or might be officer has to go ahead and do some inquiry or verification is required. Sir, if a chemical or other test report is required or might be inquiry or investigation is required, then provisionally the officer will go ahead and clear the goods. Baba, the same thing which I have written up operates for down also. So provisionally he will go ahead and clear the goods, and then once the test report comes, then or inquiry report or investigation report comes, 2 months plus 3 months may he will go ahead and finalize the assessment. Do you know, in the exam they had gone ahead and asked, this, everyone over here, 2 months plus 3 months, they had gone ahead and asked about it. Finalization के लिए time limit is 2 months plus 3 months. ठीक है sir? And remember one thing, on finalization if you have to pay, you pay, or if there is any extra paid, it will be refunded. In case of warehousing, Baba, always remember excess duty into 2 times. That is what is being told in the, Baba, it is 2 times because it is being told in your provisional assessment ka rules only. I hope everyone is clear. Chalo, let's go ahead. Everyone over here now. But remember one thing, everyone, for your exam, 2 months finalization ke liye, and sir, 3 months ka extension can be given by the commissioner. Everyone over here now. Sir, when they are going ahead and giving your provisional assessment, here or here, always remember they will go ahead and take an undertaking to pay the demand on deficiency. Means they are telling later on if you have to pay anything, you will have to pay, and for that you give us a bond. Plus you have to give along with the bond one security which can be as prescribed for the payment of deficiency on final assessment. Sir, security can be bank guarantee or cash deposit as convenient. Okay, sir? Then this is very, very important for exam. Interest on finalization. Always remember interest will start. In case of shortfall, pay the interest at the rate 15%. First of all, 15%, and from the first day of provisional assessment. For an example, your provisional assessment happened on 15th of January. Then interest will start from the first of the month when the provisional assessment was done. Sir, first of the month say your interest will start till the date of payment thereof. Supposingly you went ahead and paid it on 28th February. Then sir, 28th February, and here it is 1st of January. So January May how many days, everyone? Sir, January में 31 days, 1st of January you leave it, 30 days in January, February 28 days, 30 plus 28 will be 58 days. Are we all clear, everyone? It says interest will start from the first day of the provisional assessment ka month till the date of payment thereof. Are we all 100% clear with this? Can I go ahead, everyone? From the first day interest will start. ठीक है sir, point is clear. चलो, let's go ahead. Everyone over here now. Just a minute, everyone. People over here, listen to me very carefully. One thing you have to be very careful over here. Listen, when they are going ahead and telling in case of shortfall, pay the interest at the rate 15% from the first day of the provisional assessment. Means, sir, first day means you have to consider the first day onwards. And hence, if I go ahead and tell you over here, listen, sir, January month, if supposingly provisional assessment was done in 15 December, and sir, final assessment has gone done, and sir, you went ahead and paid the taxes on supposingly 31st of January, then they are going ahead and telling this month you have to go ahead and consider full 31 days of December plus January. Sir, 31 days, and it will come down to 62 days. Please remember one thing, from the very first day, interest will start, and hence we will go ahead and consider the first day also in the interest calculation. I want everyone to give me a heads up. Did you guys understand this point? Yes, sir, we all got it. Let's go ahead. Sir, from the first day means the month the provisional assessment was done, that month ka first day se only interest will start. Okay, sir. Then, in case of excess, refund will be given within 3 months from the date of assessment of duty. Finally, if, sir, within 3 months they don't go ahead and give you the amount, then, sir, they will give you interest at the rate of 6% till the date of refund. Always remember, in GST refund ka case mein it is 60 days, and here they have gone ahead and told if 3 months may we don't pay, then we will pay you interest. The last one over here is unjust enrichment is not applicable. Means these are the situation when the amount will not be put in consumer welfare fund and the amount will be given to importer or exporter. If the amount relates to duty and interest paid by the importer exporter, if he has not passed on the incidents, if I have not passed on the incidents, amount will be given to me. They will not put in the consumer welfare fund. Duty and interest paid by buyer, I sold it to a buyer and buyer has not passed on the burden, then sir, buyer, if he has not passed on the incidents, the refund will be given to him. Sir, duty and interest on import by individual for his personal use, then I will never go ahead and pass on the burden, and hence if any refund is there, refund will be always given to me. Export duty as specified under section number 26 and duty drawback under section number 74 and 75 ka refund is always given to the person. ठीक है, the person means the person who has gone ahead and exported or the person who has claimed the duty drawback. Everyone over here, very important, provisional assessment from exam point of view. The next one over here is faceless assessment. What do you mean by faceless assessment? Everyone over here, faceless assessment means it's a major custom reform wherein me and my officer will never come face to face and the assessment will be done. So basically what will happen when we both don't meet, sir, through computer the assessment will be done online. So basically when we don't meet, sir, there will be no revenue leakages which will happen, and hence government have gone ahead and told it's a major custom reform where bill of entry that is identified for scrutiny, that is non-facilitated bill of entry which was not cleared automatically, basically whose assessment of bill of entry has to be done, is assigned to an assessing officer that is physically located at a custom station which is not the port of importation in the custom automated system. Means I went to the Mumbai port to clear, but might be my officer is sitting in Kolkata and he is going ahead and doing my assessment. It separates the assessment process from the physical location of port of the import using technological platform. Nothing baba, online mein one computer mein you will be basically he will go ahead and ask you the detail from computer only, online you will go ahead and provide him the detail. So basically technological platform is being used. Okay, faceless assessment also refers to as virtual assessment or anonymized. What do you mean by anonymized? I don't know the officer who is going ahead and doing the assessment. Uses a platform, technology platform, to separate the custom automated process from the physical location of the custom officer at the port of arrival. Sir, where my port of arrival is there, their officer will not do my assessment. Might be some other port may officer who is sitting will go ahead and do the assessment. This measure will bolster efforts to ensure an objective, free, fair and just assessment. Sir, everything will be fair. ठीक है, I don't know the officer doesn't know me, there will be no revenue leakages. Sir, in this scenario, fair and just assessment will happen. Anonymity in assessment reduces physical interface between trade and custom. Sir, when traders and customs etc. will not meet, then baba revenue leakages will not happen. Speedy custom clearance through effective utilization of manpower. Greater uniformity of assessment across location. Uniformity will come because, sir, how he is doing the assessment, everyone ka assessment will be same. Earlier face to face, when trade and custom officers come face to face, then baba they will meet, they will go for drink tea, and in that scenario there was revenue leakage. Now there will be uniformity. And sir, promoting sector specific and functional specialty in assessment. Now what will happen? Government can go ahead and tell this officer who is there, all the these 5 officers always they will only go ahead and see whenever one bill of entry comes with respect to goods which are basically clothes. Might be these officers who are there, these 5 officers will always see those bill of entries which are respect to, sir, automobile. So sector specific specialization will come. ठीक है sir, point is clear. Sir, can I ask a question on the, can a question come on this faceless assessment? C graded question from exam point of view, but they can tell you, write a note on faceless assessment. The next one over here is audit under section number 99B. Read with Custom Audit Regulation 2018. Sir, there are 2 types of audit. One is transaction based audit and one is premises based audit. Sir, in transaction based audit, what will happen? They will do the transactions ka audit. Basically, your books of accounts ka audit will be done. Sir, under transaction based audit, transactions are audited. It may be noted that transaction based audit may subsequently be converted into premises based audit. Might be the officer is doing transaction based audit. He feels that he should come to a premises and check the goods which you have imported or exported. Then in that scenario, transaction based audit will become premises based audit. After that, sir, premises based audit means audit at the premises. Sir, this new provision on customs audit 99A has extended the scope of premises based audit including other entities which are concerned with imports or export. Means other entities are also covered in the premises based audit. In premises based audit, custom can review the import and export over a given period. Whatever import and export I have gone ahead and done over a period of time, what goods I imported, what goods I exported, sir, all those can be reviewed and check all the relevant commercial records including financial statement and contracts to verify the particulars given in the goods declaration. When you are going ahead and importing or exporting, you give a declaration, I have imported copper wire. They came to a premises to do an audit and they found aluminum wire. Then Baba, that's a wrong thing which you have gone ahead and done, and hence the audit is done basically. Premises based audit would enable the department to bridge the communication divide and usher into a new era of partnership with trade. They are going ahead and now being friends with trade. They are coming to the traders' premises, checking whether what goods they have gone ahead and paid the duty on is the actual goods which they have gone ahead and imported. Might be when you imported, custom automatic systems, automatic clearance was given and there was no checking. So now premises based audit they will come and check. The next one over here is manner of conducting. Proper officer may carry out the audit of imported goods, exported goods, imported goods or export goods which you are going ahead and exporting, or which goods you go ahead and export, or audit can be of the auditee also. Always remember who can be an auditee. Auditee means a person whose audit can be done, and in section number 99A they have gone ahead and told auditee means the person whose audit who is subject to audit under this section includes importer, exporter, custodian, any licensee of a warehouse whom license has been given for the warehouse, or any other person concerned directly or indirectly in clearing, forwarding, stocking, carrying, selling, purchasing of import, export, imported goods or export goods or dutiable goods. These people are known as auditee, and auditees ka audit can be done. Sir, always remember one thing, risk based assessment will identify the person whose audit will be done, and an auditee, always remember one thing, audit के पहले always 15 days का work notice will be given. 15 days का notice will be given in case of premises based audit. Sir, audit can always happen at the proper officer ka office or premises of the auditee. Might be your registered office, your branch office, your warehouse, your factory, basically where goods and books are kept. There they can go ahead and do the audit. Sir, whenever the premises based audit they will go ahead and start, they will wrap it up in 30 days plus 30 days ka further extension can be given by jurisdictional commissioner. During the audit, proper officer can request you to furnish document, information, record. Always remember, records in customs are also to be maintained. Basically, you maintain the records relating to your imported goods, export goods. Sir, it is to be maintained for how many years? 5 years. And sir, proper officer may inspect, he can also go ahead and inspect the imported goods, export goods, dutiable goods at the premises, and also sir, he can request you to give him some samples. Sir, proper officer having regards to the nature and complexity of the audit can take chartered accountant, cost accountant or IT expert, information technology expert ka help also. An auditee always has to provide assistance to the proper officer and team in discharging of duty and not to refuse or obstruct them. You should not go ahead and refuse any assistance, help, etc. and you should not obstruct them. You should always allow them to do their duties properly. Sir, once the audit gets over, proper officer will go ahead and inform the auditee of the audit findings before preparation of the audit report to sir, before going ahead and preparing the audit report, he will go ahead and tell you these are my observation, these are the reason for my observation, sir, and he will allow you to give him clarification along with document. Now, if audit is an agreement with the audit findings and sir, you make a voluntary payment or of the duty or any other sum in part or full, whatever you do, he will now go ahead and prepare audit report where audit finding he will tell these are the objections I raised, this was the explanation which was given, all these details he will go ahead and record in the audit report which will be prepared by him. Now, one question, always remember, any auditee who contravenes the provision of audit regulation, penalty is up to 50,000 rupees, and the same penalty is over here that sir, this provisional assessment related whatever rules are there, they are telling if importer, exporter, his authorized representative, custom broker contravenes any provision of this customs finalization or provisional assessment regulations which are there, if you go ahead and violate, then they are going ahead and telling penalty up to 50,000 over there also. Now, last one over here is section number 99B, verification of identity and compliance thereof. What do you mean by verification of identity? Sir, if the proper officer authorized by the principal commissioner or commissioner of custom for the purpose of ascertaining compliance under the law or act, sir, they can require a person whose verification he considers necessary if, sir, for protecting the interest of the revenue if person officer authorized by principal commissioner or commissioner of custom is considering it necessary that your verification has to be done for protecting the interest of the revenue or preventing smuggling, then they can go ahead and ask you to do Aadhaar authentication, and they are telling Aadhaar authentication and submit such other documents or information as may be prescribed. In case no Aadhaar authentication has failed, then they will go ahead and provide you alternate and viable means as prescribed. And sir, if I don't go ahead and comply with rule number 9, section number 99B, then they are telling they will suspend your clearance of imported goods, whatever goods you want to export, sanction of refund will not be given, refund will not be sanctioned, duty drawback will not be given to you, exemption from duties will not be given, license or registration under the Custom Act will be cancelled, any benefit out of import or export, any benefit which is there, that also will not be given to you. He will suspend all these things if you don't go ahead and comply with section number 99B. Sir, from exam point of view, what is important? Remember, sir, silent features of audit procedure. Wherever you see the star, that is the silent feature. Wherever you see the star, that is the silent feature of audit procedure. Sir, what are the silent features of audit procedure? Number one, see here, advance notice of 15 days in case of, sir, notice in case of premises based audit. Risk based assessment say always the person will be identified. The more risky the person is, his audit ka chances are more. Then, sir, any auditee who will contravene the provision of the audit regulation, penalty is up to 50,000. Sir, audit ka procedure ka next silent feature, sir, always remember you are required to maintain your records for minimum 5 years. Then, sir, if the proper officer during the audit wants to take the help of IT expert, chartered accountant, cost accountant, he can also go ahead and do that. Sir, after the audit is done, once you are informed about the audit finding, you can go ahead and make voluntary payment of whatever. If you are in agreement, you can make voluntary payment of the duty or any other sum in full or part, and that shall also be recorded in the audit finding. Here I have gone ahead and told you about the various audit procedure related silent features. Section number 99A is important over here in this chapter. And sir, provisional assessment related, the part which I have told is the most important part. Generally it's a C graded chapter, but still 2 to 3 marks they can go ahead and ask you in the exam. So I have gone ahead and quickly revised this chapter for you guys. I will go ahead and close all my discussions over here. Please practice provisional assessment related, whatever interest calculation is there, please practice and go. I'll close all my discussion on assessment and audit over here. Congratulations, people. Now, the next chapter which we are going to study or revise rather is the chapter of duty drawback. Duty drawback as a chapter has been removed from CA final May 24 onwards, and hence CA students can go ahead and ignore this chapter. They need not go ahead and study this chapter or go ahead and do question answer, not required. For CS and CMA student, you guys can go ahead and revise the next chapter which is duty drawback. CA final students can ignore the chapter and move to the next chapter. You don't have to do, the CA students don't have to do the question answers or don't have to revise this chapter at all. Now, let's go ahead and continue with duty drawback. CS and CMA students can do it. CA students, move to the next chapter. Alright students, let's go ahead and now revise the next chapter. The next chapter is duty drawback. Everyone over here. Sir, duty drawback, we have section number 74 and we have section number 75. They go ahead and say duty drawback on re-export of duty paid goods. So, sir, supposingly, I have gone ahead and imported this bottle. I have gone ahead and paid the duty on this bottle. Baba, any duty which I have gone ahead and paid. Baba, custom duty can be basic custom duty, social welfare surcharge, CVD which is there, sir, IGST which is there, GST compensation cess which is there, all the duties of custom which you have gone ahead and paid. If I go ahead and import this bottle, I paid the duty. Now I export this bottle, whatever duties I have paid, I will get duty drawback. So we are going to understand now. Section number 74 says duty drawback on re-export of the duty paid goods. So you imported something, you paid the duty on those goods. Now you are going in and exporting those goods. Whatever duty you have paid, because you have changed the destination of the goods, Indian government says whatever taxes, whatever duties you have paid on those goods, we will give it back to you, and that is known as duty drawback. So let's go ahead and start with section number 74 now. Section number 74 is section number 74 1 and section number 74 2. Section number 74 1 goes ahead and says, sir, export as such. So I went ahead and bought this bottle from outside India. I did not go ahead and use it at all. I went ahead and exported it outside India. Then they are going ahead and telling, if you go ahead and export it as normal export, might be as cargo, or you export it as baggage, or you export by post, 98% of the duties which you have paid will be given as duty drawback. Then section number 74 2 goes ahead and says, if you go ahead and might be imported this bottle, used it for some time and then you export, you will get duty drawback, which is little reduced amount. And hence they have gone ahead and told, export after use. Sir, how the duty drawback will be given? That is told by a notification number 19/1965. In that notification, they have gone ahead and done 3 categories which are there. Number 1, when no duty drawback will be given. Number 2, motor car, if anyone is going ahead and using and he re-exports, means imported and then exported, what is the duty drawback that will be given? Or goods imported by an individual for personal or private use, then what will be the duty drawback? Any other goods. For an example, I went ahead and imported a projector for my personal use, then Baba, remember, I will come over here. But if I imported a projector, might be for my office use, then it will come over here. But car ka case mein, remember, whether anyone who import business use, non-business use, personal, individual, company, whatever it is, motor car always comes in the second category. Now, there are some items which you go ahead and import and use and export, then you will not get any duty drawback, which is wearing apparel. Sir, wearing apparels, if you go ahead and import, you use it for some time and then you are exporting, no duty drawback. Sir, tea chest which is there, tea chest ka case mein also no duty drawback after use. Exposed cinematographic film, this always movie films which come into India, you saw the movie and now you are telling you want to export it after use, no duty drawback. The next one, unexposed photographic film, might be paper, plates, X-ray films, etc. After use, if you want to go ahead and export, no duty drawback, absolutely zero. But sir, what if I export this without use? Then Baba, remember, without use, then as such, if you go ahead and export, 98% duty drawback is there, but after use, there is no duty drawback. Then, sir, motor car by anyone or goods imported by individual for personal or private use, then whatever is the 100%, I will go ahead and say is the duty paid, means whatever duty paid, consider it to be 100%. Now, they will go ahead and reduce and give you, you have to find out the percentage, and that much percentage will be given as duty drawback. So they are going ahead and telling whatever the import duty you have paid, supposingly I go ahead and say that is 100% duty. Out of that, they are telling 4% for the first year, per quarter or part thereof, reduction will be done. Sir, 16% for the first year. Second year, if you are going ahead and re-exporting it, then they are going ahead and telling 3% per quarter or part thereof. Then it will be 12%. Third year, 2.5% means 10% per annum, and fourth year ke liye it is 2% per annum, 2% per quarter, so it is 8% per annum, and hence whatever is the reduced percentage, that much amount of duty drawback will be given. So for an example, if I go ahead and re-export my motor car after 3 quarters, sir, from the date of import, I exported after 3 quarters, then 3 quarters ke liye 4% into 3, 12% is gone, 100% is 12% gone, 88% ka duty drawback will be given. But remember one thing, duty drawback is only after 2 years, will only be given if CBIC extend the time limit. Otherwise, after 2 years, whenever you go ahead and export, there is no duty drawback, absolutely nothing. Okay, sir, point is clear. They have given the percentages, but after 2 years, you will be given duty drawback only if CBIC extends the time period. Now, sir, all other goods ka case mein, so supposedly I imported a laptop for my personal use, then it comes in second category. But if I imported a laptop, might be for official use, then it will come in the third category. So, sir, here, based on your period of usage, duty drawback will be given. If you have gone ahead and imported an article and you have used it up to 3 months, then 95% duty drawback will be given. Sir, greater than 3 months up to 6 months, then 85% duty drawback. Greater than 6 months up to 9 months, 75%. Greater than 9 months up to 12 months, 70%. Greater than 12 months up to 15 months, 65%. Greater than 15 months up to 18 months, 60%. And greater than 18 months, it is nil. So, sir, how do we remember? You can remember 9-5. First of all, 3 months ka gap is there always. Sir, then reduction will be 10%, then again reduction will be 10%, then reduction will be 5, then reduction will be 5, then reduction will be 5, and then 0. So, sir, my number is 9510105550. Baba, this is not my number, don't call nothing, but save in your phone, duty drawback ka number, 9510 reduce, again 10 reduce, then reduce 555, and then you get 0. Done, sir. Point is clear. So, sir, I went ahead and told you over here. Section number 74 may section number 74(1) goes ahead and says when you have imported something and you have exported as such, then duty drawback will be given 98%. Sir, I imported something. I went ahead and used it for some time and then exported. First category over here, wearing apparels, etc. May no duty drawback. Motor car or any import which is done by an individual for personal use, then 4% reduction first year per quarter of part thereof, second year 3%, third year 2.5, fourth year 2% per quarter or part thereof. Sir, third category may if you are following all other goods which are not motor car, or if it is not individual car, individual who has imported for personal or private use. Other than that, all the goods 95, 10, 10, 555 and 0. Done, sir. Point is clear. Sir, here there are always some condition under section number 74 which they have told. Goods will be always identified by the AC or DC as the goods which are imported, because only what you have imported you have to go ahead and export. So AC, DC will always go ahead and verify what you had imported, only you are going ahead and exporting. Secondly, goods should be entered for export within 2 years from the date of payment of duty on importation. When you imported, you paid the duty. Let export order came from the date of payment. Let export order should be within 2 years for the purpose of export, or extension only can be given by the CBIC. Sir, no requirement to realize foreign currency, minimum validation criteria, etc. is no there. So it's saying no requirement to realize foreign currency, or no requirement means minimum validation criteria, etc. is not there. Now, section number 75 comes. What is section number 75 going ahead and telling? You went ahead and imported some item from outside India, might be cloth. Out of the cloth, you made final product, and now final product when you are going ahead and exporting, remember one thing, you will be given duty drawback under section number 75. But section number 75 may, the people who are going ahead and exporting, they get duty drawback of the custom duty. Might be you imported raw material. When you imported the raw material, you paid some custom duty. You went ahead and paid some social welfare surcharge, and you paid GST also. Baba, GST too you have to take input tax credit, but basic custom duty, social welfare surcharge, all the duties which you have paid on the goods which you have manufactured, all those duties ka duty drawback is given under section number 75. In IGST which is paid, you have to take input tax credit, because a person, Baba, who is claiming duty drawback under section number 75 is basically a manufacturer. And if you are manufacturing and exporting, Baba, exporters are always interstate supplier, and you will always be registered under GST. So IGST ka to you have to take credit only. GST compensation cess also you have to take the credit. All other duties which you have gone ahead and paid while manufacturing those goods, those duties ka you will be given duty drawback under section number 75. Done, sir. Duty drawback on imported material which you have used in manufacturing of the exported goods. The goods are imported, import duty is paid, used in the manufacturing of the goods, and now new product is being exported. Section number 74 was basically for traders who imported something and sold the same thing outside India. There is no value addition, etc. done in India. Section number 75 is you bought raw material, cleared in India, out of the raw material you made the final product, and final product is exported. Then, Baba, they are telling whatever duties, etc. was paid on the material which was used in manufacturing the final product, those duties ka duty drawback will be given. But government in section number 75 does not go ahead and determine the duty drawback for each exporter. Government goes ahead and says that we will go ahead and fix all industry rate and give duty drawback. We'll talk about it. Then you can export as normal cargo, that is by filing shipping bill, or baggage is not allowed over here, or you can send your goods by post also and claim the duty drawback under section number 75. Baba, 74 may you get duty drawback of all the duties which you have paid, including IGST, GST compensation cess. But here you don't get duty drawback of the GST which is there, because GST ka to you have to take input tax credit. All the other duties which you have basically borne on the raw material, whatever duties you have paid, of that duty drawback is given under section number 75. Sir, there is no criteria for identification, because when you imported, might be imported cloth, now you have made the final product. Final product is different from the imported material, and hence there is no identification ka criteria. ACDC will not identify, because it can't identify. Final product will be definitely very different from the one which you had imported. Then no time limit to export, but above there was a time limit of 2 years. Sir, value addition criteria is stipulated. You have to exceed the value addition criteria, only then the duty drawback will be given. And forex realization also is very mandatory in time. Means as per the time limit of the FEMA, you should realize the foreign currency. Sir, now along with the section number 75, we have to read custom. We have to read Customs and Central Excise Duty Drawback Rule 2079. Sorry. Sir, you're a little tired, I think. Okay, nothing. Customs and Central Excise Duty Drawback Rule 2017 goes ahead and says that, sir, first of all, it will say, my name is Customs and Central Excise Duty Drawback Rule. Sir, rule number 2 will say over here about the definition. Now, 3 goes ahead and says, whenever you are going ahead and claiming duty drawback, you will be given on the all industry rate. Basically, the underlying principle is that government fixes a rate per unit of article which will be given as duty drawback. Government is telling, hey, you are shirt ka manufacturer and you are manufacturing cloth, you are importing, and you are making shirt and you are exporting. Now, cloth you are importing, what are the other item you are importing? I can't sit with everyone and decide how much duty was borne by everyone and decide one duty drawback rate for everyone. No, I'll not do that. So government have fixed one all industry rate saying, sir, based on your FOB, this much percentage will be given duty drawback, or might be whatever items you are exporting per item, this much will be the duty drawback. So all industry rate means duty drawback allowed at a prescribed percentage of the FOB or rate which is fixed rate per unit. Average amount fixed by the government. What is all industry rate? It's an average amount which is fixed by the government based on the data of the industry. So might be for electronics, government told 10% duty drawback. For clothes, government told 12% duty drawback of the FOB. Done. So this is all industry rate. The next one is brand rate. Rule number 6 goes ahead and talks about brand rate which is there. If all industry rate is not fixed for a product, might be my product which I am exporting, sir, all industry rate is not there, then go to the government and apply to the principal commissioner or commissioner of custom within 3 months from the late export order, because you are exporting from the late export order. Within 3 months you have to apply for a fixation of duty drawback. And Baba, when you are going ahead and applying for a all, because your case mein all industry rate is not there, so you have to go ahead and apply for brand rate. He will give you a brand rate and then you will go ahead and apply for a duty drawback, right? So it is going to take time. So you can go ahead and ask for provisional duty drawback. Whenever you are given provisional duty drawback, that is always based on bond plus a security which is there. Done, sir. Rule number 7 goes ahead and says, if all industry rate, supposingly by applying the all industry rate, you are getting the duty drawback, which is less than 80% of the duties, which are actual taxes and duties on input. Might be I paid 100 rupees on duty on my inputs which are there, but I am getting duty drawback only 70 rupees. Then they are telling you can apply for a special brand rate if you are getting less than 80%. By applying the all industry rate, you see that you are getting less than 80% of the actual duties paid on inputs as duty drawback. Then you can apply for a special brand rate. Exporter can apply to the principal commissioner or commissioner of custom within 3 months from what date? From the late export order for the application for fixation of special brand rate. Baba, when special brand rate will be fixed, then you will apply for duty drawback, then it will be given. It is going to take time. So in the meanwhile, provisional duty drawback may be provided based on you have to give a bond plus a security also. Done, sir. Sir, if I don't go ahead and apply within 3 months for fixation, if I don't go ahead and apply within 3 months of late export order, then the extension of time limit can be given under for rule number 6 and rule number 7. Both extension of the time limit can be given. Belated application you can file. Assistant commissioner or deputy commissioner can extend the time limit by further 3 months. Principal commissioner or commissioner can extend the time limit by further 6 months. But remember, there is a fees for 3 months ka extension, lower of 1% of the FOB or rupees 1000. For principal commissioner or commissioner, when he is extending by 6 months, the fees is lower of 2% of the FOB or 2000 rupees. Remember, once they go ahead, now inflation is happening, prices are changing. So, sir, government can always go ahead and keep revising. The power is there with the government to revise the all industry rate. Government may revise all industry rate, which is fixed under rule number 3, because every time the duties are changing, etc. And hence government has the power to go ahead and revise the all industry rate. Rule number 4. Rule number 3 went ahead and told about all industry rate. Rule number 4 went ahead and told about revision of all industry rate. Rule number 6 went ahead and told about brand rate. Rule number 7, special brand rate. Rule number 8 goes ahead and says value addition, no duty drawback if export value of the goods is less than the value of imported material used in manufacturing of the goods. Might be when you went ahead and imported the raw material, you went ahead and spent $1,000 over here. Now, when you are going ahead and making the final product and exporting, the export value means the FOB value should be more than 1000 rupees over $1,000 over here. They are telling export value of the goods might be here. The export value is supposedly only $800. Then they are going ahead and telling, hey, what value addition you did in India? Nothing, no value addition in India. You have already spend more than what you have earned. We will not give you any duty drawback. Remember, export value of the goods is less than the value of imported material used in the manufacturing of goods, then Baba, you will not get any duty drawback. And sir, export value should also exceed such percentage of the value of imported material which are used as notified by the central government on specified goods. Means if central government have gone ahead and told value addition should be 20% on the imported material, then at least 20% should exceed. They are going ahead and telling export value should exceed. If it does not exceed such percentage of the value of imported material used, then Baba, you will not be given any duty drawback. It should exceed the percentage which has been specified by the government. One more point which I have written, some important point over here, important note. No duty drawback if goods are manufactured out of duty free import. Hey, you got imports on which duty only not paid. What duty drawback you will get? You will not get any duty drawback. Secondly, sir, whenever you are, if exporter has filed for duty drawback under all industry rate, you applied for a duty drawback under all industry rate, and you are also telling I want special branded. Not possible. Both the hands, laddus can't be there. They are telling if exporter filed for duty drawback under all industry rate, he cannot request for fixation of special branded. Baba, if you are applying for special branded, you can take provisional duty drawback, but you can't take all industry rate under duty drawback and then also apply for special branded. Not possible, not allowed. The next one over here is rule number 9 over here. Sir, upper limit of duty drawback. Upper limit means the maximum duty drawback you will get is 1/3 of the market price of the exported product. Sir, supposingly, if the market price of a product, okay, they went ahead and told the FOB value is supposingly 1 lakh rupees and you are getting duty drawback, a percentage is 30%. 30% means how much duty drawback you are getting? 30,000 rupees. Okay? The FOB value is 1 lakh. 30% is the duty drawback, you are getting 30,000 rupees. The market price of the goods is supposingly only 60,000 rupees is the market price. They are telling the maximum duty drawback can be 1/3. 1/3 is what? So maximum duty drawback you will get is only 20,000 rupees, the market price ka 1/3 value. Otherwise, people will keep inflating the FOB value and people will keep inflating the FOB value and get more duty drawback. So government went ahead and told we are fixing the upper limit. The upper limit is whatever is the domestic market price, the wholesale market price of those goods in the domestic market, of that 1/3 will be the maximum duty drawback. So 30,000 or 20,000, you will get a duty drawback of only 20,000 rupees. Done, sir. On the right hand side, I have gone ahead and told the difference between duty drawback under section number 74 and 75. Sir, when is it admissible? Imported goods are exported as such or after use, then 74 ka duty drawback. 75 ka duty drawback, imported goods are used in manufacturing of goods which are exported. Imported materials are used in manufacturing the goods which are being exported. It is exported as cargo, post or baggage. All the three are okay. Here it can be exported as cargo or post. Baggage is not allowed. Time limit to export is generally 2 years. Here there is no time limit. Identification of the goods. 74 May identification can be done by the AC or DC, but 75 May identification criteria is not there. 74 May value addition criteria is not there because what you are importing only you are going ahead and exporting. 75 May you have to do value addition. Value addition criteria has been specified, and only if you exceed the value addition criteria, the duty drawback will be given. The next one over here is section number 75A. Remember, section number 75A is applicable for section number 74 and section number 75. Interest on duty drawback. Very, very important from exam point of view. If duty drawback under 74 and 75 is not paid within 1 month of submission of claim, you submitted your claim, 1 month it is not given, then you will get after 1 month, whatever the time period is there, you will get interest at the rate of 6% shall be paid from the date after the expiry of 1 month till the date of payment. So, sir, date to date you see 1 month. Once the 1 month expired, from the next day you will get interest at the rate of 6%. Sir, if DBK is paid erroneously, might be you did not get the foreign currency, or might be or becomes recoverable. When does it become recoverable? If you don't recover the foreign currency within time, then they are going ahead and telling if supposedly you took some DBK erroneously or any DBK became recoverable, then it shall be demanded. And if not paid within 2 months, recovery will start. So remember one thing, supposingly there was an erroneous DBK which was given. Then they are telling they will go ahead and demand from you. And once the demand order is given within the next 2 months, after the 2 months, they will start what everyone? Recovery. Done, sir. This point is clear. But listen to me very carefully. Erroneous refund. If erroneous duty drawback was given, you paid back over here. Then Baba, till here ka interest has to be given. From this day till here you have to give interest. Sir, I paid back over here. You paid back over here, from the date of erroneous refund till the paid back you have to give interest. Sir, they recovered from you over here. Recovered. Array, whenever it is recovered or paid back from the date of erroneous refund, you have to pay the interest. Baba, sometimes students get confused that sir, interest will start from the date of demand, 2 months recovery period, after that interest. No, Baba, no. They are telling, sir, erroneous refund will be demanded. And if you don't pay within 2 months, then recovery will start. This is a separate thing. Separately also they have told interest at the rate 15% is payable from the date of payment, the day they had paid it to you, till the date of recovery of duty drawback, or till the date it is paid back. Whenever you paid back or whenever it is recovered from you, till the date, from the date of erroneous duty drawback till the date you paid back, you have to pay interest at the rate of 15%. The next one over here is section number 76 over here, prohibition and regulation of duty drawback in certain cases. Sir, government says no duty drawback shall be allowed if the market price of the goods is less than the duty drawback. For an example, there is one iPhone over here which is a very little old iPhone. On that iPhone, I had gone ahead and bought that iPhone from outside India for 1 lakh rupees, and on importation I paid 20,000 ka duty over here, or I will go ahead and take simple supposingly 10,000 ka duty over here. Okay? Now, if I am going ahead and exporting as such without use only, then I will get 9,800 duty drawback over here. But you know what? This iPhone, if I am selling in India, not even in 5,000 people are buying. So they are going ahead and telling if the market price of the goods is less than the duty drawback, government is telling, hey, you think I am a fool? Market price is 5,000. You are trying to take duty drawback of 9,800. No duty drawback at all. No duty drawback shall be given, and duty drawback will not be given if the amount is less than 50 rupees. Duty drawback, no duty drawback if central government is of the opinion that goods are likely to be smuggled back. For an example, when you were getting the goods into India, you were trying to smuggle it and you were caught. And hence, at the custom port, you landed up paying 10 lakh as the duty. Now, you are telling, sir, I want to go ahead and export the goods from India outside India. Please give me 98% duty drawback, means 9.8 lakh duty drawback. You give it to me because I am going to send it outside India. Government knows that you are going to smuggle it back into India, and hence they will not go ahead and give you the duty drawback. Done, sir. Point is clear over here. Section number 7. This chapter from exam point of view, what kind of a chapter it is, everyone? Sir, this chapter from exam point of view, for your November exam, it is an A graded chapter. For May 24 students, anyway, this chapter has been excluded. Okay, sir, point is clear. A graded chapter, I feel 3 marks ka one small question can come. This point which is there, no, this is very, very important. Other than that, section number 75 is also very important. Section number 76 is also important. But rule number 9 and rule number 8 is also used as question sometime. So please be very careful and solve some questions and then go for the exam. Done, sir. Point is clear. I'll go ahead and close my revision on the chapter of duty drawback. Done. Now, the next chapter which we are going to revise is the chapter of refund. My fund is there with the government. I want it back because I might be short of working capital, and hence that is known as refund. Everyone listen. When you import something and you export that item as such, means you had imported a mobile phone and you export as such, that is known as the duties which you had paid, the duties will be returned to you. That is duty drawback. I imported something, paid extra duty. Instead of paying 20, I paid 30. And I want the duties which I paid extra return. Return of duty is known as refund. My fund, which was not taxes only, or might be which is tax, I paid it as tax to the government. I want it back, and so it is known as refund. Let's go ahead and understand refund over here. Section number 27, claim of refund of duty. What happened? You imported some goods. Custom duty is equal to value into rate of duty. What you did? Self-assessment you did. Value into rate of duty will give you custom duty. So, sir, value was 1 lakh rupees, 30%, 30,000 custom duty. Interest, you went ahead and paid. For an example, you went ahead and paid over here 15% with interest, which is how much, everyone? Sir, 4,500. Correct assessment you did, and means interest for belated payment you went ahead and paid. Now, correction you went ahead and did. What is the correction? Actually, rate of duty was 20%, and hence 20,000 has to be paid. 15% will give you only 3,000 rupees. It means, sir, I want 10,000 ka duty returned, and 1500 ka duty interest which I paid extra, this will be refunded to me. Whatever duty you pay or whatever interest you paid extra will be returned to you. So, sir, sometime what happens, custom duty is paid in excess, might be due to an error or lack of information, or you did wrong classification which I just now showed to you, and hence, sir, custom duty is paid in excess of what is actually leviable. Whatever you paid excess, you will go ahead and take a refund, and the refund can be claimed under section number 27, which says once you go ahead and cleared post self-assessment, you did the self-assessment, you paid extra duty, you paid extra interest, and you cleared it. So for an example, you are Ramesh, you are the importer. Whatever duty you have gone ahead and paid extra. So I have gone ahead and paid 10,000 and 1500 extra. For that, I can go ahead and file an application to the AC or DC. Sir, supposingly, I went ahead and sold these goods to Suresh. Then Suresh is the person who has gone ahead and borne the duty. See, I had gone ahead and paid the duty. So I was going ahead and taking the refund. I went ahead and passed on the burden to Suresh. Now Suresh, being the customer, he has gone ahead and borne the duty. He will go ahead and make an application. Always remember, when you are making an application has to go along with document and other evidences. Now, sir, within how much time the application has to go for it to be not a time barred application? So it should always go within 1 year. Within 1 year from relevant date. Sir, relevant date, in various scenarios, the relevant dates are different. So time limit for submission of refund application is always 1 year. From the relevant date, you should submit within 1 year. Sir, what do you mean by relevant date? Sir, if it's a claim by importer or exporter, then the day he has gone ahead and made the payment. So importer or exporter is claiming the day he had gone ahead and made the payment, within 1 year he has to go ahead and file an application. Claim by any other person. For an example, I sold the goods to Suresh. Suresh has gone ahead and purchased the goods from me. The day he purchased, within 1 year, he has to go ahead and file an application for refund of the extra duty which is borne by him. Sir, if there is an exemption which is a special order issued, I paid the duty, later government went ahead and issued a special order, whatever duty ka refund I have to get from the date of such exemption ka order, I have to go ahead and apply within 1 year. Refund as a consequence of judgment, degree, order or direction of the appellate authority, appellate tribunal or court, the day the judgment or the order is given, I will go ahead and apply within 1 year. Provisional payment I had gone ahead and done. Finalization happened, they went ahead and did the adjustment. The day they have gone ahead and done the adjustment, or in case of reassessment, the date of such reassessment, from that time, within 1 year, I have to go ahead and file an application for refund. So, sir, when I am going ahead and filing an application, with that, I have to give documentary or other evidence to establish that the duty or the interest is borne by me or paid by me, and I have not passed on the burden to ultimate customer. Means I have only borne the burden, that I have to go ahead and prove. If the customer is going ahead and filing, then he have to go ahead and prove that he is not gone ahead and passed on the burden further. Okay, once you go ahead and file the application, sir, within 3 months the refund will come in your bank account. Always remember, processing of refund will happen from the application within 3 months. The amount will come in your bank account. If they don't give you the money in your bank account within 3 months, they will go ahead and give you an interest at the rate of 6% under section number 27A. Means application given within 3 months. If they don't give you the refund in your bank account, then post 3 months, whatever the period is there, for that you will get interest at the rate of 6% per annum from the day immediately after the expiry of 3 months from the date of receipt of application till the date of refund. For this period you will get interest. Now, sir, always remember one thing. For an example, sir, refund was given here only. Yes, Baba, refund can be given here, but the maximum time period is 3 months. Now, always remember, whenever the ICDC is satisfied that the refund is due, he will never give you the refund. He will go ahead and make an order to put the money in the consumer welfare fund. But there's some scenario when doctrine of unjust enrichment, you are not becoming rich at the cost of someone else. That scenario may the refund will be given to you. Those are NIIBBED. Those scenario may refund will be given to you. I will go ahead and tell you what are the cases. Number 1. Sir, duty and interest paid by notified class of applicant. If we are notified class of applicant and for notified class of applicant, then refund will be given to us and it will not be put in consumer welfare fund. Duty and interest paid on import made by individual for his personal use. Sir, personal use के लिए I have imported. How will I go ahead and pass on the burden? I am using it. Whatever extra duty you have paid, you will be given a refund. Duty and interest paid by importer or exporter. If he had not passed on the incident, I am the importer, sir, or I am the exporter. I have never passed on the burden. Whatever extra I have paid, I will be given a refund. Duty and interest borne by the buyer, and he had not passed on the burden. So importer passed on the burden to him. He is applying, then he has to prove that he has not gone ahead and passed on the burden. Further, duty paid in excess by importer before an order permitting clearance of goods for whom consumption is made, where such excess is evident from the bill of entry. It is evident in the bill of entry that, sir, you have gone ahead and paid extra, then refund shall be given to you. Or duty actually payable is reflected in the reassessed bill of entry, means whatever extra you have gone ahead and paid, that can be seen in the reassessed bill of entry, then the refund shall be given to you. Export duty ka refund is always given to you. Duty drawback under section number 74 or 75 always given to you. Over here, the money will never be put in consumer welfare fund. Next. So this was basically about claim of refund of duty which you have gone ahead and paid extra. Now, sir, if I have gone ahead and paid import duty on some goods, I don't like the goods. I have already paid the import duty. See, Baba, if you don't like the goods, leave the goods. They will go ahead and leave the duty. But if you have already paid the duty, now what? Let's go ahead and understand refund of import duty in certain cases. Import duty paid on clearance for home consumption. You have already paid the duty. Now what? And sir, it shall be refunded. If goods are defective, not in conformity, you ordered for Apple iPhone, they give you pineapple phone. In that scenario, goods are not conformity with the specification agreed between the importer or exporter. Then you can tell, sir, the goods which have come are defective. I have already paid the duty. Please give my duty drawback. Not duty drawback, duty return. Okay, sir. If goods are not in conformity with the specification, then Baba, you can go ahead and tell whatever duty you have paid, they will give you. Not duty drawback, duty ka return. Duty drawback is 98%. Why will you take 98%? You will tell, sir, give my return, duty return, and hence you can take 100% duty draw, 100% refund. Proviso, goods have not been worked out, repaired or used. So, sir, I went ahead and got from the custom port, I got the mobile phones home and I'm telling it is defective. They are telling if defective, to understand the defect, you have to go ahead and use, then it's okay. But if you have bought the goods, used it, and now you want to go ahead and export, then, sir, please go ahead and get duty drawback. In this scenario, will not give you return of duty. Duty drawback as after use, you will go ahead and get under section number 74 too. So, sir, goods have not been worked out, repaired or used except when such use was indispensable to discover the defect. So, sir, if you go ahead and use it, Baba, go to duty drawback. No, after use. Next, but if you have gone ahead and imported some goods, you got the goods home, then you realize goods are defective or not in conformity, you can go ahead and talk to the officer and he will give you 100% duty returned. Returned is refund. Next, claim goods are identified to the specification of the SE or DC as the imported goods. He will go ahead and satisfy himself what you had imported. That same goods you are going ahead and telling are not as per specification. You should not be claiming duty drawback. You took duty drawback also, you are taking return of duty, which is refund also. No, not possible. Both the thing they will not give you. I think beneficial is if goods are defective, not as per specification. Why will you take 98% DBK? You will take refund 100%. Then, sir, importer exports the goods. So, sir, goods are defective or not in conformity. Go ahead, export the goods back. They will go ahead and give you a duty return. Refund of duty will be given. Sir, or relinquishes his title to goods and abandons them to custom. Write a letter, give it to the custom, whatever duty you have paid. Under section number 23, when we had gone ahead and learned, that was you don't have to pay duty only. In this scenario, what we are learning is when you have already paid the duty, duty will be refunded to you. That is what is being told. Relinquish the title and abandon it to customs. Customs will go ahead and refund your duty. Sir, goods are destroyed or rendered commercially valueless. Goods are not in specification. Put one fire on the goods. They will go ahead and return your duty. They are telling goods are destroyed or rendered commercially valueless. in the presence of the proper officer within a period of 30 days from the date of clearance under section number 47. Everyone, you got the goods. Imported goods not as per specification or they are defective. Do one thing, either send it back or leave it to the custom or destroy the goods within 30 days of the clearance order. Whatever duty you have paid, they will refund it to you. Proviso, 30 days can be extended by the principal commissioner or commissioner of custom up to further period of 3 months. And this section is not applicable. You can't say whatever duty I have paid, give my duty back. This guns I have got. Baba, offensive goods and etc. का case में refund of duty is not there. Section is not applicable to goods regarding which offense has been committed. You got AK-47s into India. You paid the duty. You are caught. Now they will send you to jail. Baba, return of duty etc. is not there. Then, sir, how will I go ahead and file an application? Application should be filed within 6 months from the relevant date. Sir, what do you mean by relevant date? Relevant date means if you are going to, what goods have come? Pineapple phone, export it back. The day you export it, run from the late export order, run within 6 months, apply for refund. Sir, in case goods are exported, then date of late export order, say within 6 months, I have to go ahead and apply for the refund of the import duty paid. Sir, I relinquish the title. The day you relinquish the title to customs, from that day within 6 months, you have to go ahead and apply. So, sir, title is relinquished. Date of such relinquishment say you should go ahead and apply for refund within 6 months. Sir, goods are destroyed or made valueless. I've destroyed the goods. The day you destroy the goods, run within 6 months. You can go ahead and apply for refund of your import duty. Date of such destruction or rendering the goods commercially valueless, from that day you should go ahead and apply within 6 months. Okay, sir, got it. Next, sir, no refund with respect to perishable goods and goods that have exceeded the shelf life. You went to the port, you saw your mangoes have become only seeds, and you're telling whatever duties I paid, please give me my duty. Refund, they will not give you. Always remember, if goods are perishable goods and goods which have goods whose shelf life is gone, after that there is no refund of duty. Got it? Next, section number 26 goes ahead and talks about refund of export duty. You exported the goods, you paid the export duty. Now goods have come returned. Sir, when you exported, you paid export duty. When goods have come returned, your duty will also be returned. Section number 26 provides for refund of duty paid at the time of exportation, subject to fulfillment of the following condition. Number 1, sir, goods are returned to this person, otherwise than by way of resale. I sold the goods to Mr. Peter in US. He returned the goods to me. Peter only returned the goods to me. In that scenario, there is no export pay. Whatever duty I had given, the export duty will be returned. Sir, goods are re-imported within a period of 1 year. I send the goods, I should re-export, means return should happen within 1 year. Next, an application for such refund within 6 months from the date when proper officer makes a clearance order. You imported the goods, once you re-import the goods, you exported. Now your goods have come back. Your goods have come back into India and you have got a clearance order. The day you get a clearance order, within 6 months, go ahead and file an application that, sir, when I exported, I paid export duty. Now goods have come back. Please return my export duty. That is what is being told over here. Section number 26, whatever duty you had paid at the time of export, if goods come back, then post exportation, within 6 months, you can go ahead and file an application. Means after exportation, you are given a clearance order. Once you are given a clearance order, file an application and whatever duty you had paid will be returned to you. Section number 28D goes ahead and says, sir, whenever you have gone ahead and paid any duty under custom, it will always be assumed that you have passed on the burden unless you go ahead and prove otherwise. Section number 28D, presumption that incidence of duty has been passed on to the buyer. Every person who has paid duty on any goods under this act shall, unless the contrary is proved by him, be deemed to have passed on the full incidence of the duty to the buyer. Always remember one thing, every person who has gone ahead, for an example, I imported some goods, I am the importer exporter. If I go ahead and apply for refund, they will always assume that I have passed on the burden unless I prove otherwise. Got it, sir? We are clear till here. Now there are two case laws which are there. Piramal Ray versus Customs. They are going ahead and telling, you know what happened? Piramal Ray ka case mein, Piramal Ray went ahead and imported some machine. on the machine, actually they went ahead and paid crores mein duty. For an example, I'm telling they paid duty in crores, but actually on the machine, because of the wrong classification, they paid the duty. On the machine, there was no duty only which was there. There was no duty, duty was exempted. When there is no duty only, and you went ahead and paid an amount to the government, it is like you paid some money to the government by mistake. When you imported something on which there was no duty only, but still by mistake you paid 1 crore or 10 crore to the government. Later you realized after 2-3 years, oh no, I paid government ko some amount and that was not duty. Actually, because goods pay, there was no duty only. But I paid government ko 10 crore rupees as duty. Baba, when you paid that amount, that was not duty only, and hence 1 year ka time limit is not applicable. In this scenario, the court went in and held Piramal Ray should be refunded because he went in and paid an amount to the government. Government, being the bailee who has got an amount from someone, should return the amount irrespective of any time limit. Period of 1 year for claiming or refund under section number 27 is not applicable in case when refund of amount paid on account of wrong classification of the imported goods. I classified the goods by mistake into 20% duty wala goods. Actually, those were exempted, sir. I paid some amount which I should not have paid, sir. Please give my amount back. Government will say, okay, what you had gone ahead. So court went ahead and told what you had actually gone ahead and paid was not duty only. And section number 27 ka 1 year is applicable only when it is duty. And in this scenario, Piramal Ray ka case mein they went ahead and held the amount should be refunded to Piramal Ray. Basically, in this scenario, the time limit of 1 year shall not be applicable. Got it, sir. Next. Sir, Priya Blue Industries Limited. Refund claim cannot be a substitute for an appeal. Person aggrieved with the assessment order cannot seek refund without filing an appeal against such order. Everyone, what happened over here? An assessment order was passed. Now, against the assessment order, you should go for an appeal within 60 days. Now, what happened? For an example, this Priya Blue Industries, they did not go for an appeal. Once the time limit for appeal went off, now what they went ahead and did, against the assessment order, whatever amount was there which they have paid extra in the assessment order, they went ahead and applied for a refund. They are going ahead and telling, sir, refund claim cannot be substitute for an appeal. If reassessment order was passed, whatever amount was told in the reassessment order, you have paid to the government. Now, if you want a refund, first you have to go for an appeal. Only once the appellate authority goes ahead and gives an order in favor of you, you can go ahead and apply for a refund. Just because the reassessment order was passed, you paid the duty. Now you are telling appeal ka time limit is gone, but I'll go ahead and apply for refund. No. Refund claim cannot be substitute for an appeal. Person is aggrieved by an assessment order. Whatever extra you have paid, no. Because of the reassessment order, you paid an amount as duty. No. Now, if you want to go against it, first go for an appeal. Appeal comes in your favor, then apply for a refund. It says, person aggrieved with assessment order cannot seek refund without filing an appeal against such order. And time to file an appeal is always 60 days. Got it, sir. We are all clear till here. We are done with your chapter of refunds over here, everyone. In the next class, we will be going ahead and discussing the chapter of customs, import of goods at concessional rate of duty. All right, students, let's go ahead and now revise the next chapter. The next chapter is customs, import of goods at concessional rate of duty or for specified end use rules 2022. Now, sometimes students go ahead and tell me, sir, this chapter we have not seen anywhere. Baba, this chapter in your ICI material is given in chapter number 1. Okay, everyone. And I have gone ahead and taught it as a separate chapter altogether. Let's go ahead and revise it. The custom import of goods at concessional rate of duty rules 2000 and or specified end use rules 2022. Everyone over here. Now, these rules will apply to which notification? What is this? When will these rules apply? Baba, these rules will apply to a notification which provides for observations of this rule. Means, what does it mean? Sir, supposingly one government has gone ahead and given one exemption notification saying that, sir, if you go ahead and import, supposing this thermal bottle, government went ahead and told Ramesh, when you are importing this thermal bottle and the rate of custom duty instead of 30% will be 20%, 10% ka exemption will be given, it will not be 30%, it will be only 10%, but in the exemption notification, they went ahead and told that you have to go ahead and follow the custom import of goods at concessional rate of duty rules. Then, Baba, these rules will be applicable. Then it says an importer. So it says over here that these rules will apply to a notification which provides for observation of observance of these rules, or a, plus an importer intends to avail the benefit of the notification, and such benefit is dependent upon the end use of the imported goods being covered by that notification for the manufacture of any commodity or providing or output service or being put to a specified end use. What are they telling over here? They are telling an importer intends to avail the benefit of any notification or benefit which is dependent upon what, everyone? Which is dependent upon the end use of the imported material. So if they have gone ahead and told, for an example, they have gone ahead and told, Ramesh, if you go ahead and import supposedly parts of mobile phone, and out of that part you are going ahead and making finally mobile phone, then when you import parts might be, you'll have to pay concessional rate of duty, because you are going ahead and importing the spare parts and you are making mobile phone, because the end use is the mobile phone. The spare parts के लिए will not charge you 30%, will charge you only 20%, 10% का concession will go ahead and give you. So sir, this notification, an importer availing the benefit of this notification, and such benefit is dependent upon the end use of the imported goods being covered by the notification for the manufacture of what, everyone? Any commodity, or might be the notification went ahead and told, Ramesh, if you go ahead and import iPad, and iPad you are going ahead and using for teaching CA student, then iPad pay will go ahead and give you concessional rate of duty will be applicable. Then Baba, you'll get concessional rate of duty. Or if they are telling, if supposingly they went ahead and told, Ramesh, you went ahead and imported mobile phone ka parts, you are not going ahead and making mobile phone, but you are going ahead and giving it for what? Specified end use. Might be you are going ahead and supplying it to manufacturers of mobile phone, then they are going ahead and telling, Ramesh, in that scenario also, when you are importing the parts of the mobile phone, might be you are not using it for manufacture, but you are supplying it to someone who is going to use it, and the end use is what? Mobile phone. Then if there is an exemption notification which says, Baba, that such concession will be given, then you will get concessional rate of duty. Everyone over here. Now, but if you want to go ahead and get that concessional rate of duty, and the notification told that you have to follow custom IGCRS rules, then we are going to now understand about the custom IGCRS rules which are there. Everyone over here now. Sir, what is the first step? Always remember one thing. If you are an importer who wants to go ahead and import at concessional rate of duty, then at the first step, you always have to go to customs ka common portal. Remember, the customs ka common portal is icegate ka portal, icegate.gov.in. You have to go to icegate.gov.in, and you have to first step may provide one-time information in the form which is IGCR1, containing what? Containing the details, the name and address of the importer. My address might be, if I'm going ahead and taking the help of manufacturing the end product, I'm going ahead and taking the help of whom, everyone? Job worker. Then job worker ka details I have to go ahead and put. I have to provide one-time information relating to my name and address, my job worker's name and address, if any job worker is there, the goods produced or the process undertaken at the manufacturing facility of the importer or job worker, or both. What is the manufacturing goods which you are producing, what is the process you are going to undertake, the nature and description of the imported goods which are you are going to use in the manufacturing of goods at the premises of the importer or the job worker, particulars of exemption notification applicable to such import, whatever is the exemption notification which is there, which says that you will get concessional rate of duty, that exemption notification you have to provide. Then particulars you have to provide of the exemption notification, the nature of the output service rendered. Might be you have gone ahead and import, you are telling I will import iPad, and Baba, only for example I am telling, if you import iPad, you are going to use it for the final providing the service. They are telling, sir, please provide the nature of the output service which you are going ahead and going to provide using those imported goods, the particulars of premises where you are going to use this to be used in case of inter-unit transfer, particulars of premises intended to be used in case of inter-unit transfer, means where you are going to transfer it. If do you have any other units also where you are going to transfer these goods, details of end use recipient if imported goods are supplied for end use. Might be you are going ahead and telling I am getting parts of mobile phone I'll not use, but I'll give it for people who are going ahead and using it to make mobile phone. So sir, what is the details of the end use recipient if imported goods are supplied for the specified end use? Who is the end use recipient? Then the intended port of import. All this one-time information you have to provide in IGCR 1. And sir, post acceptance means you will go ahead and file it on the IceGate portal. And once the acceptance is done, you will get one IIN number. Import of goods at concessional rate of duty identification number shall be generated. Sir, at the second step, what will I do? At the second step, they are going ahead and telling over here. First step is what, everyone? Providing the information. Now, once you are providing the information, what is the second step? Now, you will go ahead, go to the jurisdictional DC or AC of what? Customs, and you will give him a bond plus bond with security or surety as deemed appropriate by the AC or DC. He will go ahead and tell you this much amount of bond I want. Means he will go ahead and tell you, Ramesh, over a period of this 1 year, you are going to import for this much. For this import, this much concession will be provided, and that concession amount you give me a bond. And he will go ahead and take from you a bond with a surety or security. Basically, he'll take a security which is there. Are we clear? Now, at the third step, what will you do? You will go ahead and import your goods. First, you generated your IIN number. Secondly, you gave a bond with bank guarantee. Basically, your security and surety. Third case, you imported the goods. Fourth case, once your goods have come to the port, it is in the custody of the custodian. You will go ahead and clear your goods. So, you will go ahead and file your bill of entry on the IceGate portal. And Baba, in the bill of entry, you have to mention your IIN number which was generated earlier. And Baba, along with that, you have to give your continuity bond number. Basically, you would have gone ahead and given him a bond. That bond continuity bond number you will have to go ahead and give. And self-assessment has to be done. And you will have to go ahead and make the payment of the duty which is there. Everyone over here. Now, once you go ahead and file your bill of entry, sir, you did your self-assessment and you paid the duty at concessional rate. Now what will happen? Fourth step when you file the bill of entry, now this ACDC at the port where you imported it, Baba, this was your ACDC who was having jurisdiction on you. This is who ACDC, who is at the custom port where your goods have been imported, might be the goods where you imported, that was the Kerala port. So Kerala port ka ACDC, he will allow the benefit, fifth step mein, allow the benefit of the exemption notification. You have to pay concessional rate of duty and he will give you a clearance order for home consumption. Now, fifth step, when he gives you the clearance order, along with the fifth step, one more step happens, which is 5th A, which is once the bill of entry is cleared, bond will be debited. So, you went ahead and gave a continuity bond wherein you told, sir, over a period of time, might be continuity bond of 100 crore was given along with the, now, when you got your concession, supposingly 10 crore rupees ka concessional rate, concessional duty was allowed, means you did not pay 10 crore rupees, so they will debit 10 crore rupees and you will have only 90 crore rupees remaining over here. Are we clear, everyone? And it says bond gets debited automatically in the custom automated system and the details will be made available electronically to the jurisdictional custom officer that, sir, the bond which was given along the, against this bond, this much amount of import has been done. Once the import is done, now what will you do, everyone? Your goods are cleared, you can get it to your premises. Now, once the goods have come to your premises, remember one thing, at the seventh step, you should maintain accounts bill of entry wise. Bill of entry wise means every bill of entry wise, how much goods had come, how much goods you used, everything. Clearly indicating the quantity and value of goods imported, the quantity and the date of receipt of goods imported in the premises, the quantity of such goods which are consumed, the quantity of the goods which are sent for job work, nature of the job work which is carried out, the quantity of the goods received after job work, the quantity of the goods which you have re-exported, if any, means you re-exported, and the quantity of the goods remaining in stock. And all these accounts should be produced to the jurisdictional AC or DC who is sitting on your head whenever he demands. Now, sir, eighth step will come. It goes at, okay, remember one thing, always, whenever there is any non-receipt or short receipt in your premises, that should also be informed to the online when you are filing your form. IGCR 2 may you have to go ahead and inform whatever is the short receipt or non-receipt. Sir, at the 8th step, always remember, sir, this is your accounts which you have to maintain. And at the 8th step, they are telling, sir, you should always submit one monthly statement in the portal, which is IGCR 3. Basically, there is a monthly statement for those people who are going ahead and importing at concessional rate of duty. They have to go ahead and submit IGCR 3 by 10th of the next month. Whatever imports are done during a period, whatever details they have to furnish. There are a lot of details which they have to furnish, what they have sent for job work, what they have received from job work, what they have sent for internet, all the details they will mention. The importer may submit the details of the goods consumed in GSTR 3A at any time for recredit. People see, monthly statement is IGCR 3. For recrediting of the bond amount, you are telling, sir, I imported, I got a concession amount of this much, you are debited my bond amount, please recredit my bond amount. Why, sir? Because I have already consumed it for the intended purpose which was there. So it says for recrediting, which shall become a part of the monthly statement of the subsequent month. What they are telling over here, the importer may submit details of the goods consumed in what everyone IGCR 3A at any time. Anytime you can go ahead and tell for recrediting of the bond amount which shall become a part of the monthly statement of the subsequent month that sir this much amount of goods were being consumed. Everyone over here at the ninth step, what will you do? Imported goods, baba, use it for the manufacture of the goods or providing of service or for the specified end use. And baba, if you have done this, then no problem. Then no problem. Once you have gone ahead and used it, just inform the officer that sir I've used it. And what will happen in this scenario? They will go ahead and recredit the bond. Are we clear? But sir, if you don't use it, then can you go ahead and re-export it? Yes, they are going ahead and telling re-export unutilized or defective goods within 6 months of within a period specified in the notification. 6 months from the date of import where time limit is not specified. Either you should re-export within six months or the time limit which is specified. If time limit is specified, within the time limit you should re-export the unutilized or the defective items which are there, or either within the time specified in the notification, you should re-export the defective item or the unutilized item, or within 6 months if time is not being specified. Sir, remember further extendable. If you re-export you want to do, 6 months is there, it can be extended by how many months? 3 months by the jurisdictional commissioner if sufficient reason is shown. Always remember one thing, whenever you are going ahead and re-exporting, please record the details necessary export document in the monthly statement IGCR 3 which you are going ahead and giving every month. Record the detail of the necessary export document in the monthly statement. And also it says re-export value shall not be less than the value of the said goods at the time of import. At the time of import you have gone ahead and spent on those goods $1,000 and baba export ke time pe it is $800. Baba, it should not happen. In that scenario they are going ahead and telling this is violation. Can I go ahead everyone? Everyone over here, sir, supposingly we go ahead and clear it within the domestic tariff area, then they are going ahead and telling whatever import duty you are not paid, whatever concession you had got, you have to pay that concession amount along with the interest. It says cleared for home consumption, unutilized or defective goods, pay the applicable duty with interest at the rate of 15%. Record the particulars of the clearance in the monthly and payment of duty in the monthly statement which is IGCR 3, the monthly statement which you are going ahead and furnishing. Always remember one thing, the next one. Sir, whenever you are clearing the goods within the domestic tariff area, whatever custom duty you are not paid at the time of clearing, sir, that custom duty, along with that, you have to pay interest also. The day the duty was payable, and now when you are going ahead and paying the duty, whatever is the rate, interest is 15%, calculated by the number of days, you have to pay the interest. Sir, what is the procedure? Rule number 7 says procedure for allowing the goods for job work. Remember one thing, job work means any treatment or process or manufacture consistent with the exemption notification. Whatever is told in the exemption notification, it should be consistent with that. Undertaken by a person on goods belonging to the importer. Same like GST. Baba, you are undertaking treatment or process on another person's good. Here the another person is the importer on whose goods you are doing the job work. But remember one thing, job work ke liye they have told excluding gold, jewelry, articles thereof, or any precious metal or stone. It means those items can't be sent for job work. Now, sir, what is the procedure for sending for job work? Goods which are inputs you have gone ahead and imported. Sir, you have cleared it at concessional rate of duty. Number one step is you should maintain the goods, records of the goods which are sent for job work, and also mention it in your monthly statement IGCR 3. Now, when you are sending the goods for job work, remember one thing, you should send the goods along with an invoice, and along with the invoice, wherever applicable, e-way bill. It says along with invoice or wherever applicable, e-way bill. Sir, in GST we learned delivery challan. Yes, Baba, in GST it is delivery challan. Here also it should have been delivery challan. But in the Custom Act, they have gone ahead and told invoice. So for our exam, we'll go ahead and use the word invoice only. Sir, invoice or they are telling e-way bill. Sir, specify the description and the quantity and the goods will reach to the job worker. What will the job worker do? The job worker shall maintain the accounts of the goods receipt of the goods, manufacturing process which he has undertaken, the waste generated if any, produce the account to the jurisdictional custom officer on demand, and post completion send the processed goods back to the importer or to another job worker as directed by the importer for carrying out the remaining process, and it should go under the cover of an invoice or the e-way bill or an e-way bill. Are we clear everyone? And sir, you should get the goods back within how much time everyone? Third step, the goods should come back within 6 months from the date of invoice or the e-way bill. Remember one thing, if goods are not utilized as per the job work particulars, jurisdictional custom officer shall take action against the importer under rule number 11 and 12, which we'll talk later. The next one over here is, sir, can I send the goods for inter-unit? Remember one thing, you got the goods from outside India. Sir, you cleared it at concessional rate of duty. The boss from his factory, one unit, unit A to unit B, can he send the goods? Yes, sir, he can send the goods. First of all, you should maintain. Step 1 is maintain the records of the goods which are sent for inter-unit transfer during the month, and also mention it in the statement, which is a monthly maintain records, and mention in the statement IGCR 3. This is one standard. Secondly, whenever you are sending, always send along with a cover of invoice or wherever applicable e-way bill, and you should mention the description and the quantity. The goods reached over here, process is done, then what will you do? You should get the goods back to the premises, or you can send it from here to a job worker also. Sir, whenever the importer is sending the goods, he shall, in relation to the transfer of goods to another unit, maintain accounts of the receipt of goods, that the goods have come back, manufacturing process which was undertaken in the unit B, and sir, also the waste which was generated. Basically, these are both are his unit only. Sir, what was the process undertaken in unit B? And sir, what was the waste generated? All the details he has to maintain. Produce the accounts when asked by the jurisdictional custom officer, and also after completion of the said process, he should send the goods back to the premises, means he should get the goods back from here, or he should send it to a job worker for carrying out the remaining process. The next one over here is, sir, procedure for supplying the imported goods to end use recipient. What do you mean by end use recipient? I imported some parts of mobile phone. I imported it. I claimed the concessional rate of duty. I am not going to use it. I am going to supply it for the end use, which is manufacturing of mobile phone, to someone else. In that scenario, what are the records to be maintained? By me. They are telling, first you imported the goods, cleared the goods at concessional rate of duty. Now, number 1, you should maintain the records of the goods which you have supplied for the end use recipient during the month, and mention it in the monthly statement, which is IGCR 3. Secondly, you should send along with a cover of invoice and wherever applicable e-way bill mentioning the quantity and the description. Now, end use recipient, what will he do? In case of supply for replenishment, means his stores were over, so it was replenishment, or export against the supply, the end use recipient shall maintain the accounts of in receipt of goods, manufacturing facility under process undertaken, waste generated, produce the account. Same thing, everyone. Produce the account when demanded by the jurisdictional custom officer, and produce the relevant record. He should also give the records to me, to the importer, for the fulfillment of benefit under the notification. Are we clear, everyone? These are the records to be maintained by end use recipient. Now, the next one over here is, sir, if you have gone ahead and got some capital goods from outside India, you have used it. You have used it for the purpose you had got it, and you had claimed concessional rate of duty. You had used it already for the purpose you had got it. Now, after that, if you want to clear it in India, then what will happen? That is being told over here. Clearance of capital goods after being having used for specified purpose. I got a machine over here. Number 1, I cleared it at concessional rate of duty. Number 2, I used it for the intended purpose or the specified purpose which was there. Number 3, I want to clear the machine after the specified purpose. Remember one thing over here, you have to pay the differential duty on the depreciated value, and depreciation means will be provided on straight line method. Remember one thing, value of capital goods was there. On that straight line method, depreciation will be done. Whatever the value of the goods was there at the time of import, minus, sir, first year, 4% for per quarter, 4% for 4 quarter. If, sir, you are re-exporting after, means if you are clearing domestically within the first year, then it is how much, everyone? 4% second year, 3% third year, 3% fourth year, 2.5 fifth year, everyone. 2.5, and thereafter it is 2%. Remember, this 4% is per quarter. Are we clear? Or part thereof. And sir, whatever is the remaining value, means you take the value of the capital goods minus all this depreciation till the time of clearance. Basically, they are going ahead and telling till the date of clearance, and you will get the value over here. On the value, you have to pay the differential duty, plus interest also has to be paid at the rate of 15%. It says no upper limit for such depreciation. Depreciation will always be from the date the capital goods had come into use till the date of clearance, and the importer shall have option to pay voluntary payment of duty along with interest, and the particulars of such clearance and duty payment shall be recorded in the monthly statement, which is what, everyone? IGCR 3. Sir, now there comes rule number 11 over here. Rule number 11 goes ahead and says failure to perform the intended use, or you did not re-export or comply with the condition, or where the payment is not or the payment is not paid, means whatever you have to pay you did not pay, or short paid, jurisdictional AC or DC shall initiate recovery proceeding by invoking the bond of an amount. Baba, whatever bond you had given along with the bank guarantee, along with the guarantee, surety or security, they will invoke the bond and telling invoke the bond of an amount as under in case of notification that provides for duty exemption, differential duty along with interest from the date of import till the date of payment of the entire differential duty. They will go ahead and invoke the bond. Basically, they will realize the amount. Or in case when notification is other than that provides an exemption benefit, the notification had not gone ahead and provided what everyone? Concessional rate of duty was not provided. It was some other benefit which was provided out of the notification. Then they are telling an amount equal to the assessable value of the imported goods. You will have to pay as what everyone? They will go ahead and recover from you. And it says also a penalty will be imposed on you. The importer or the job worker who contravenes any of the provision of this rule shall be liable to a penalty which will be to an extent of how much everyone? Rupees 2 lakh. This IGCR rules which are there from exam point of view, you can call them B graded. Why B graded, sir? Because since last 2 times they have always been amended. This time, of course, there is no amendment, but still, I believe that these rules are important. From exam point of view, B graded. Sir, what kind of a question they can go ahead and ask? They can go ahead and ask what is the one-time information which is being provided. They can go ahead and ask what are the accounts which are to be maintained, right everyone? They can ask you a small question over here. They can also go ahead and ask what is the procedure for sending the goods for job work, what is the procedure for sending the goods for inter-unit. They can ask you about what is the procedure for supplying imported material for end-use recipient. This is one of the most important point, clearance of capital goods after having used for specified purpose. Sir, how to find out the value, on value how to find out the duty? Please do this question and go. Please do some questions on this and go. Right, everyone? I'll go ahead and close my discussion on the chapter of import of goods at concessional rate of duty or specify or for specified end use rules 2012. Congratulations, people. Done. Bye, guys. All right, students, let's go ahead and now revise the chapter of warehousing. Sir, warehousing as a chapter is very, very important from exam point of view. Let's go ahead and start revising now. Warehousing. Sir, why is warehousing facility there under custom? Sir, might be your goods have come. Your goods have come, but you have lack of storage. So, sir, you can use the warehousing facility available under custom. Sir, you don't have funds to pay the duty, so you can file a bill of entry, which is into bond bill of entry, give a bond, and your goods can be transferred to the warehouse. Later, when you have funds, you can go ahead and get it cleared. Early shipment arrival means your shipment has arrived early and you don't want to clear it, then you can keep it in the custom warehouse. Or intention to trade might be you want to do bond to bond transfer and hence you want to keep the goods in the warehouse. Now they are going ahead and telling, sir, section number 57 to section number 73 will be going ahead and learning this in this chapter. Now the first section number 57 goes ahead and talks about a public warehouse. Public warehouse is a warehouse where anyone's goods can be kept. So custom mein public warehouse is a warehouse where anyone's goods can be kept. The second kind of warehouse is a private warehouse where only the goods can be kept of the licensee who has been given license under custom. And the last warehouse which is there is section number 58A, which is talking about a special warehouse. Special warehouse is only for dutiable notified goods. Sir, following class of goods shall be deposited in a special warehouse like gold, silver, other precious and semi-precious metal. Goods warehouse for the purpose of supplying to duty-free shop in a custom area, supplying as stores to a vessel or aircraft, or supplying to a foreign privileged person. Baba, in that scenario, they are going ahead and telling special warehouse where goods will be stored. Always remember one thing, section number 57, public warehouse, anyone's good can be stored. 58, private warehouse, only the licensee's goods can be stored. And 58A, special warehouse, only for notified goods. Are we clear, everyone? Remember, all the license is given, always the license is given by the principal commissioner or commissioner of custom. Remember, the public warehouse and the private warehouse are always on record based control. They are always on record based control and physical control of the department. Custom department is not there. However, in case of special warehouse, Baba, custom officer ka physical control is there. Lock and key is with the proper officer. Lock is with in Baba, the lock will be there in the warehouse only. Key will be there with the proper officer. Basically, he will go ahead and maintain that. Basically, he'll lock the goods in the special warehouse and he will not allow anyone to enter or remove the goods from the warehouse without permission. Always remember, these people has to maintain record, these people has to maintain record, and here physical control will be there. In case of any violation, 58B comes which goes ahead and says that the cancellation of the license will be done when licensee contravenes the provision of the act, rules or regulation and breaches the condition of license. Principal commissioner who gave you the license will go ahead and he may cancel the license after providing an opportunity of being heard. Pending an inquiry, principal commissioner will suspend the operation and he will go ahead and do the inquiry. And after inquiry and during suspension, remember, no goods shall be deposited during suspension. And after the inquiry has got over, either he will allow you to continue as a warehouse keeper or he can go ahead and say your license has been cancelled. And once the license has been cancelled, all the goods have to be removed from the warehouse. Within how many days, everyone? 7 days. So what are the three sections we learned it now? We went ahead and learned section number 57, public warehouse, 58, private warehouse, 58A, special warehouse, and 58B, where your license can be cancelled. Now, the next section over here is, sir, my goods have come in the custom port. Now, we'll go ahead and understand. Sir, my goods have come in the custom port. Sir, goods will be with the custodian for 30 days. Either within 30 days you transship it or you clear for home consumption or you send it to the warehouse. If you don't do that, then custodian was empowered to go ahead and give you a notice and he will take proper officer permission and he will go ahead and he will sell off the goods and recover his dues. Right, everyone? So, sir, don't do all those things. When your goods have come, please go ahead and file a bill of entry under section number 46, which is an into bond bill of entry. Now, when you are filing an into bond bill of entry, you will do your self-assessment. Always remember one thing, section number 59 comes, which says that warehousing bond has to be given, which is 3 times of the self-assessed duty, and you'll bind yourself to comply with all the provision of the act, rules or regulation, and to pay on or before the due date specified in the notice all the duties. You are going in and telling, sir, on or before the due date of basically when you go ahead and issue me notice, whatever duties, interest, fines, etc. you're telling, I am binding myself, I will go ahead and pay. Otherwise, bond will be given with the bank guarantee. Please go ahead and release the bank guarantee and take your money. Everyone, they are going ahead and telling over here 3 times of the self-assessed duty which is there. You have to bind yourself to comply with all the provision of the act, rules and regulation and to pay on or before the due date specified in the notice all the duties and interest and to pay penalty and fines for contravention of the provisions of the act, rules or regulation. It says AC or DC may also permit you to go ahead and give a general bond. Basically, this is known as a consignment bond and he can also allow you to give a continuity bond which is there for a period of 6 months or 1 year. It says with respect to goods imported over a specified period which can be 6 months or 1 year. And it says bond will continue even if you transfer from one warehouse to another warehouse. And if goods are transferred to another person, remember, if you do a bond to bond transfer, always the transferee has to go ahead and give a fresh bond. I went ahead and told you what section number 57. Section number 57 went ahead and told, sir, public warehouse 58, private warehouse 58A, special warehouse 58B, warehouse ka license can be cancelled. 59, warehousing bond. Now comes section number 60, that officer will go ahead and check your assessment which was done. Automated clearances are also given. Sir, officer will go ahead and check your bond with the basically bill of entry which you have filed into bond bill of entry along with the bond, and if he finds all the self-assessment etc. is done correctly, and then he will go ahead and give a section number 60 may warehousing ka order. Always remember one thing, he will go ahead and give a warehousing order where he will permit you to remove the goods from the custom station. E-clearance orders are also given nowadays on the basis of custom. Automated system will go ahead and give you on the basis of your risk analysis basically. Can we go ahead, everyone? And now you can take your goods and store it in a public warehouse or private warehouse or Baba special warehouse. Remember one thing, when your goods are going to the warehouse, if they are going to the public warehouse or private warehouse, in that scenario, always remember e-way bill will be required. But when it is going to a special warehouse, because custom department officer is always there along, in that scenario e-way bill is not required. And remember one thing, only dutiable goods can be stored in a warehouse. Where duty is not there, those goods they don't allow to store in a custom warehouse. So we learned 57, 58, 58A, 57, 58, 58A, 58B, 59. 60 May clearance order is given. Remember one thing, from the clearance order, the time limit for the warehousing period starts. So section number 61 comes now, which goes in and talks about the warehousing period. Remember one thing, if you are a 100% export oriented unit, you are an electronic hardware technology park, software technology park, or you are a unit which is availing what? Manufacturing facility, then for you the warehousing period is still clearance. No problem, you can keep the goods till clearance. Extension is not required and any interest etc will not be levied because sir, because other cases may 90 days may if you don't clear the goods, then the interest is levied. But in case you are a 100% EOU, ESTP, STP, or unit availing manufacturing facility, till clearance you can keep the goods. Extension is not required, and sir, interest also will not be applicable. But other than that, normal people they have gone ahead and told. Other than those people, they are telling for you can store up to 1 year from the warehousing order. Remember one thing: 1 year is not from into bond. 1 year is not from into bond. 1 year is from warehousing order. 1 year has to be seen from warehousing order. You are given maximum time limit of 1 year. Maximum time limit is 1 year, and 1 year can be extended also. Means maximum 1 year, 1 year, 1 year, 1 year. They can keep on extending. And sir, interest free period is only 90 days. 90 days from which date? Remember in your custom, 90 days has to be seen from the warehousing order. After 90 days, the interest will start. Are we all clear till here? And then it says no custom duty payable on clearance if then no interest will be payable. For an example, when you deposited the goods, the rate of duty was 10%, but when you filed an ex-bond bill of entry, that time the rate of duty was 0%. Baba, 0% means zero custom. At the time of depositing, duty was there. So they deposited dutiable goods. But at the time of clearance, the duty became zero. So Baba, when you are paying zero, interest on zero will be also zero. Interest also will not be payable. But remember one thing, everyone. People tell me one thing. If I go ahead and this is the into bond and this is the warehousing order. Warehousing order say how many months I can deposit everyone? Supposing they allowed me to deposit for 4 months. They will allow me to deposit for 4 months. And remember one thing. If 90 days are getting over here, Baba, 90 days are getting over here only. If I go ahead and clear over here, I just have to pay the duty. Interest is not payable. I just have to pay the duty. I don't have to pay the interest. Sir, if I go ahead and clear over here, okay, tell me one thing. This is the into bond bill of entry, rate of duty and rate of exchange. Here I will file ex bond bill of entry, rate of duty and rate of exchange. Supposingly the goods ka value is $10,000. In $10,000, Baba, can you tell me rate of exchange is the earliest bill? So rate of exchange will always be this, which is the into bond. Supposing the rate of exchange is over here 70 and here is 75. Which one will take? 70. Sir, rate of duty, which one will take? Sir, here it is 10% and here it is 15%. Sir, rate of duty is always deferred and here it will come 15%. Anyone, any doubt till here? But sir, tell me one thing, is there any interest which will be payable? Interest will not be payable. Sir, supposingly I don't clear within 90 days, I cleared over here. Because it is within the permissible limit, again, sir, $10,000 into rate of exchange will be 70 only. Rate of duty, here you filed ex bond, right everyone? On the date of ex bond bill of entry, rate of duty supposingly was 20%. Which one will you apply, everyone? Rate of duty will be on the date of duty is always Baba. Duty is always deferred. Deferred means ex bond bill of entry. Which one will you apply? 20%. Can I go ahead, everyone? Banu. Yes, everyone. 20%. Can we go ahead, everyone? Now, sir, supposing the time period is gone. And now, if I go ahead and file one ex bond bill of entry, it is called what, everyone? Improper removal. In this scenario, if the rate of duty is supposedly 5% over here, the rate of duty will be applicable as on the last day. The last day on when the goods has to be cleared, the last day will be your goods were allowed to be stored for how many months? 4 months, and the last day is over here. On this day, whatever rate of duty was there, that will be applicable in case of improper removal. Sir, after 90 days, if I am clearing here, will I have to pay interest also? Yes. If I am clearing over here, will I have to pay interest also? Yes. Remember one thing, interest has to be paid from the period after 90 days. If you are clearing over here, this many days ka interest. If you are clearing over here, this many days ka interest. Is my point clear to all? Can we go ahead, everyone? Please do a question on this and go. Very, very important. If you clear within 90 days, interest is not payable. After 90 days, interest is always payable till the date of clearance. Sir, if goods are not removed within the permitted time, it's an improper removal. Rate of duty will be as on the date of deemed removal, means the last day when you should have cleared the goods. On that day, whatever the duty was there, that will be applicable. Section number 51, 15(1)(b) is not applicable in case of improper removal, because 51(b) told ex bond bill of entry may whatever rate of duty is there, that you have to apply. But in case of improper removal, the last day when the goods should have been cleared, that take a rate of duty will be applied. I hope it is clear. People, we went ahead and understood section number 57, public warehouse 58, private warehouse 58A, special warehouse 58B, license cancellation. Sir, 59, bond 60, warehousing order 61, warehousing order say time limit always. Sir, 61 warehousing period, 62 and 63 is omitted. 64 which is there goes ahead and talks about your rights, owner right to deal with the warehouse goods. You can go ahead and inspect the goods, deal with their containers to prevent loss, deterioration or damage. You can sort the goods or you can show the goods for sale also. Are we clear, everyone? You can sort out the goods, you can also go ahead and show the goods for sale. Then everyone, section number 65 comes that when you have gone ahead and stored your goods in a warehouse and you want to manufacture in a warehouse with the permission of the principal commissioner or commissioner, you can go ahead and do the warehouse manufacturing. You know what you thought? You thought you will get the goods out from outside India, put it in a warehouse, don't pay any duty, manufacture the goods and export. No duty is payable at all. Can we go ahead, everyone? And hence, but remember one thing, if you have done the manufacturing in a warehouse and you are going ahead and exporting it, no duty is payable on the imported material used. But if any waste is generated, destroy the waste and no duty will be payable. But if waste is cleared in the domestic tariff area, in India, if you basically cleared in India, then paid a duty on the waste or refuse as if waste or refuse was imported. For an example, imported material pay rate of duty is 20%, but waste pay rate of duty is 5%. So they will imagine that you had imported waste and rate of duty payable will be 5% on the waste or refuse. But sir, if I go ahead and make in the warehouse and clear it in India, remember one thing, if it is cleared in India, import duty on imported material used in the finished good, whatever imported material was used in the finished goods which are cleared in India, on that imported material, whatever duty was payable, you have to pay now. Plus, whatever the waste or refuse is generated, on that also in the waste and refuse, they are telling over here, custom duty is payable on the imported material which is there in the waste and refuse. So imported material in such waste or refuse, imported material pay rate of duty is 20%, waste or refuse for 5%. How much duty you have to pay? They will imagine as if this waste or refuse may how much imported material is there. Imported material pay what rate of duty? 20%. You will have to pay 20%. Are we clear, everyone? The next one over here is section number 65 done. Section number 66 is total bakwas. Section number 67 says you can transfer the goods from one warehouse to another warehouse into bond, ex bond, bill of entry, etc. Not required. No duty is payable. Same bond will continue. Section number 68 goes ahead and says that, sir, you do one thing. You go ahead and file one bill of entry for home consumption. Section number 68 says file a bill of entry for home consumption, file an that is ex bond bill of entry, do the assessment, pay the duty, clearance order will be given and bond will be cancelled and returned to you. Remember one thing, before clearance for home consumption you can relinquish the title and you don't have to pay the duty. Relinquishment of title also can be done for the goods within the warehouse and you don't have to pay any duty. Remember one thing, if offensive goods, then you will not be allowed to relinquish the title. Everyone over here, I went in and told you about public warehouse, private warehouse, special warehouse, 58A and 58B cancellation. 59, I went in and told you about bond, 3 times the amount of the duty you have to give the bond. 60, clearance order. 61, warehousing period. Baba, interest period is only 90 days. Can I go ahead, everyone? Warehousing period came, 62, 63 is not there. 64 is owner's right. 65 is manufacturing facility. 66 came, which is total bakwas. 67 goes ahead and says transfer from one warehouse to another warehouse. 68, everyone, clearance for home consumption. File an ex bond bill of entry, pay the duty whichever is there, and they will give you a clearance order, and you can take the goods and come home under section number 68. 69, everyone, you can go ahead and export the goods. If warehouse goods, you go ahead and export, direct export. So you went in and got the goods, put it in the warehouse, river. You got the goods, you put it in the warehouse, and now you are going ahead and exporting. Without payment, bond will be cancelled. You can export without payment, bond will be cancelled and returned. You have to file a shipping bill plus export duty if any has to be paid. Clearance order is also possible. E-clearance order on the basis of custom automated system will give on the basis of your risk profile. And it says no ex bond bill of entry also required. Directly you can go ahead and export from here. Are we clear, everyone? So I am going ahead and telling either you clear for home consumption or you go ahead and export, or you can also transfer it from one warehouse to another warehouse. Section number 70 goes ahead and says section number 69 is done, right? 67 done, 68 done, 69 done. What is section number 70, everyone? Section number 70 goes ahead and talks about volatile goods. Allowance in case of volatile goods. Supposing you have got alcohol from outside India, or might be you have got some petroleum products, etc., which have evaporated, then they are going ahead and telling warehouse goods at the time of taking the delivery found deficient in quantity on account of natural loss. The ACDC may remit the duty, means he can go ahead and tell you, for an example, 1000 liters alcohol you got, now only 990 liters are lying, then he will go ahead and tell you can pay the duty only on the remaining goods which are there. Goods are notified, but goods should be notified under this section having regards to the volatility. Then you have to pay only on the goods which are remaining after natural loss. Then comes section number 71. Section number 71 says, please don't remove the goods except as told in section number 67, transferring from one warehouse to another. 68, home consumption. 69, export, or as told in the act. Sir, what if I don't follow section number 71, whatever is telling? Then section number 72 will come and say that goods are deemed to be improperly removed. Goods improperly removed from the warehouse. Always remember one thing, when they are removed in contravention of section number 71, means you have not gone ahead and transferred from one warehouse to another warehouse. Sir, if you are not cleared for home consumption, if you have not exported, or if you have not done as told in the act or rules, then what you have done is improper removal. Or if you don't remove the goods after the permitted period or the extended period which was given, if you have not cleared the goods, when you are clearing, it will be deemed as improper removal. So it says when they are removed after the expiry of the warehousing period, or when the goods with respect to which bond is executed and which have not been cleared for home consumption or exported are not accounted for to the satisfaction of proper officer. What they are telling, when goods with respect to which bond is executed and which have not been cleared for home consumption, you have not cleared for home consumption also, you have not exported also, and they are not accounted to the satisfaction of the proper officer. He is telling you have not cleared it, you have not exported. Where are the goods? You have not accounted for properly. Then you will say those goods which are missing, I will deem that you have gone ahead and improperly removed those goods. Whenever it's a scenario of improper removal, remember, proper officer will demand the full amount of duty immediately along with interest, fine, and penalties. Here we are done with your chapter of warehousing. Warehousing में section number 73, 73A is there, which is total bakwas. People, warehousing, section number 57, public warehouse. 58, private warehouse. 58A, special warehouse. 58B, cancellation of license. 59, warehousing ka bond. 60, everyone, warehousing order. 61, warehousing period. 90 days without any interest you can store. Remember, till the time they will give you maximum 1 year. Supposing they give you warehousing period of 4 months, remember 90 days is interest free. After that, when you clear, you have to pay interest. And sir, if I don't clear the goods within the warehousing period, after that, if I clear, it's an improper removal. Rate of duty as on the date of the last day when you should have cleared the goods, that day ka rate of duty will apply. This is most important for exam. And then we came to section number 62. 63 is not there. 64 is owner's right. 65 is manufacturing. 66, total bakwas. 67, transfer from one warehouse to another warehouse. 68, home consumption. 69, export. 70, volatility. 71, what is proper removal basically. And 72, what is improper removal. Remember, 72 is also a good section. 61 is a good section. 72 is a good section. Then Baba, manufacturing facility wala point which I have told you is also a good section. This is a, in my opinion, not a B, not a Baba, in between somewhere. You can call it a B graded chapter. 4 marks is something which I expect out of this chapter, but don't leave this chapter. They can ask you a question on calculation. I'll tell you the favorite question which is there is rate of duty. People, calculation of, first of all, they will tell you to calculate the CI value. First, you calculate the CI value. On the CI value, what will be the duty? Are we clear? On the duty, they will go ahead and ask you rate of duty, which rate of duty will apply. Then they will go ahead and ask. First, they will tell you to calculate custom duty in case of warehouse goods. Plus, they will also tell you to calculate interest. This is the favorite question which comes out of this chapter. I'll go ahead and close my revision on the chapter of warehousing. Done. All right. Good morning, everyone. Let's go ahead and start our class today. People will be going ahead and doing foreign trade policy. Now, foreign trade policy will be going ahead and doing from our chart book. In my chart book, approximately 7 to version 10. Version 10 में approximately 7 to 8 pages का FTP I have given. Now, that FTP which I have given in your chart book is the detailed FTP which is there. The detailed FTP I have gone ahead and given in your chart book. Okay, everyone? Now, if you are a student who has taken the regular batch, this lecture is for you. If you have taken our fast track batch, this lecture is for you. If you are going ahead and watching it as an amendment, if you are watching the Q&A focus batch, for everyone, this lecture is common. Okay, everyone, because FTP is now being amended. Not lot of amendments have come, but still, we'll be going ahead and in detail learning the FTP now. Sir, I have the version 10. Then, Baba, you will have this chart already with you. Sir, I don't have version 10. Do one thing. Go to rameshsoni.com. Baba, in rameshsoni.com, free resources. rameshsoni.com, free resources. CA final November 23/May 24 folder. I'll upload these charts as FTP. You can download from there and use these charts also. Done? Now, sir, FTP which you are going to teach, I don't want you guys. I want you guys to refer my chart book. Okay? In the chart book, the FTP which I have given is more than sufficient for that 5 marks which are there because I have given in detail 8 marks ke liye. 8 pages I have given which are in detail. 5 to 7 marks is maximum which comes in the exam, whether you are writing in November 23 or May 24. But 5 marks is something which is maximum. Still, okay, 7 marks came. But you will be very easily able to attempt with the chart book which is there because 7 to 8 pages is more than enough. Done? Now, sir, do we have to read the textbook? In the textbook, I have given foreign trade policy of 30 pages which is there. That is very much in detail. That is very much in detail. Now that ICI has come up with the statutory update material, Baba, you have to go to the ICI ka website. ICAI ka website which is there. In ICI ka website, students, Board of Studies Knowledge Portal. In Board of Studies Knowledge Portal, here, click here for Board of Studies. Here, if you see the amendment or development which has been given by the ICI, in that CA final, in CA final indirect tax laws, in indirect tax laws, you will see over here, customs and FTP ka amendment is there, right everyone? This amendment material, you will be using it for your FTP. If you want to go ahead and read the text, correct everyone? So for that, sir, but it is 42 pages with the ICI ka material as given. Now, if you see the amendment material over here, they have given approximately 42, 43 pages. Baba, 42, 43 pages. If I go ahead and put it in a sheet and give it to you, it will be 20, 22 pages only. Mine one, which is 30 pages in the textbook, is even more detailed than this. But you don't need so much. You go ahead and do your chart book properly. Okay? Then I will go ahead and tell you if there is any other point which are there additional, which you have to read from here. You read that and Baba solve question answers, and that is more than enough. For 5 to 7 marks, you can't go ahead and invest more time than this. Done, everyone? So people who are watching at home, people over here, so how will we go ahead and study the foreign trade policy? We'll be studying with the chart book. Do the question answers also. You can do the question answers after you are done studying from the chart book. Do the question answers. You will see you are able to attempt everything. But to read the text, you can refer to the ICI ka material which has been given. Done, everyone? Chalo. Let's go ahead and start with foreign trade policy. But nothing is there. Very, very easy chapter. Foreign trade policy. Listen to me very carefully. Tell me one thing. What is the objective? What is the objective of a person, if I go ahead and say economically, to become rich? Correct or not, everyone? If I go ahead and talk about India as such, India also wants to become rich. Yes or no? Yes, sir. Now, how do you become rich? If I sell goods to my wife sells goods to my son sells goods to me, will we ever become rich? No. So, to become rich, what do you have to do? You have to go ahead and sell goods to outsiders. So, what do you mean by outsiders over here? For me, outside the home is you guys, only for classroom purpose. Otherwise, we are all families. Okay, everyone. Now, I'll sell you guys. You'll pay me. Then I'll become rich. Correct? My money position will go up. In the same way, if India ka position globally in respect of money has to go up, then Baba, India has to go ahead and do trade with outside countries which are there, not within India. Within India, if you are doing trade, then Baba, India ka money will not grow. Now, how do India become rich? When it sells services or goods outside India and earns foreign currency. Are we all 100% clear? And hence is the foreign trade policy. Foreign के साथ, how will you do the trade? For that, what is the policy of India? Huh. What is foreign trade policy? What is foreign trade policy? So, foreign trade policy is a set of guidelines. So, basically, it's a set of guidelines and instruction which are given by whom? central government. Central government has gone ahead and done this, has made some instructions, guidelines in the matter relating to import and export in India. And for that import and export related, whatever matters government has gone ahead and given the guidelines, that guidelines is nothing other than foreign trade policy. Are we clear? These are basically guidelines and instructions which are issued by the central government saying, sir, these items we want to go ahead and export on foreign currency. This item might be of shortage in the country. We don't want to go ahead and export. Sir, this item, okay, whenever you go ahead and see the foreign trade policy, no, you will see some items are being restricted. Restricted means you need authorization. Some items are freely importable, exportable. Why? Because government is telling freely you can import and export. But where God, so whenever you see the foreign trade policies, no, in foreign trade policy, there is something called ITCHS. When you see the ITCHS, you will see government have put some goods are freely tradable, some goods are restricted for which you need permission, some goods are prohibited only. You can't go ahead and import export at all. Some goods are state trading enterprises goods. What is state trading enterprises? Which can be imported or exported only through some corporations which are established. For example, can you get petrol from outside India and store at your home in a tank and every day fill your bike? Why? You import no from outside. Dubai. Dubai ka sake. I know, sir. I will call and get one tank petrol. Can you get it? No. Those are state trading enterprises, Indian Oil Corporation. They are being appointed as the ST. So only they can import. So like that, there are various types of products which are there. Now, various types of product, what will be our policy? All those things are being told by the government in the foreign trade policy. So foreign trade policy is just a set of guidelines and instructions which are issued by the government in matters relating to import and export of goods. Now, they are going ahead and telling the foreign trade policy in general aims in developing export potential. Where are, oh, African countries there. In Africa, these goods can be sold. So, in developing export, Baba, the whole thought is to increase export, earn foreign currency, and to decrease import. Import should be reduced so that Baba Atmanirbhar Bharat, self-reliant India. Why? Because Baba, that is why they are going ahead and promoting no make in India, make in India, make in India, so that India may employment will go up. Are you guys able to understand? This chapter should not be understood as chapter. This chapter should be understood as a general thought which is there. Now, so they are telling we want to export potential should be improved. Export performance should be improving export performance, encouraging foreign trade, creating favorable balance. It means your export should be more than your import. All those things they want to do under the foreign trade policy. They are telling vision is to make India a major player in the world trade, wherein India is Baba, everywhere you see nowadays. What they are telling? You have seen that lion or not? Make in India wala lion. What is government going ahead and telling? Government is telling make in India. You will not allow imports. Tesla wanted to import their cars into India, making in China, doing something and getting it into India. Indian government told what? Baba, you make in India and then sell in India or you export. So that India ka export performances will go up. When make in India will happen, employment opportunities will go up. Are you guys able to understand? So basically they are trying to promote what? Our export performances should go up. Make in India should be promoted. So the main thought of making the foreign trade policy, if I'm making a policy, what is the thought behind me? But the thought is make in India should be promoted and export should go up. Now, they are telling what are the functions, okay, of the, now, when you go ahead and see, the foreign trade policy, basically, Government of India, Ministry of Commerce and Industry, which is there. I'll show you over here. If you go to Ministry of Commerce, supposing this is the Ministry of Commerce, this is the Ministry of Commerce which is there. Basically, the Ministry of Commerce ke saath one attached office is there. Can you see attached office? That attached office is of the Director General of Foreign Trade. The Director General of Foreign Trade is basically the person who basically develops the foreign trade policy. They supervise whether the foreign trade policy is being implemented properly or not. So it is the Director General of Foreign Trade. Are we clear, everyone? Basically, foreign trade policy ka creator is the Director General of Foreign Trade. Now, if you see over here, they are telling function of the department is to monitor and formulate the foreign trade policy. And sir, which department, everyone? Department of Commerce ka main work is what, everyone? To formulate and monitor the foreign trade policy. Now, sir, but why not Ministry of Finance? Baba, they have not kept it under Ministry of Finance. They have kept it under Ministry of Commerce, and they are telling Ministry of Commerce and Industry will basically formulate the foreign trade policy. Now they have not formulated. Along with them is an attached office of the Director General of Foreign Trade, which is headed. Baba, this is the Directorate General of Foreign Trade ka office, which is headed by whom? Director General of Foreign Trade, DGFT, Director General. I am the Director General of Foreign Trade. What is the work of the Director General of Foreign Trade? His work is to formulate the foreign trade policy. So along with the Ministry of Commerce, along with the Ministry of Commerce and Industry over here, there is a department which is Department of Commerce, and the Department of Commerce ka main work is what? To formulate the foreign trade policy. Now what they have done along with them is the attached office, which is the Directorate General of Foreign Trade ka office, which is headed by whom? The Director General of Foreign Trade, DGFT, and his work is to do what, everyone? Formulate the foreign trade policy, control the foreign trade policy, and supervise the foreign trade policy, whether foreign trade policy is being implemented properly. Now, when you see, sir, every 5 years there is a foreign trade policy which is created by India. The last foreign trade policy was 2000 for FTP 2015 to 20, which was being extended. Now, what they have told, now they have got the new foreign trade policy 2023, which was announced on 31st of March 2023, and it became effective from 1st of April 2023. And now they have not made it for 5 years. They have not given the name as Foreign Trade Policy 2023 to 28. They have told Foreign Trade Policy 2023. We will keep this only. We will just make small here and there changes. You know, actually, Foreign Trade Policy 15 and 20 has been almost replicated here only. There is not major changes which are there in Foreign Trade Policy. Small here and there changes they have made. Otherwise, it's almost the same type of foreign trade policy only. So now what they have told, they are done away with that 5 years wala foreign trade policy. They are telling we will continue this foreign trade policy only, and government every year will keep making whatever changes are required. That's all. So now this will be the foreign trade policy which will be there. Now the foreign trade policy is being administered by whom? Who formulates the foreign trade policy? The Director General of Foreign Trade. Now this Director General of Foreign Trade, no, he doesn't have a team to take care of it. He doesn't have a team who will actually go ahead and see whether the foreign trade policy is being implemented or not. Now, when you see foreign trade policy, for an example, they have told in the foreign trade policy, India's policy with respect to this item is prohibited. Now, who will go ahead and help? The Director General of Foreign Trade has told that foreign trade policy may skeletons you can't import. Who will see to it that skeletons should not come to India? Custom Department. So, our foreign trade policy is basically the boss. He has told, and now the GST department, the custom department, RBI, all these people are his team players. He doesn't have a team, but sir, custom department will make sure if it is told in the foreign trade policy that this can be imported only with license, then they should make sure that it is imported only with license. Correct? Now, just a second, everyone. Let's continue. Everyone, what I was telling? So foreign trade policy which was there, foreign trade policy which is there, the foreign trade policy is being made by the Director General of Foreign Trade. Now Director General went ahead and made the foreign trade policy. This item should come under only license. This item should be imported. If you have authorization only, you can import. This item is prohibited. So Baba, the custom department will make sure that whatever item is coming, do the people have license, or prohibited items should not come into India only. So custom department is playing the role over here. Correct? GST department is there, Central Board of Indirect Tax and Custom. GST department also helps them. RBI is there, RBI is helping. RBI sees that, okay, this person, now what DGFT does, no, they will give you authorization saying, okay, you can import without paying any duty. Import raw material without paying any duty, make the final product and export on foreign currency. DGFT ko you told, sir, I will earn foreign currency. He will give you authorization, import without paying any duty. Now, imported without payment of any duty, custom department should make sure that they give you clearance without payment of any duty. But RBI will also make sure whether you are earning foreign currency or not. So RBI also comes into role. Are you guys able to understand? So DGFT actually does not have a team of its own, but the various other departments which help them in the administration, other important authorities dealing with the FTP are, number one, Central Board of Indirect Tax and Custom. Custom authorities, Baba, CBIC ke under you have custom department also, you have GST department also. So custom authorities follow the policy performed by whom? Formed by DGFT while clearing the imported and exported goods. So supposingly, I went to the Director General of Foreign Trade. He gave me an advance authorization. I imported some goods. Now here role comes of the custom department. That custom department, when I show them the advance authorization, they should allow me to clear the goods without payment of any duty because I have got an authorization from them. Are we clear? So DGFT is working with the custom authorities. Can I go ahead, everyone? Now, the next one. While clearing the imported or exported goods, since there is GST on almost all the goods except petroleum product, CGST authorities need to be involved for all matters of export where goods have been cleared with or without payment of GST. If goods are cleared with payment of GST, the custom authorities will go ahead and process the GST also. You remember, Baba, the custom port pay the proper officer of GST who is sitting at the custom port. He will give you a refund of the IGST also. So, Baba, custom department ke saath who is along with them, who is working? The CGST officers are also working. Same way, the SGST officers will also be working because some people ka jurisdictional officer can be CGST officer, some people ka jurisdictional officer can be SGST officer. So CBIC में the CGST officers they are talking about, they are telling SGST officers also will be working along. Then RBI also will be working along. RBI will make sure you told sir, I will make the final product and final product I will export. Whether you have got the foreign currency or not, who will monitor? RBI will monitor. So other people who are working along with the Director General of Foreign Trade are who? Are the CBIC, is the RBI, and also the state GST department. To avoid dual, you can write dual control. DUAL. So sometime I can be under CGST department ka officer. Some people can be under SGST department ka officers. So whoever is the officer, basically they are telling CGST officer, SGST officer, all the officers play their part in the foreign trade policy ka implementation. Then now when you see the foreign trade policy, you know what? Actually, foreign trade policy is a fat book which is there. There are 11 chapters which are there. Now all the 11 chapters they have given applicable for you. Small part. You're getting my point? The whole lion is not there. Only the tail is there. Lions have tail. Yes or no? Yes, only the tail is there. Okay, everyone. Now, contents of the foreign trade policy. What are the various content? Number one, the main policy which is there. The foreign trade policy having how many chapters? 11 chapters giving basic policy and it is notified by the central government on 31st March. This is the basic policy which is there. And the policy is effective from 1st of April 2023. Now, to carry out the foreign trade policy, you need procedures. Baba, to carry out the act, rules are required. In the same way, foreign trade policy, whatever is told in the foreign trade policy, to carry it out, you need what? You need the procedures. So, Baba, there is a handbook of procedures which are there. Basically, for all the 11 chapters, they have given 11 chapters in the handbook of procedures also. What is act? Act is what is to be done. In the same way, foreign trade policy 2023 is what? Foreign trade policy 2023 is not the act. It is created under an act which is the Foreign Trade Development and Regulation Act 2000, Foreign Trade and Development Act which is there. Under that, the foreign trade policy is created by whom? DGFT. Now, DGFT went ahead and created the foreign trade policy. Now, to carry out the provisions of the foreign trade policy, procedures should be there. Those procedures are told in the Foreign Trade Handbook of Procedure 2023. Same way, like Act are supported by rules, foreign trade policy is being supported by the Handbook of Procedures. And Baba, that also contains 11 chapters and it also contains the procedural aspect. It contains the appendices and Ayat Niryat form, basically the forms. Sir, I want to apply for import export code. Sir, I want to apply for advance authorization. Sir, I want to apply for this. You will have like how refund ke liye application is there, registration ke liye application. The same way here we have Ayat Niryat form which is there. And sir, it contains the various appendices and forms relating to the procedural aspect. Sir, I want advance authorization. How do I take it? All those forms are being told in the Ayat Niryat form. Are we clear, everyone? Next. See, I'll show you over here. When you go to the DGFT ka website, no, this is supposedly DGFT ka website, which is DGFT. Quick. See, this is the Director General of Foreign Trade ka website, which is there. Okay? Here, when you go and see, you will see the regulations which are there. In the regulations, you will be able to see the foreign trade policy is there. Sir, this is the foreign trade policy. How many chapters are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 and one more, 11 chapters are there. Now, to carry out the provisions of the foreign trade policy, you need the handbook of procedure. Procedures are told over here. This is the handbook of procedure. That's sir, chapter number 1 के लिए what are the various procedures will be required. Sir, if forms are required, along with the handbook of procedures, you have the Ayat Niryat form also, import and export related forms. These are known as Ayat Niryat forms which are there. See here. The various forms which are there. See, these are the various forms. Sir, application for export of SCOMET items, sir, application for status holder, application for updation of import export code. All these are the various forms which are required under the import and export related forms which are told. Sir, I want to go ahead and apply for ID card. Sir, I want to go ahead and apply for some relaxation, all those things, refund, etc. All these various forms are being told. Now, you go ahead and see over here, you have import export policy. Can you see import export and SCOMET policies over here? These are the various import export policies which are there. Now, when you go to the foreign trade policy, number 1 is the foreign trade policy. Number 2 is what everyone? Handbook of procedure. What is number 3, everyone? ITC HS classification. People, do you remember I told you how to find out the HSN code? We learned how to find out various HSN code under classification of goods ka chapter. Now, classification of goods, when you learn to find out HSN code. Now, for every HSN code, they have a policy. They have a policy whether this item can be. Now, there are 4 types of policies which can be made. Number 1, whether can you import freely or export freely. Whether it is restricted. If it is restricted, you need authorization. You need a license for import. License is given by the Director General of Foreign Trade. Sir, prohibited. You can't import and export at all. Number 4th is State Trading Enterprise, STE. If it is told as STE, you can import or export. For an example, gold, petrol, all these items are told through STE, and you can import or export only through a State Trading Enterprise. First, they will import and then they will give it to you. Are we clear, everyone? Now, let's see this ITCHS. See, I'll show you. When you see over here in the DGFT website, you will see ITCHS. ITCHS import. Can you see over here? ITCHS import policy. Sir, relating to various HSN code, what is our policy? For an example, if I go ahead and show you over here, you remember when we learned classification of goods, we had chapter number 1, which told about live animals. When you see the import policy over here, you will see HSN code may, the first one is live animal. Sir, if you see live animal, see it is told over here. These are the live animals here. They have told, sir, horses, pure breed, restricted. It means you need a license to import this. Sir, bulls, you need a license to import. The same way, whenever, if it is not told anywhere anything, restricted, restricted. Sir, wherever it is not told anything, for them it is freely. So the same way, if you go and see over here, now if I go ahead and show you over here, regulation, import export policy. See, if I show you, sir, there are items, unless restricted, unless prohibited, unless told through State Trading Enterprise, all the items can be imported freely, exported also freely. But if they have put it in restricted item, prohibited item or STE item, can you see over here? So, sir, if they are prohibited, what are the items which are prohibited? They have told, see, wild animals prohibited. Tomorrow, what if you get a lion and you're taking one lion and going on the road? So, they are telling restricted. Pigs, they are telling it is prohibited. You can't get pigs into India, grow in India. Are you guys able to understand? So, these are the items which are prohibited. Against every, see, when we learn HSN code as classification, we just learn to find out the rate. Here we are not learning to find out the rate. Here we are learning against every HSN code, what is the policy of India? Is it freely importable, exportable? Is it restricted? Is it prohibited? Or is it only through State Trading Enterprises? Are we clear, everyone? And sir, how do I get the list? The list is over here. Very clearly they have mentioned that, sir, these are the restricted item, these are the prohibited item, and these are the STE item. And same is for export policy also. And sir, SCOMET item. I'll talk about the SCOMET items later. Can I go ahead, everyone? Everyone over here now. So this is the ITC HSN. What is it telling? The export and import policy regarding import and export of specified item are given in the Indian Trade Classification. See, Baba, Indian Trade Classification 1. When we learn in Custom Tariff Act, we learn the rate. Here we don't learn the rate in foreign trade policy. We learn the foreign trade policy regarding that. Import can be freely done, restricted, prohibited, or ST. The next one. So it says, based on the HSN code, the ITCHS coding was adopted in India for import export ka operation. Indian custom uses 8-digit ka ITCHS code to suit the national trade requirement. The next one, everyone, now we are going to learn about the 11 chapters which are there. Chapter number 1, chapter number 2, chapter number 3. See, only this much is given. Only the tail is given. Then chapter number 4, 5, 6 and 7. 8, 9, 10, 11 are total bakwas. I'll tell you at the end little about it. Can we go ahead, everyone? Now, Baba, 5 marks ke liye, more than this if you read, your life is at risk. Correct? Because there are a lot of other things to study. Can I go ahead, everyone? And Baba, this much you do your question answers properly and go 100% you will be able to attempt. Can I go ahead, everyone? Now, sir, when I talk about the legal framework, the first chapter talks about the legal framework and trade facilitation. What is the legal framework? The legal framework means foreign trade policy should be created under law has to allow, which is the law. So they are telling the legal framework we'll talk first about. First, we'll talk about the legal framework. Second, we'll talk about the trade facilitations which are done under the foreign trade policy. Number 1, the legal framework, the legal basis of the foreign trade policy. The foreign trade policy is notified by the central government. Who gave the power to the central government to notify the foreign trade policy? It's the Foreign Trade Development and Regulation Act 1992. Foreign Trade Development and Regulation Act 1992. There is one section number 5 which is there. Sir, I want to see that also. Baba, you go and see over here. In here only it should be there somewhere. Regulation, sir, Act. Can you see over here? Foreign Trade Development and Regulation Act is there. If you want, you read, but you don't waste your time reading. It's the Foreign Trade and Development and Regulation Act which is there. Under this act, there's section number 5. In section number 5, it has been given power to the central government. That central government from time to time can go ahead and notify the foreign trade policy. And Baba, foreign trade policy actually was earlier made for 5 years. Now it is made Foreign Trade Policy 2023 and it will continue unless government goes ahead and says these are the changes. So government will keep making the changes and that foreign trade policy will continue now. Now over here, sir, what is the duration? The foreign trade policy, earlier it was for 5 years. It has come into force from 2023 and now it shall be operational unless otherwise it is specified or amended. Sir, any amendment to be done in the foreign trade policy? Baba, it will be done by central government will go ahead and do it by notification. Basically, the Director General of Foreign Trade who is there, they will go ahead and tell the government that, sir, this notification should be issued. Government will issue the notification and make the amendments. The next one. Sir, what is the handbook of procedures? Baba, the DGFT may by means of a public notice notify the handbook of procedure. I showed you the handbook of procedure. Who has notified it? The DGFT. Including appendices, Ayat, Niryat form. Baba, this is import and export related forms and amendment also. Who will be going ahead and giving everyone? DGFT will be going ahead and doing. The next one, specific provision always prevails over the general provision. Whenever you are reading the foreign trade policy, if there is a general provision which is there and there is some specific provision which is there, always the specific provision will prevail over the general provision. This was what, everyone? The legal framework. The legal framework. Tell me one thing. What do you mean by the legal framework? The foreign trade policy which has been created, it should be created under a law. Yes or no, everyone? Which is the law under which the foreign trade policy is created? Foreign trade policy, Foreign Trade Development and Regulation Act 1992. Done. Can we go ahead? Next. Sir, now, the various trade facilitations which are offered under the foreign trade policy. Now here, trade facilitation and ease of doing business may, first they have gone ahead and created one. This is the amendment. This is the new part which is there. Earlier it was not there. Now they have gone ahead and created the National Committee on Trade Facilitation. Baba, India has gone ahead and signed the World Trade Organization ka Trade Facilitation Agreement, TFA. TFA means Trade Facilitation Agreement. So basically India has now ratified, means India has signed the World Trade Organization ka Trade Facilitation Agreement, and in April 2016 actually they have signed. And to facilitate coordination, why have they signed the Trade Facilitation Agreement? To facilitate coordination and implementation of the trade facility. Now, basically, Trade Facilitation Agreement has been signed with the World Trade Organization so that India can trade with various countries, correct? Trade Facilitation Agreement is there between various countries, which has been signed by India with the World Trade Organization. Now, because of that, what they have done is to facilitate the coordination and implementation of the Trade Facilitation Agreement so that the Trade Facilitation Agreement can be implemented properly, an ministerial body. They have created a body which is known as what, everyone? National Committee for Trade Facilitation has been constituted. Now, why is the National Committee for Trade Facilitation committed? Sorry, not committed. Why has it been constituted? It has been constituted to facilitate coordination and implementation of the trade facilitation provisions, which India has basically, because India has signed with the World Trade Organization the trade facilitation agreement, and because of that, because India has signed, now they have created one national committee for trade facilitation. Now, sir, trade facilitation agreement enumerate the following four pillars. Now, India has signed the World Trade Organization के साथ trade facilitation agreement. What is the main importance of the trade facilitation agreement? They are telling trade facilitation agreement enumerates for following four pillars. Number one, transparency. Number two, technology. Simplification of procedure, risk-based assessment. Only for the risky people assessment should happen. And infrastructure augmentation, means infrastructure growth with respect to import export should happen. That is what they are telling. Now, national trade facilitation action plan. Baba, this national committee for trade facilitation has come. What is their action plan? Their action plan is improvement in ease of doing business through reduction in transaction cost and time. Number two, reduction in cargo release time. Whenever one import ka cargo has come, it should be released quickly. Then paperless regulatory environment. Their work is what? Now everything should be paperless. Sir, transparent and predictable legal regime. It should not be ambiguous. That, sir, I imported, might be something wrong you have done. Legal regime which is there is not clear. You don't know what will happen, what is going to happen. So, sir, all those things should be done by whom? National Trade Facilitation action plan will be there, wherein the action plan is going to achieve what? Number one, if they ask you in the exam for 2 marks or 3 marks, sir, National Trade Facilitation action plan. What is their action plan? This National Trade Facilitation के लिए one committee has been created. No. What is their action plan? Their action plan is number one, improvement in ease of doing business. Number two, reduction in cargo release time. Number three, paperless regulatory environment. And number four is transparent and predictable legal regime. The next one over here is, now, because what are the various trade facilitations which are done at customs? Sir, because of in the foreign trade policy, they have got trade facilitation now, right? Okay. See, the various trade facilitation and ease of doing business measures which are implemented under FTP. What are the various, exam question, what are the various trade facilitation and ease of doing measures which are implemented under FTP? Number one, free passage for export consignment. I am going to export something. I am going to export, free passage should be given. No seizure of export related stock. Whoever is going to export, his stock should never be seized. Only then India will grow. Now, people, what is the thought? Export should be promoted. Number one, free passage. Number two, no seizure. Number three, export of perishable agricultural product. Agricultural products which are there should be exported. Number four, Niryat Bandhu means export. Niryat means export. Bandhu means friend. Niryat, export. Hand holding scheme for whom? For new export or import related entrepreneurs. Now, under the foreign trade policy, what are the various trade facilitation and ease of doing business? They are going ahead and telling the free passage should be given. Then no seizure of export related goods. Export of perishable items should happen. Then, sir, hand holding scheme they have introduced for new exporters and importers. Sir, I don't know how to import and export. They have introduced Niryat Bandhu. Niryat Bandhu means export and import related hand holding scheme, so that they will guide you how to import and export. Next, DGFT online portal has come now. Sir, what is the benefit of DGFT online portal? Are you want to apply? See, services. You want to apply for advance authorization, you can apply over here. Can you see? You want EPCG authorization, you can apply over here. All the scheme related. Sir, I want this certificate, that certificate. Everything can be done online. So these are the various trade development, trade facilitations. Baba, in order to facilitate trade in doing business easily, what are the various developments in FTP? What is it, everyone? The next one, issuance of import-export code. Baba, now you can apply online. You don't have to go take papers and go anywhere. Online import and export code can be applied. Then Online facility for registration, RCMC certificate, registration certificate process. But what is RCMC certificate? Everyone listen here. When you go to the here Ministry of Commerce and Industry may, you will see there are various export promotion councils who are there. Sir, what is there? There are various export promotion council. Now the export promotion council, I will show you. See, these are the various export promotion councils which are there. What is the work of export promotion council? For an example, one export promotion council is there, export promotion council here. It is, one is leather, one is chemical, one is sports goods, one is jewelry. Oh, whatever export promotion council government have created, no, their work is that product ka export should be maximized. Are you guys able to understand? To see what are the potentials in that industry and export of that item should be maximized. The work is whose? Export promotion council ka. Now export promotion council ke under, now whenever you are going ahead and importing or exporting, no, if you want any FTP may any benefit, you should be a member of the export promotion council. Are you guys able? So if I'm an exporter of leather, I should be a member under the export promotion council. When I become a member under the export promotion council, supposingly leather ka exporter I became member under the export council for leather export. If I become a member under the council for leather export, I'll get a RCMC certificate, which is a registration cum membership certificate. Now only if you have a registration cum membership certificate, you get the various benefits under foreign trade policy. The various incentives will be given to you. Are we clear? And that is what they are telling over here. That sir, online RCMC certificate will be given. Then online issuance of certificate of origin. Baba, if you import from Dubai, they are telling if you have a certificate of origin, then you will get preferential rate of duty. Sir, how do I get certificate of origin? You can now online apply for the certificate of origin. Then online facilitation for quality control and trade dispute. Any trade dispute, etc., can be now online addressed. Then IT initiative in DGFT. Baba, now they are using information technology. 24/7 help desk facility is there under DGF, under the foreign trade policy, and these are the various trade facilitation measures which are adopted under foreign trade policy. Now under foreign trade policy, these trade facilitation measures have come under customs also. But foreign trade policy is done by whom? The Director General of Foreign Trade. He implements, monitors the foreign trade policy. Now because foreign trade policy is above or customs are above? Foreign trade. Whatever they say, customs also do. So because there were various trade facilitation measures which are implemented in foreign trade policy, because of this, in customs also various trade facilitation measures will come. So I have written over here, what are the various trade facilitations at custom? 24/7 custom clearance. Whenever you want, you can go and get your goods cleared. Next, single window. Baba, you don't have to go to 10 places. Swift. You remember Swift has now been launched under custom. So you don't have to go to everywhere to get certificate. Sir, importing pharmaceutical drug. Go to the pharmaceutical controller and get your clearances done. All those are not required. Nowadays, you just go online, file your bill of entry, and all the clearances are given automatically. You don't have to go ahead and file 10 forms, etc. Now only one bill of entry you will file, all the declaration, all the details you will give over there, and clearances will be given. Now the next one, e-Sanchit, enabling paperless environment. Now because FTP may changes come in GST also they are implementing it. Next, pan India implementation of faceless assessment. Baba, faceless assessment we have learned in custom. Faceless assessment is implemented. That's an ease of doing business only. You don't have to go to the custom department, means the custom officer, convince him, nothing required. Next, paperless custom initiative, paper preparation and issuance of electronic document like let export order, shipping bill, gate pass, e-clearance order, e-certificate of origin, it should be COO. Okay, leave it. Take everyone, e-gate pass, shipping bill will be given, let export order, all these are given online nowadays because of the various facilitation measures which happened in FTP. Customs may also these facilitation measures have been implemented. Now, because of the what are the various other ease of doing business which is there. Now in customs, you will go in foreign trade policy, you will see they have implemented authorized economic operator program. They have implemented town for export excellence. They have implemented status holder का certification. Let's go ahead and understand one by one. So basically, we are going to talk about again trade facilitation and ease of doing measures which are being implemented. Now they have now in customs they have implemented, or basically in foreign trade policy now they have got the authorized economic operator program. Baba, do you remember authorized economic operator program? The people who are there, what are the various facilities they get in customs? Remember? AEO, Tier 2 and Tier 3, deferred payment facility was given. Do you remember when you learn customs, in that you will learn deferred payment facility is given to authorized economic operator who are Tier 2 and Tier 3. Now, who are these authorized economic operators? These are basically trusted partners. These are basically who, everyone? These are the trusted partners. Partners of Indian customs. These are the trusted partners of Indian customs. These are the trusted partners. So, Baba, the AEO program, Indian government has launched the Authorized Economic Operator program, have been implemented by other custom administration that gives AEO status holder preferential custom treatment in terms of, sir, now if I am a authorized economic operator, people, you have to enroll under the Authorized Economic Operator program. So if you are an importer or exporter, you can go and enroll yourself under the Authorized Economic Operator program. Once you enroll yourself as the Authorized Economic Operator program, basically there will be criteria, etc. But we have very limited discussion which is required for this. Now, sir, if I have enrolled myself under the Authorized Economic Operator program, I become a trusted partners of the Indian custom. Are we clear? Now, what are the various benefits if I am enrolling myself under the Indian custom as an authorized economic operator? They are telling, sir, your treatment is what, everyone? Preferential custom. Number one, your preferential custom treatment will be given in terms of reduced examination. When you import or export, your goods will not be examined much. Next, faster clearances will be given. Other benefits also will be given. Then, Indian customs have now signed a mutual recognition agreement, which is also known as MRA, with South Africa, South Korea, Taiwan, Hong Kong, US custom to recognize respective AEO programs to enable trade to get benefited on reciprocal basis. Means we will also recognize their authorized economic operators in India, saying, okay, this person's goods are coming into India, he's an AEO over there, we will give quick clearances for his goods. Are you guys able to understand? And same way, our authorized economic operators in India will be given preferences over there. So, Baba, if you are an authorized economic operator, basically, if you are enrolled as an authorized economic operator under the authorized economic operator program of the Indian custom, so basically, you become a trusted partner of the customs. And now, for you, all the clearances will be quick, examination will be less, and sir, authorized economic operator in our country will be recognized in other country, and other countries will be recognized in our country, basically with whom they have a mutual recognition agreement. Now the next one over here is, as a step forward towards trusted business trust based compliances, Indian customs have introduced the new revamped authorized economic operator program, wherein extensive benefit, what are the other benefits? Greater facilitation and self-certification. Baba, if I'm importing, I have to give a certificate of origin that the goods are originating from Dubai only, then only you'll get preferential rate of duty. Self-certification, you self-certify. That, sir, yes, I don't have a certificate of origin, but I'm certifying that these goods have come from Dubai only. Sir, what if I have told fraud? Baba, frauds ke liye, you will be placed under denial list, you will be blocked, all those things are there. We'll talk about it later. Are we clear, everyone? Next. Self-certification you can give have been provided to those entities who have demonstrated internal strong control system and compliances with the CBIC. So if you are a person who is going ahead and demonstrating that you are a person who is importing, exporting, whenever you are doing importing, exporting, you are properly filing all your documents, you are all properly maintaining all your books, etc. So they have told that, okay, these are trusted partners who are there. Baba, you can import, export, self-certification can be given. You don't need many certificates, etc. So they become basically the trusted partners of the custom. The next, under the AO program of Indian custom, the MSMEs are also covered. That's it. This is the maximum which you have to remember for AEO program. Remember, AEO programs are basically those people who are Indian customs ka trusted partners. Done. The next one. Sir, now government is going ahead and doing town of excellence, export excellence. What do you mean by town of export excellence? Basically, for an example, I'll tell you, uh, Firozabad. Firozabad. Uh, Mirzapur. You have seen Mirzapur, Baba. Mirzapur mein, there is Kalin Bhaiya. Abhi Baba, that carpet, he's selling carpet. Okay, no problem if you have not seen. Baba, Mirzapur is famous for carpets. Now they are telling we will recognize towns of export excellence. Baba, these are towns of export excellence. What are they doing? They are exporting carpets. So they are telling development and growth of export production center. So they will identify those towns which are basically export excellence ka towns. And they are telling a number of towns have emerged as a dynamic industrial cluster contributing handsomely to India's export. It is necessary to grant recognition to this industrial cluster with a view to maximize their potential. And so basically, what are we talking about over here? We are talking about the various trade facilitations basically and ease of doing business. So here they are telling number one, we have created authorized economic operator program also. Correct? Then we have created towns of export excellence, TEE. They are telling the objective of town of export excellence. See the same thing if I go ahead and show you over here. When you see the amendment booklet of the ICI, you will see over here, but TTE, etc. See, we started learning with introduction. We see the Trade Development Act, which is there. Now here, there's some trade. Okay, this is okay. Administration, we have seen the various CBIC is there, RBI is there, State Department Authority. Sir, I told you about the Foreign Trade Policy Handbook of Procedure, ITC classification. Over here, we have the trade facilitation. May see over here. The various trade facilitations under FTP may we have learned about all of them. Along with this, we also have the Authorized Economic Operator Program. Now we are seeing the TEE. What is TEE? Selected towns which have been contributing handsomely to India's export by producing goods of specific amount may be granted recognition as what everyone? TEE. So towns are now given recognition as towns of export excellence, and sir, they will be provided with targeted support and infrastructure development to maximize their export competitiveness and enable them to move up in the value chain. And this is trade facilitation and ease of doing business, which they are basically introducing under customs for this TEE. Are you guys able to understand? So now they are setting up TEE, and that is what I have written, but I have written little more, but they have given very less. So we'll go ahead and read from here, and we'll be reading till here maximum. We don't need the other things. Can I go ahead, everyone? See. So what is the objective? The objective is development and growth of export production center. A number of towns have emerged as dynamic industrial cluster. Baba, they have found out towns which are industrial cluster and contributing handsomely to India's export. They are contributing to India's export. And sir, it is necessary to grant recognition to these clusters with a view. So number one, authorized economic operator program. Why did they introduce? Oh, you are a trusted partner. Because if they tell you as a trusted partner, import and export, you will get lot of benefits. Can I go ahead, everyone? Faster clearances, self-declaration can be given. You will be importing and exporting in a faster manner. So that's again trade facilitation and ease of doing business. Now, town of export excellence, when they are telling, with a view to maximize their potential and enable them to move up in the value chain, and also to tap new market, they have gone and introduced town of export excellence ke liye. They will give recognitions to those town saying you are town of export excellence, and lot of benefits, lot of help will be provided to those towns. Selected towns producing 750 crore or more. Baba, if you see actually in your town of export excellence, only this much is there. But I'm still telling you a little more. Such selected town producing 750 crore or more are notified as TEE based on potential for growth in the export. Based on your potential for growth in export, you are given as what? Town of export excellence. However, for TTE in handloom, handicraft, agriculture and fisheries sector, the threshold limit is just 150 crore. Now, before a student goes ahead and texts me, sir, do we have to remember 150 and 750? No, you don't have to remember. This extra gyan which is there. Can we go ahead, everyone? Baba, we have to tell everything, because if we tell the 750 crore and 150 crore which I am talking is extra, then definitely first thing is wait, pause. Let me text. Sir, do I have to remember 750 and 150? No, Baba, you don't have to remember. ठीक है everyone, this is the extra ज्ञान. How is trade excellence के लिए your town has been given the recognition only on the basis of turnover. They are telling the selected town producing 750 crore or more is notified as TEE on the basis of potential for growth in export. The next one, this is very, very important from exam point of view. This is the main point which they go ahead and ask. Everyone over here now. Status holder. Baba, status holder means who are holding status. Big export houses who are achieving what? Big exports who are going ahead and doing, they are given recognition. Baba, just imagine in your office, you are working very hard and you are not given recognition. Will you like it? The same way, in India also, people who are exporters, they are given recognition so that internationally they are recognized as a big exporter. Baba, if you are being recognized by the Indian custom as a status holder, you will be put stars, 1 star, 2 star, 3 star. Baba, just imagine if you are given stars, you are very happy, right? That I have been given recognition. The same way, they are giving recognition, and status holder is something which they ask in the exam. The first thing till now which I feel they can go ahead and ask. Now, who are status holder? Baba, these are market leaders. You only think. Who are given status? Who makes money? Correct, everyone? The same way over here. They are going ahead and giving status based on your earning capacities over here. Can I go ahead, everyone? See here. Baba, hard truth of life. A person with money is given lot of status. Correct or not? Now, there might be some other philosophies against it. But in my opinion, you need good money to get recognition. The same is told over here. These are basically market leaders who are there. Sir, these are the objective behind certifying certain exporters as status holder is to recognize export firms as business leaders who have excelled in international trade and have successfully contributed to countries foreign trade. Baba, countries foreign trade means country ka revenue. You are getting foreign currency. Status holders are expected to not only contribute towards India's export, but also provide guidance and hand-holding to new entrepreneurs. It means status holders should also make sure that they are keeping some trainees under them, training them on import, export, etc. So they are also providing what? Guidance and hand-holding to new entrepreneurs. Next. So basically, these are business leaders who have excelled in their exports. The next one, all exports of goods, services, and technology have an importing export code on the date of the application shall be eligible for recognition on export performance. Basically, tell me one thing, if I have an import export code, only then I am eligible for recognition as a status holder. The applicant may be categorized as status holder on achieving 3 export performance in current and preceding 3 financial year. People listen, your current year and preceding 3 financial year, which is there, they are telling 3 financial year, current and preceding 3 financial year, you should have achieved how much export performance? 1 star export houses. It means you should, in the current year and preceding 3 years, how much you should have achieved total? Export performance threshold in US dollar is how much, everyone? 3 million US dollar. So they are telling next, 2 star, who are given 2 stars? 15 million US dollar. Baba, 1 million US dollar is how much? 1 million US dollar. 10 lakh dollars. 10 lakh dollars, no? 10 lakh dollars or 10 lakh rupees? 10 lakh dollars. Correct, everyone? So here they are telling 3 million US dollar. 1 million is 10 lakh dollar. Can I go ahead, everyone? Next. 15 million US dollar. Third, 50, 200 and 800. Now, so sir, based on your stars, you are given privileges. Based on your stars, you are given privileges. So sir, please remember this, everyone. Number 1, write a short note on status holder can come. Right? They can go ahead and ask you, this is the person who is there. His export performance is this. How many stars he will get? Any question can come. 3, 15. People with me. 3, 15, 50, 200 and 800 million US dollar. Next. However, so people, your export performance will be seen from which year? Current year and the preceding 3 years. And only if it is more than or it is 3 million US dollar, then you will be given 1 star. Next. So it says, however, for gems and jewelry sector, export above export performance during the current year and preceding 2 years shall be seen. Your performance during the current year and the preceding 2 years will be seen. The export performance shall be counted on the basis of FOB of the export earnings, free FOB value. Okay, everyone, in freely convertible foreign currency or in INR. Done. So they are basically going in and telling whatever is the FOB value. The export performance shall be counted on the basis of FOB of the export earning in freely convertible foreign currency or in INR. Whatever you are going in and exporting, the FOB value will be seen whether you are realizing foreign currency or in INR, Nepal, Bhutan, etc. case mein INR, etc. is there. For deemed export, sir, supposingly, you remember deemed export? If I am not exporting, but I am supplying to a person who is holding an advance authorization, my supply is known as deemed export. Do you remember deemed export? In GST, we learned deemed export. Same way, in customs also, we have one concept of deemed export. I'll talk about it at the end over here. What are the various supplies which will be termed as deemed export? We'll talk about it later. Everyone over here now. They're telling for deemed export, FOR, free freight on road, FOR value, freight on road value which is there, that will be taken, that shall be converted in US dollar at exchange rate notified by the CBIC as on 1st April of each year. So supposingly, I've exported, that export performance will be taken. But if I have supplied to deemed export supplier, if I've supplied to if I've supplied to a person and he is going to export outside India, he has an advance authorization, then I am a supplier of deemed export. If I am supplying to him, in that scenario, what is the free freight on road value? Not the FOB value. Baba, FOB is in case of export. But if I am supplying within India only, deemed export supplies also will be counted when you are given status holder ka recognition. So, sir, FOB value in case of export and FOR value in case of deemed export. Done. Total will be taken and total of current year and the preceding financial year. They are telling all the 3 years ka export performance will be seen. Current year and the last 3 year. And if it is how much? 3 million US dollar, 1 star, 15 million US dollar, 2 star, 50, 200 and 800. For granting status for performance would be necessary in all the 3 preceding financial year. And sir, it means current year and last 3 years, you should have export performance. Only then you will be granted status holder. And how much should be that performance, everyone? 3 million US dollar. And they're telling, and in all 2 preceding financial year, for gems and jewelry sector, it is current year and the last 2 years. Next. Sir, if I become a status holder, what is the privileges I'll get? What is the various privileges I'll get if I become a status holder? They are telling number one, very important from exam point of view. What are the various privileges given to status holders? Number one, a status holder shall be eligible for privilege. Number one, authorization and custom clearance for both imported and exported goods will be given on self-declaration. You don't need certifications, etc. Self-declaration you give, import export ka clearances will be given. Next, input and output norm. Baba, you know what? There's something called SION, standard input output norm. What is SION, everyone? SION means, supposingly I want, SION ka one book is there. Okay? SION ka one book is there over here. You will find SION, etc. over here only. Here only somewhere it will be there. Okay, leave it now. So basically what happens in SION is standard input output norm. For standard output, for output supposedly one shirt, how much input you require? For an example, if I got an order from outside India, 1 lakh shirt. 1 lakh shirt ke liye, I went to the DGFT, Director General of Foreign Trade, and I told, sir, I have an order of 1 lakh shirt which I can export. For this, I want to import raw material. Now, to import raw material, he will go and open the SION book and he'll say, for one shirt, 1 meter cloth can be imported. That is the standard output ke liye input norm. Standard input for the output. Output is 1 lakh shirt. For 1 lakh shirt, you need 1 lakh meter. So the advance authorization will be given 1 lakh. That 1 lakh unit or 1 lakh meter of cloth can be imported. What is SION? Standard input for the output. That standard input output norm is already set. That if you want to go ahead and make this product and export, How much input will be allowed? Duty free. So duty free imports are basically allowed based on what? Sion. And they are telling over here input output norm. Supposingly for one item, input output norm is not there. And you are a status holder. That they are telling may be fixed on priority, means they will go ahead and fix the Sion for you immediately. Within how many days? Within 60 days by the norms committee. Special scheme in case of input output norms to be notified by the DGFT from time to time for specified status holder. They are telling if you are a status holder for your item, Sion is not there. But you want Sion, standard input output norm, you want the norm committee to fix, within 60 days they will fix and give it to you. That is also one benefit. Then, exemption from furnishing bank guarantees for scheme under FTP unless specified otherwise anywhere in FTP, or they are telling exemptions from bank guarantee will be given unless specified otherwise anywhere. If it is told anywhere else that no, you have to give, then you have to give. Otherwise, bank guarantees are being exempted. Then exemption from compulsory negotiation document through bank. Baba, whenever you are going ahead and importing or exporting, bank you have to give lot of documents to the bank. They are telling all those documents will be very minimal. They are telling various exemption will be given. Remittance or receipt, however, would be received through banking channel. Means when you are receiving foreign currency, should be received through banking channels. Then 2-star and above export houses. If you are 2-star and above, you will be permitted to establish export warehouse. Baba, do you remember? You can establish your own public warehouse, private warehouse is there. If you want to establish your own private warehouse, if I am a 2-star or above, can I establish my own private warehouse? Yes. Then the status holder would be entitled to preferential treatment and priority in handing of their consignment. Preferential treatment will be given. Next, status holders shall be entitled to export freely exportable item excluding gems and jewelry. All these are not allowed. So you can export freely exportable item on FOC, free of cost basis for export promotion. Basically, they will allow you to export freely. What? An annual limit of rupees 1 crore or 2% of the average annual export realization during the preceding 3 license year, whichever is lower. So they are telling you what over here? That sir, if you are a status holder, you should be entitled to export freely exportable item. How much? On free of cost basis for export promotion. Basically, you can send samples, etc. You can export outside India on free of cost basis to an annual limit of 1 crore rupees or 2% of what? Average annual export realization during the preceding financial year. Whatever you have realized of that, whatever 3 financial year ka total you take, you see the average ka 2% or 1 crore rupees, whichever is lower, that much they will allow you to go ahead and export. Entitled to export freely exportable item on free of cost basis for export promotion. For export promotion, you will be allowed to export this. How much? 1 crore rupees or 2% of what? Average annual export realization in the last 3 years. How much was your annual realization? Average of that 2% or 1 crore rupees, whichever is low. The next one over here is, so people, this was the trade facilitation measures which they have gone ahead and told. Number one, sir, this committee which has been set up, please remember this point. National Committee on Trade Facilitation has now been set up because India has ratified the agreement with the World Trade Organization, and their main objective is what over here? Coordination and implementation of the, to facilitate and implement the trade facilitation provision. They have set up the National Committee for Trade Facilitation, and this is their action plan which is there. This is important over here. Other than that, the status holder is very important. Remember, status holder status is given based on current year and last 3 years ka performance. 3 million US dollar, 15 million, 50 million, 200 and 800 million US dollar. And sir, what are the various privileges which are given? This is also something which is important. Now, please come down. Sir, what are the various other? See, Baba, these 3 are there anyway: trade facilitation or ease of doing business measures which are implemented. Other than this, what are the trade facilitation and ease of doing business measures which are implemented in FTP? These points also, please be very careful. Can I go ahead? Next, please come down. Now, what are the general provision relating to import and export? Now, if you are going to import and export, there are various general provisions which are there. Sir, number one, import and export, you need import and export IEC code. So let's read about it. One short note of 3 marks they can go ahead and ask. Please write a short note on IEC code. Everyone here. In import export code, basically, you know what I'll tell you. Your PAN card is there. No? Your PAN number is only your import and export code, but you can't use it directly. You can't directly use it. You have to apply for an import export code, and your PAN number only they will allocate you as your import export code. So, sir, without applying, can I use my import export code as my PAN number? No. First, you have to apply. Only when you apply, they will allocate your PAN number only as your import export code. Sir, how do we apply? Baba, nothing. You have to go to the DGFT ka website over here. When you go to the DGFT ka website, you will see over here. Arey. DGFT. See, can you see over here? Apply for IC code. You can apply from here only directly. Now, so it's telling over here. An import export code is a 10 character alphanumeric number allotted to an entity and is mandatory for undertaking import and export activity with a view to maintain the unique identity of an entity. Consequently, upon introduction and implementation of GST, IC shall be the same as PAN and it shall be separately issued by the DGFT on an online application. You have to go online and apply for your import export code and your PAN will be given to you as your import export code. And it says no export or import shall be made by a person without obtaining IEC code unless specifically exempted. Unless it has been specifically exempted, you can't import or export without having an IEC code. For export of services or technology, IEC code shall be necessary on the date of rendering the service for availing the benefit. So, on the date of rendering the service, you should have the IEC code. Only then you will get the benefits under foreign trade policy. The next is exempt category and corresponding permanent IEC codes are given in the handbook of procedure. Basically, who are the people who are exempted from obtaining IEC code? You have to see the handbook of procedures. The next one. So, here, basically, they have given you saying, please go and refer to the like how in GST they say as may be prescribed. Here they don't prescribe in the rules. So they go ahead and say please refer to the handbook of procedure. The next one is application process for IEC and updation of IEC is completely online. I have already shown you with requisite fees and document and IEC shall be granted by the applicant as per the procedure in the handbook of procedure. Again, sir, how to apply, within how many days IEC will be given, that is told in handbook of procedure. An IEC holder has to ensure that the details in the IEC is updated electronically every year during April to June period. So every year you have to update the detail. Are we clear? Even if you don't update also, you just go ahead and say updation. Why updation has to be done? Because only then they will say, okay, this person is still doing import and export. So what they are telling over here, in case there is no change in IEC also, details, same also needs to be confirmed online. Means even if you don't update anything, please go online and confirm every year. It says an IC shall be deactivated if it is not updated within the prescribed period. So every year, April to June, you go online, either update your detail or at least confirm your detail. Only then your IC will stay active. And it says an IEC so deactivated may be activated on successful updation. This would, however, be without prejudice to any action taken for violation of other provision. Might be they can go ahead and take any action against you also for going ahead and doing violation. Now, so they can go ahead and tell you a short note on import export code. Please remember. The next is mandatory document. Listen, now, sir, in custom, they have told only 3 documents ka basis pe you can import, only 3 documents ka basis pe you can export. So what are the mandatory document? Exam question again for 3 marks. They can go ahead and tell you what are the 3 mandatory document for export or import of goods into or from India. Number 1, mandatory document required for export of goods. See, now tell me one thing. This is told in the foreign trade policy. Who will follow this? Customs. See, bill of lading, airway bill number, रोड का केस में लॉरी रिसीट, रेलवे रिसीट नंबर और पोस्टल रिसीट. नंबर 1, दिस डॉक्यूमेंट इज रिक्वायर्ड फॉर एक्सपोर्ट. नंबर 2, commercial invoice come packing list. Baba, in the container, no, what are the items you have packed? All this ke liye you will prepare one invoice. In the invoice you will tell these are the items which are packed. So this is known as invoice come packing list. Number 3, shipping bill or bill of export or postal bill of export. Baba, whenever you are going ahead and exporting, you need to file a shipping bill or bill of export. That document should be there. So what are the 3 documents which are required for export? Remember, MCQ can come one bar. Please be very careful. Number one, shipping bill, bill of export. Number two, invoice come packing list. Number three, this one I told first, this one I told second. Third is bill of lading. Bill of lading is in case of ship. Airway bill number in airway bill in case of ARK through export. Sir, lorry receipt, railway receipt, postal receipt, etc. Now, sir, what are the mandatory documents required in case of import of goods? Number one, bill of lading, airway bill number, all these are same. Secondly, commercial invoice come packing list. Separate commercial invoice and packing list is also acceptable, and bill of entry, because when you import, you file a bill of entry. Export ka case mein shipping bill. The next one. Now, this principle of restriction, no, actually it is still there in your foreign trade policy. Last to last time this amendment had come, so ICI had given in the amendment booklet. Last to last time, approximately 1 year before. But now they have not gone ahead and given this in your FTP. Foreign trade policy, they have not given. So if you want, you can ignore it also. But general thought it is, sir, when the government is going ahead and importing restriction on importing or exporting some items, supposing the government is telling that these items should not be exported, why will the government say that? Might be there is critical shortage in India. Correct or not? So what are the principles of restrictions which are there? Sir, DGFT may through notification impose prohibition or restriction when on export of food or essential product for prevention of critical shortage. Might be now rice is shortage in India, so they have implemented what? Prohibition. Or might be they have implemented restriction saying you want a license to only then you can export. So that can be that. What is the principle of restriction? When can government restrict some item from being exported or imported? When there's critical shortage. Number two, on import to promote established particular, might be government can say, Ramesh, from today mobile phone, array electronics import is banned. Why? Because India wants that domestically whatever mobile industries are there, that should be promoted. So what is the principle for restriction? Number one, to promote the domestic industries. Then for preventing sudden increase of import which is causing serious injury, government can say, hey, restricted. From today, calculator restricted. Why? Because you are seriously causing injury to our domestic industry. Are you guys able to connect? Then government can say for protecting public morale or public order. Might be if you are going ahead and exporting or importing something which is relating to public morale, then they can go ahead and say no, please don't. Then for protecting human, animal, plant life, Baba, you'll see tortoise, etc. Lot of smugglers are being caught. They catch tortoise and then they export. Why they are exporting? So that they can get money from outside India, huge money. But in India, this tortoise will go. So, Baba, to prevent human life, animal life, plant life, health, etc. के लिए also they can impose restriction. Relating to importation and exportation of gold and silver, also they can put restriction. For protecting national treasure of artistic, might be supposingly I am a painter, I have drawn one painting, very beautiful painting. Now this is an artistic heritage of India and we are trying to export it. So they can say no, you can't export it. Then for conservation of natural resources, essential to acquire or distribution in general, local shortage is there. Might be for protecting countries' essential security interest. In that scenario, they can go ahead and impose what? Restriction or prohibition. But from exam point of view, I don't find it important this time because in the new amendment booklet, they have not given this. Are we clear? But still, if they ask you, you can still remember this. Next. State trading enterprise. See, I'll show you the state trading enterprises which are there. STE. See, what is this state trading price in India? In India, Baba, I'll tell you in India. Huh. See, Food Corporation of India, State Trading Corporation, Indian Oil Corporation. Now, petrol. Can you import petrol on your home? I'll import one container, put it in the home. Whenever I'm taking out my bike, I'll fill. Can you do that? No. You can import only through Indian Oil Corporation can import. So, these are state list. Once I'll show you the list of STEs which are there. See, the STAs are like this. So you'll see Minerals and Metals Trading Corporation, gold. Gold can be imported by Minerals and Metal Trading Corporation, which is there. Like this, Spices Trading Corporation of India is there. Such Central Warehousing Corporation, Project and Equipment Corporation. All these are state trading enterprises. So some product, when you go and see, I'll show you over here in the DGFT portal. When you see over here, you will see some products are reserved for the STE. Means wheat, STE. Wheat, sir, rice, basmati rice, broken rice, motor spirit. All these are, motor spirit means petrol. All this can be imported by whom? Say trading enterprises. Normal person can't go ahead and import it. If you want to import, you have to do it through the state trading enterprises. So that is what is told STE. STE. State trading enterprises are governmental and non-governmental enterprises. I just now showed it to you. Including marketing board, we deal with goods imported or with goods for export or import. Any goods import or export of which is governed exclusively or special privilege granted to STE may be imported or exported by STEs as per the condition of ITC HS. Baba, ITC HS may I've shown you just now. 1 minute, I'll show you. See, the conditions are told on the right side. Can you see? As per the condition, you have to go ahead and import or export. The next one. Such STEs shall make such purchase or sale involving import or export solely in accordance with commercial consideration, including price, quantity, availability, marketability, transportation, and other condition of purchase or sale in a non-discriminatory manner. Means they should not be discriminatory. That okay, I'll import petrol and I'll give it to him. I'll not give it to him. They should not be discriminatory and shall afford enterprises of other countries adequate opportunity in accordance with customary business practices to compete for participation in sale or purchase. It means if they are buying from outside India, ST is buying from outside India, supposedly one ST is there and it is buying from outside India, oil only from Dubai is bought. They should allow Iran also, that okay, Iran say also we can get petrol. So Baba, ST should not be discriminatory, saying that sir, petrol will buy only from Dubai. They should be known non-discriminatory. Then DGFT may, however, grant an authorization to other entities to import or export any of the goods notified for exclusively traded through ST. Sir, supposingly Reliance tomorrow went and told, sir, please allow us also to import petrol. Then they can go ahead and give permission. Next, who can give? DGFT. The next is examples of STs. I have already told you: Food Corporation, Minerals and Metals Trading Corporation, Indian Oil Corporation. So, Baba, food items you can import only through Food Corporation of India. Sir, gold, silver, etc. Minerals and Metals Corporation, Indian Oil Corporation, oil. All this can be imported by them. Important from exam point of view, all these four are good. All these four say this third one, principle of restriction, can be ignored. You know what happens when we make the foreign trade, when I made the foreign trade policy ka booklet, I thought these principles of restriction, before 2 attempts only came, ICI told we have to study. So I implemented it. I gave the foreign trade policy way before the ICI has released now, because uh, we had to release the book. Now in my book I have given this, but you'll see foreign trade policy given by the ICI, they have told not required. So we have to cut short some things which the ICI says, okay, we don't want our kids to study. Can we go ahead, everyone? And that is why I'm telling you don't study this, because now it is not there in the new FTP. Earlier it was there. Next. Sir, can I go ahead and import license a sample? Number one, did you understand import export code? Anyone? Any doubt? Second one, mandatory document. Remember this. Third one, state trading enterprises. Next, they can go ahead and ask any small question. Write a short note on state trading enterprises. Next, import of samples. Sir, can I import samples from outside India? I am an exporter. I am an exporter. Can I import samples of raw material? Might be I need some raw materials from outside India. Can I import samples? They are telling no authorization shall be required for import of bona fide, technical and trade sample of item which are restricted. Baba, freely importable item to no problem. Restricted item ke liye you always need a license. License is known as an authorization. So whatever items are restricted, 1 minute, I'll show you. Supposingly, these are the restricted item. Whatever items are restricted, you can go ahead. See, can you see over here? Restricted, restricted, restricted. All these items are restricted. So supposingly you want to go ahead and import, what is this? Boneless. Okay. Others, boneless. Okay. ठीक है. We'll take one example. fresh eggs. ठीक है everyone, fresh eggs. It says restricted. Now what they are telling over here, all the items which are restricted, also you can import samples. Samples are okay because only once you get sample, you'll say, okay, I want it. So you'll go to the DDFT and say, sir, please give a license. License means please give an authorization to import this item. Are we clear, everyone? Now, so it says no authorization shall be required for import of bona fide technical and trade sample of Baba, whatever is freely importable for them, so samples also you can get. But for restricted item also you can get sample, but you can't get for defense, security item, seed, and bees and new drugs. Remember this 5 item, very, very important. They'll ask you, what are the import policy for sample? Baba, samples can be imported. Authorization is not required for restricted item, but it is not applicable for what? Defense, security item, seeds, bees, and new drugs. Say sample of tea exceeding, not exceeding 2000 rupees, CIF in one consignment shall be allowed without authorization by any person connected with the tea industry. Duty free import of sample up to 3 lakh for all exporters shall be allowed as per the terms and condition of custom notification. How much import can I do duty free, everyone? Import of sample up to a value of 3 lakhs for all exporters. So basically what I'm doing now, I'm an exporter. Now to export, I will want to get some samples from outside India. If I'm getting samples, I can import without any authorization if it is restricted item also. But restricted item also, I told you 5 items you can't get. Then other than that, if you are going ahead and importing, they're telling samples of tea not exceeding CIF how much? 2000 in one consignment shall be allowed. And also they have told duty free import of sample. Otherwise, samples whenever you are importing, you have to pay duty. But they are telling duty free also can be allowed up to 3 lakh rupees for all exporters shall be allowed. So if I am an exporter and I want to import duty free samples, then they are telling how much will be allowed without payment of any duty up to rupees 3 lakh rupees. Then next, import of gifts. Very important. You know what people were doing? People were getting from outside India. They were telling Raksha Bandhan is coming, sir. We'll get Rakhi. And Rakhi ke saath, brothers say supposedly, you do one thing. Send me an iPad, send me on laptop, send me everything. Government went ahead and told import of goods. What is the policy? Import of goods, including those purchased from e-commerce portal through post or courier. But whenever goods are coming by post or courier, it's 100% duty has to be paid. Custom duty is how much? 100%. Plus social welfare such as they are telling over here, where custom clearance is sought as gift is prohibited except for life-saving drug. For an example, one person is not well in India. He told his brother in US that, brother, this thing ke liye, one drug is there in the US, can you please send? He sent it to him. Life-saving drug, okay, no problem. That can be imported without payment of any. Now, for that also, if duty is there, you have to pay. They are telling, see, import of goods, including those purchased from e-commerce portal through post or courier, where custom clearance is sought as gift, is prohibited except for life-saving drugs, medicine, and Rakhi, but not gift relating to Rakhi. Okay? And they are telling import of goods as gift with payment of full duty is allowed. Means if you are importing supposedly any goods which are there as gift, no problem. You pay the duty and clear it. But life-saving drugs, Rakhi, they are telling you can import as gift. Are we clear? Can you import goods as gift? Yes. Life-saving drugs and Rakhi, they have told it can be imported. But other items, if you are going ahead importing, import of goods as gift, where custom clearance is sought as gift and you don't want to pay duty, they are telling it will not be cleared. Rakhi ke liye gift hai. Not cleared, you have to pay the duty and you have to clear. They are telling with payment of full applicable duty is always allowed. Can I go ahead, everyone? The next one. Authorization is not a right. Baba, relating to this, no, one question was there. 1 minute, I'll open the Q&A material so that I can show you one question. 1 minute. See, there is a small question which is there. State in brief for import of sample. No authorization is required. We understood now sample. No authorization is required for import of bona fide technical and trade sample of restricted item except these 5 items which are there. Samples of tea not exceeding 2000 rupees CIF in one consignment shall be allowed without an authorization by any person. Basically, you don't need any authorization of rupees 2000 ka CIF. Next, Duty-free import of sample up to 3 lakh rupees for all importers shall be allowed as per the terms and condition of the custom notification. Baba, this is about import of sample. Did we learn about import of samples? Here. Can I go ahead, everyone? Now they have gone ahead and told about gifts. Gifts also I told you. Sir, always remember authorization is not your birthright. That you are telling, I am an exporter. It's my right which is there. No. DGFT can tell, hey, you want authorization. You went to the DGFT and told, you told restricted item is there. Give me an authorization to import. He told, get lost. Baba, nothing. Remember, authorization is not your right. It is no person shall claim authorization as a right, and DGFT or the regional authority. Sir, DGFT ka head office is in Delhi. Regional authority means under the DGFT decentralized offices which are there shall have the power to refuse to grant or renew the same in accordance with the provision of the Foreign Trade Development and Regulation Act or rules made thereunder and the foreign trade policy. The next one over here. Sir, we understood relating to import, now relating to export. Provision relating to export. Imports, I have already told you what is the general provision, import export code, mandatory document for import and export. Then I told you about state trading enterprises. Whenever you have to import and those items are under STEs, those can be imported or exported only through the state trading enterprise. Imports of sample, I told you. Then I told you about import of gift. Remember, anything which you import as gift, only what is allowed? Life-saving drugs and Rakhi, not gift relating to Rakhi. But sir, any other item which I am clearing as gift, I can pay duty and clear it. Next, sir, then the next one of provision relating to export goods. Remember one thing. Now you know what? This also amendment came in the last attempt. This time they have given only one line of this. Last time they had gone ahead and given the ICA amendment booklet had one half or quarter page relating to denomination of this thing. So last time we had taught it as amendment. This time they have given only one line. So we'll learn only one line and go. Otherwise, I have to teach you for half an hour, which is not required. Can I go ahead, everyone? Next. Denomination of export contracts which are there. Sir, denomination of export contract means if I am going in and exporting, all the export contract and invoices shall be denominated in freely convertible currency or INR, but export proceeds should always be realized in what, everyone? Freely convertible currency. It means you should always realize in freely convertible foreign exchange which is there. Sir, invoicing, payment and settlement of export and import have also been now permitted in Indian rupees. This much only is given by your ICI. So we'll go ahead and read only this much. What are they telling over here? They are telling all the export contract and invoices shall be denominated in what? Freely convertible. Means if you are exporting or importing, you should always make it in what? Dollars or INR. But export proceeds should always be realized in foreign convertible. Indian government is selling earned dollars. Can I go ahead? But now they have also gone ahead and told invoicing, payment and settlement of export and import have also been permissible in Indian rupees. Clear? They are telling now it is also permissible that you can make invoices, you can make the settlement of payment in INR. But actually it is not completely true. There are a lot of other things which are there, but we don't have so much requirement. Can I go ahead, everyone? So, sir, this one liner is totally bakwas from exam point of view. You don't have to go ahead and read further on this because they have given very limited discussion on this. I'll show you. Status holder we have discussed over here. Where is it? 1 minute. Huh. Can I go ahead, everyone? Chalo. Next, please come down. Export Promotion Council. I have already gone ahead and told you about the Export Promotion Council. What are Export Promotion Council? Like leather ke liye there is one Export Promotion Council. Hey, did we see everyone? Yes? So, sir, Export Promotion Council. Recognition of Export Promotion Council to function as registered authority for issuance of what? RCMC certificate. Export Promotion Councils are organizations of exporters set up with the objective to promote and develop Indian export. Each council is responsible for promotion of a particular group of product, project or services. Just now I showed you now over here. Sir, please show again. Okay. Where is the government ka Ministry of Commerce and Industry. When you go to the Ministry of Commerce and Industry over here, you will see there are various export promotion council. These are the various not working here. These are the various export promotion council. Sir, export chemical and allied product, council for leather export, sports goods export promotion council, gems and jewelry export promotion. So basically all these are organizations who are there whose basic objective is their field ka item which is there should be exported. Are we clear? And how to promote the export of that item. Each council is responsible for its own product which is there. Now, if you want to go ahead and export that product, you should be a member of the Export Promotion Council. You will be given one registration cum membership certificate, and all the benefits under FTP will be given to you only if you are a member of your respective Export Promotion Council. And everyone over here, see. Export Promotion Councils are organizations of exporters set up with the objective to promote and develop Indian exports. Each council is responsible for promotion of a particular group of product, project and service. Sir, export promotion councils are eligible to function as registered authorities to issue what? Registration cum membership certificate to its member. They will give RCMC certificate. Sir, what's an RCMC certificate? It's a certificate evidencing registration of an exporter as member of an export promotion council. Sir, apparels council, engineers export promotion council, etc. Any person applying for authorization to import or export of goods except items listed as restricted item or applying for any benefit or concession under the foreign trade policy shall be required to provide the registration cum membership certificate granted by the competent authority in accordance with the procedure specified in the handbook of procedure. So basically, you will be given all the benefits under the foreign trade policy only if you have the RCMC certificate, and it says unless specifically exempted from under the FTP, you will be required to provide your RCMC certificate. Then it says certificate of registration as exporter of spices issued by the Spice Board and certificate of registration as exported of coir product issued by the Coir Board shall be treated as RCMC certificate for the purpose under this policy. Basically, if you want any benefits under the foreign trade policies, which are basically all the incentives etc. given, it will be given to you only if you are a person who is registered under your respective export promotion council and you already have your registration cum membership certificate. That's it. The next one, interpretation of policy. Sir, supposingly there is any matter in which the foreign trade policy I am not able to understand anything. For those, you should refer to the DGFT, and DGFT ka always decision will be final. Remember, CBIC ka decision will not be final. DGFT, Director General of Foreign Trade ka decision will be final. Suppose they tell you in the exam, DGFT ka decision is not final, CBIC ka decision is final. No. Always remember, in any matter relating to foreign trade policy, the Director General of Foreign Trade ka matter is, the decision is final. It says, sir, the decision of DGFT shall be binding on all matter relating to interpretation of policy or provision in handbook of procedure, appendices and Aryat Niryat form, classification of any item for import or export in ITC HS. Baba, now if I want to classify this item as bottle or I want to classify as thermal item, now might be there is an ambiguity which is there. In that scenario, whatever decision is taken by the DGFT ka decision will be final. Now, if it is being classified supposedly as thermal item and thermal item is restricted, then for restricted item you need an authorization. So always remember, whatever is the decision taken by the DGFT is always final and binding in matters of foreign trade policy. The next is export of gift. Baba, just like how we learned about import of gifts, what about export of gift? They are telling the decision goods including edible item of value not exceeding 5 lakh. Baba, if it is gift, you will not earn any money in India. So they are telling maximum item which you can gift is how much? 5 lakh. In a license year may be exported as gift. However, item mentioned as restricted for export shall not be exported as gift without an authorization. Baba, all the, see, freely importable, exportable, you don't need any authorization. Restricted item, you need authorization. Prohibited item, you can't import and export. ST can be imported or exported only through ST. So if an item is restricted and you want to gift it, then Baba, you need an authorization. The next one. Third party export. Third party export. What do you mean by third party export, everyone? For an example, I am one person. I have an order from outside India, but I am not going to export. What I will do is I will go ahead and export, but I am not a person who will manufacture. I went in and told you, hey, you manufacture and you give it to me. I will go ahead and export. Now, in this scenario, what will happen is he has gone ahead and given you the goods and you are going ahead and exporting. Now, this person also wants to claim the benefit of under the foreign trade policy that, sir, I want benefits under the foreign trade policy. So, this person who is there, he has given me and I have gone ahead and exported. My name and his name both should be there in the shipping bill. Only then this person will be given the benefits under the foreign trade policy. What they are telling over here, third party exports, deemed export, basically except deemed export you leave it, shall be allowed under foreign trade policy. It means if I have got an order and I tell you, you manufacture and give it to me and I'll go ahead and export. In this scenario, sir, third party exports are allowed under foreign trade policy. In such case, export documents such as shipping bill indicate name of both of the manufacturer exporter and third party exporter. Whoever is the manufacturer who is manufacturing and giving it to me, his name also should be there and my name also should be there. Only then this guy will be eligible to claim the benefit of the under the foreign trade policy. E bank realization certificate, export realization from RBI, EDPMS. What is this? Just a minute. Huh. So, sir, what is this export realization from RBI's export data processing management system, which is there over here? Sir, export realization, e-realization, wherever applicable in DGFT IT system, export order invoices should be in the name of the third party. What they are telling over here? They are telling over here, sir, third party export shall be allowed. Are you allowed to make third party export? Yes. Then it says in such case, export documents such as shipping bill. Shipping bill shall indicate name of both of the manufacturer exporter and third party exporter. Bank realization certificate or export realization from RBI wherever applicable in DGFT export system, DGFT का IT system, export order invoice should be in the name of the third party exporter. But third party exporter का name पे all the things can be there. But shipping bill में what they are telling, both the parties का name should be there. What they are telling over here, see, shipping bill shall indicate name of both the manufacturer exporter and third party exporter. The next one over here is developing district as export hub. What are they trying to tell you over here? That, sir, one district is there supposedly. Supposedly one small district is there. They are telling we'll first identify that district may if there is any product which can be exported and which has export ka potential which is there. See, supposing we go ahead and talk about one small district, anywhere one small district in Andhra, Telangana, might be Chennai, Tamil Nadu, and one district is there when such product is there that it can be exported. So they are going ahead and telling they will set up one committee. Actually, if you see in my textbook, I had gone ahead and given one full chapter only on chapter number 3. In my textbook, I had gone ahead and spoken about the chapter number 3, developing district as export hub. That's why first they will set up one committee, district export promotion council. Now this they will go ahead and have one action plan which will be there for every district, right? State or after the they have gone ahead and identified something. Then comes the state or union territory export promotion council. Then there will be nodal DGFT regional offices which will be there. There are a lot of procedures which are there in this. But sir, as far as if I go ahead and see over here, ICI has gone ahead and given a very small portion of it. So their intention is not that they will go ahead and ask you anything on this, but still, we'll go ahead and read little about it. It says to galvanize districts of a country to become export hubs. They want districts to become export hubs to by identifying products. So, sir, they are trying. See, one which we had gone ahead and learned over here was basically they were giving recognition to those towns which are of export excellence, which are already exporting. For an example, Mirzapur is already exporting the carpets which are there. Now, when Mirzapur is already exporting the carpet, they are just giving a recognition as a town of export excellence, and now they will give benefits to those towns, saying, sir, we will help you in exporting much. But in This one, developing district, they are trying to develop a district as export hub, saying that, sir, first we will see this district. In this district, okay, Karnataka, supposedly one district. In this district, is there a product? So they will set up one committee who will try to identify that in our district, is there any product which we can go ahead and export? Are you guys able to understand? So what they are trying to tell is developing. They are trying to develop district as export hub. So, sir, to galvanize district of the country to become export hubs by identifying product and services with export potential. First, they are trying to identify those products which have export potential in the district, addressing bottleneck. What are the bottleneck? Why are those products not being exported? For exporting this product or service, supporting local exporter or manufacturers to scale and find potential buyer outside India. All this will be done by whom? The committees which are being created. And with an aim of promoting export, manufacturing and services industry in the district. This is intended to bring greater level of awareness and commitment regarding export at district level. So people just imagine in one state, 5 districts, they identify 5 products. Those products, why are they not able to export? What is the bottleneck? Are they not able to find buyers outside India? They will try to find out bottleneck. They will try to identify buyers outside India, and they will promote district. Now, just imagine every state may, if one committee is set up who is identifying. So basically, central level pay, central government is trying to implement this program. Whereas central government wants that every district level pay growth should happen. District will grow, state will grow, state will grow, India will grow, and the exports will become more. So every district level pay they are trying to identify product. Then they are telling building capacity to create new exporters and identify new market for product focused product and services. Which will be the market where we can sell this product. This will also empower medium and small scale enterprises or MSME farmers and small scale industries to benefit of export opportunities in the overseas market. This decentralized and focus based approach will shift the focus on district led export growth for self sufficient and self reliance by providing global platform to product and services from district. So basically they are trying to identify what over here, they are trying to identify those districts which have those products which are which can be exported, and they are trying to help those manufacturers in whatever means in going ahead and exporting, and so that ultimately when the district will grow, ultimately India ka export will grow. So they are trying to develop districts as export hub. For this they have formed district ka committee, state level pe committee, many committees are being created, but ICA ka intention is not to get into it, so we'll not get into much. Next, sir, the next one over here is chapter number 4, which talks about duty exemption and remission scheme. This is the main portion where basically exam related questions start. Okay, everyone, till now it was just the basics which were there. Let's do one thing. Let's take a small break. Once we come back from the break, we'll go ahead and discuss about this duty exemption and remission scheme. Let's take a break. Chalo, let's continue. Everyone over here. In the exam, this duty exemption and duty remission schemes, all this which we are going to learn now, advance authorization scheme, DFIA scheme, all these schemes which are there, generally they go ahead and ask a 5-mark question out of this only. Okay, everyone? So please be very careful, listen carefully. Duty exemption scheme and duty remission scheme. Sir, what is a duty exemption scheme? Let's, sir, listen. And what's a duty remission scheme? When I go ahead, 1 minute, everyone. If there is anything additional which is there. Now, duty exemption and duty remission scheme. What do you mean by remission scheme? For an example, I imported. If I go ahead and export the item as such or after processing, if I go ahead and export, I get duty drawback, right, everyone? It means whatever duties I paid on those goods, I get duty drawback. But in this scenario, what happens? No, I'll tell you. If I go ahead and import, and on importation, I pay custom duty to the government. When I go ahead and make my final goods and I go ahead and export, I get duty. Whatever duties I've given to government, government gives it back to me. Correct? I'm telling, sir, why to pay you and why to take duty drawback? Rather, give me exemption only. And that is what we are going to learn in advance authorization scheme. And this is advance authorization scheme and DFIA scheme. What is advance authorization scheme? That government, you went to the DGFT. You told, sir, please give me an authorization to import without payment of any duty. I will make final product and export and get foreign currency, sir. DGFT, Baba, when he sees foreign currency, he gets love, love, all smileys in the eye. He is very happy. They, oh, foreign currency will come and he will give you an authorization. That, okay, take authorization and import the raw material, make the final products and export. But when you make the final product and you export, at least India mein value addition should be 15%. On that basis, they give you the advance authorization. So, sir, supposingly, I'm a manufacturer of shirt. I'm telling, sir, I went to the DGFT, sir, I want raw material. So, if he does not give you advance authorization, what will happen? You will import raw material, you will pay the custom duty. Then you will make final product and export. You will get duty drawback on the basis of advance authorization. Correct, everyone? Duty drawback is a remission scheme which you already have learned under our custom. Are yes or no? So, what duty remission scheme is duty drawback wala scheme. Whatever duty you have paid is being given back to you. That is duty remission scheme. Duty exemption scheme is what? You don't have to pay. So people tell me one thing. When you import and you pay custom duty, your working capital is blocked. Later when you go ahead and export, government will give duty drawback on all industry rate, brand rate, special brand rate, etc. So basically you would have paid some duty and you will get duty drawback. Now you are telling, sir, don't ask duty only. When I am importing, I will not pay custom duty. I will show the advance authorization which is given by the Director General of Foreign Trade. If I give advance authorization, if I show the advance authorization, I can import without payment of any duty, make the final product and export, and I will not take any duty drawback also. That is advance authorization. So you can go to the DGFT and say, sir, understood? Please allow me to import without payment of any duty. He'll give you an advance authorization, import it, make the final product, export, but at least India mein value addition should be how much? 15%. So at importation, if you had spent supposedly $1,000, how much? $1,000. At the time of export, the FOB value, CF value, if it was $1,000, at the time of export, the FOB value should be 1,000 plus 15%, which is how much? 1,150. FOB should be 1,150. If you do that, then Baba, you will get. If you are doing that, then they are telling advance authorization will be given. So first you take the advance authorization, go to the DGFT, import the raw material without payment of any duty, do the value addition and export. It says over here, advance authorization. Authorization means a permission to import or export as per the foreign trade policy. At present, most of the import and export are free, but still regulated or restricted. Some import and export are regulated or restricted. Import or export of such regulated or restricted item, you need authorization. Authorization can be based on value, quantity, actual user condition, value addition to be achieved, minimum export price and other condition. In general, import authorizations are given subject to actual user condition. What do you mean by actual user condition? Actual user means the person who has been given authorization, he can only import. So if I have been given advance authorization, it means I can only import. It is based on actual user condition. It means I can't go ahead and give you the advance authorization and say, okay, you can import. So advance authorization, if I go ahead and take it from the DGFT, I should only go ahead and import and use the raw material. It's given on the basis of actual user condition. So, sir, if I get advance authorization, should I only go ahead and import? Yes, it's given on the basis of what? Actual user condition. For obtaining authorization, an application shall be made to the DGFT or the regional authority. So, Baba, people, what's an advance authorization? It's just a permission to go ahead and import, and permission to import without payment of any duty. You can import without payment of any duty, make the final product and export. Who are the people who are eligible? Advance authorization can be issued to manufacturer exporter, merchant exporter. What do you mean by manufacturer exporter? Who will manufacture and export? Merchant exporter, who is just going ahead and trading, who is importing and he is going ahead and exporting. When you import and export as such, 98% duty drawback is given. You're telling, don't ask me duty only, I will go ahead and export. So it is given to a manufacturer exporter also, who will get the raw material, manufacture and then export, or who will get the material and directly go ahead and export. Both of them are given this advance authorization. And it says, tied to a supported manufacturer, advance authorization can be issued for physical export if you are going ahead and exporting physically, or might be including export to SEZ. If you are going ahead and exporting to SEZ also, then also you can take advance authorization. Let's say I want to import raw material or I want to import product and I want to go ahead and export, then you can get advance authorization. Sir, intermediate supply means might be you're going in and supplying it to someone and he will go ahead and export. In that scenario also, you will get advance authorization. Next, supply is made to specified category of deemed export. Baba, I am supplying to an advance authorization holder who will ultimately go ahead and export. So if I am supplying to him also, I can get advance authorization, import raw material, manufacture the final product, give it to whom? The advance authorization holder, ultimately he'll export. So Baba, I can also get advance authorization. Then supplying as stores on board of a foreign going vessel or aircraft. Baba, if an aircraft is going outside India, I want to supply something as stores. Stores supplied to a foreign going vessel are duty free. So if I'm importing those stores from outside India, then if I have advance authorization on import of stores, I don't have to pay any duty. And then ultimately I'll go ahead and supply it to a foreign going vessel who will take it outside India. There is no duty. So imports will be allowed duty free if I have an advance authorization. So that exam mein they can ask you who are eligible for advance authorization. If you are a merchant exporter or a manufacturer exporter. Number two, if you are physically exporting the goods outside India or supplying to an SEZ, because SEZ ultimately exports outside India only. If you are supplying it as intermediate supply, or if you are supplying to a foreign going vessel, or if you are supplying to whom? Specified category of deemed export. Baba, deemed export ka case mein ultimately you are giving it to him, he will go ahead and export. So you as a supplier of deemed export also can take advance authorization. Is my point 100% clear to all? People, what? Some people are like this. I don't know, yes or no. Got it or not, everyone? Can I go ahead? Chalo. So people, remember one thing, the next one. Sir, advance authorization, can I take it for annual requirement also? Means for every time import, I don't want an advance authorization. For annual requirement, can I take one advance authorization? So they are telling advance authorization can be issued for annual requirement also. That annually I need this much raw material. Can you give me an authorization that 1 time, 2 time, 3 time, 4 time in a year I am going ahead and importing? How much amount can I go ahead and import without payment of any duty? So they are telling authorization for annual requirement shall be issued where SION or valid ad hoc norm on the date of authorization. What do you mean by this? They are telling, sir, on the basis of SION, standard input output norm. You are telling, sir, I have export orders of 1 lakh shirt. Then 1 lakh shirt ke liye per shirt 1 meter cloth is told in standard input output norm. So they are telling 1 lakh meter ka annual requirement ke liye they will go ahead and give you the advance authorization, saying, sir, you are telling you have orders approximately 1 lakh shirts which are there. So, sir, 1 lakh shirt ke liye 1 lakh meter cloth is required. 1 lakh meter cloth ka they will give you the advance authorization. And they are telling it is not available on self-declaration basis. It will always be on what basis? SION basis. If SION should be specified for your item, only then they will go ahead and give you the advance authorization. They are telling annual authorization is given on the basis of SION or valid ad hoc norm exists on the date. Basically, on the basis of valid ad hoc norm. These are also norm, basically, wherein the norms committee will go ahead and fix saying that, sir, this much import can be done with respect to this much output, this much input is required. But on that basis also, you can go ahead and take the annual advance authorization. And they are telling exporters having past performance of at least two financial year, means last 2 financial year, preceding financial year may you should have done your export performance is there, only then this advance authorization for annual requirement will be given. Full year ke liye advance authorization will be given. And they are telling they shall be entitled for advance authorization for annual requirement if you have at least preceding 2 financial year ka export performance, means you should have performed export in the last 2 preceding financial year. Then current year may you will be given what? Advance authorization for annual requirement. And they are telling entitlement in terms of CIF value will be up to 300% of the FOB value of physical export. Baba, whatever physical export you have done, whatever physical exports you are doing, of that how much will be given as annual requirement? 300%. Or and FOR value of deemed export in the preceding financial year. So, sir, in the preceding financial year, whatever was the FOB value of that 300% can be given as 300. See, it says over here, entitlement in terms of CIF. It means annual requirement ke liye, how much you can go ahead and import. They are telling that authorization will be given for how much? They are telling CIF value of the import shall be, it means what you are importing, that CIF value should be up to 300% of the FOB value of the physical export. Baba, whatever physical export you have done, whatever physical export you have done, you want raw material, right? So raw material ka value, physical export in the last financial year, whatever you have done, of that 300% they are telling, we can go ahead and give it to you. So see over here, entitlement in terms of CIF of the import. Baba, when you import, you get CIF. Correct, everyone? When you import, do you know how to calculate CIF? Array 10-1, 10-2 adjustment and all. Export in the preceding financial year, whatever FOB was there, of that, see over here, shall be CIF value of the import shall be up to 300% of the FOB value of physical export in the preceding financial year, or 1 crore, whichever is higher. Means maximum they are telling you over here. Matlab, this is the 1 crore rupees, whichever is higher. It means minimum 1 crore, not minimum. 1 crore, sorry, 1 crore is the minimum over here, whichever is higher. Or, sir, if I am not doing physical export, might be I am supplying to a deemed exporter who is ultimately going, I am supplying to a person who is holding an advance authorization, who is ultimately going to export. So whatever value of FOR was there, because see, ultimately I am going to a deemed export, because I am a supplier of deemed export, means I am giving to an advance authorization holder who will export. So I also need raw material. So how much can I import? They are telling 300% of the FOB value of the physical export, if you are physically exporting, or if you are giving it to a person who is going to export, might be an advance authorization holder, then FOR value of the deemed export in the preceding financial year, of that how much? 300% or 1 crore, whichever is higher. Please remember this point. Can I go ahead, everyone? Next. Sir, what are the items that can be imported duty-free against advance authorization? If I have taken an advance authorization from the government, how much duty-free import I can go ahead and do? They are telling inputs which are physically incorporated in the exported product, making normal allowance for wastage. So people, I can get inputs, number 2, which are physically incorporated. Fuel, oil and catalyst. Baba, people, you are making t-shirt. Will you put oil and send it outside India, or you will use oil? You will use oil in the manufacturing. Now, when you are using oil, that oil also you can go ahead and import. They are telling fuel, oil, catalyst, which are consumed or utilized to obtain the exported product. Those also can be imported. Then, mandatory spares also can be imported, which are required to be exported or supplied with the resultant product. Might be you are supplying some product. Along with that, might be one spare part you are providing. Might be you are exporting one bike. Along with the bike, one filter you are providing together. So they are telling permitted up to how much? 10% of the CIF of the authorization. Then, however, item reserved for STE cannot be imported against advance authorization. So people, can you tell me what are the things you can import? Inputs, fuel, oil, catalyst, then mandatory spares, which is up to how much? 10% of the CIF value. That's all. Sir, STE items you can't go ahead and import under advance authorization. Next, sir, what is the value addition that will be done? How value addition will be calculated? You are telling minimum. See, I'll show you over here. Minimum value addition is how much, everyone? Why are they giving you advance authorization that you can import duty free? Why are they giving you inputs, fuel, catalyst, etc.? You can import duty free, right? So that you can do some. Make in India is promoted. In India, some value addition should be done. That is how much? 15%. And they're telling 15% value addition. In case of tea, minimum value addition is 50%. Spices, it is 25%. Mainly you have to remember 15 only. Okay, everyone. Now, how is this value addition will be calculated? How this value addition will be calculated? Supposingly, they are telling value addition will be CI value of the input and FOB value. People, FOB value is 1 crore. CI value is supposingly 50 lakh. What you imported? 50 lakh you spent. FOB value is 1 crore. 1 crore minus 50 lakh divided by 50 lakh into 100. Are you guys able to understand? Minimum value addition should be how much, everyone? 10%, 15%. So it says FOB value of the export realized or FOR value of the supply received. But what is the FOR value? Why FOR? If you are supplying within India only, deemed export supplies. And CI value of the inputs covered by the authorization plus any other imported material used on which benefit of duty drawback is claimed or intended to be claimed. So people, first of all, FOB value, whatever is the FOB value of export minus the CIF value divided by CIF into 100. Are we clear? How will you find out the advance authorization? FOB value minus CIF value divided by CIF value into 100. FOB is of export ka, import ka CIF value. And it says advance authorization shall also be available where some of the inputs are supplied free of cost to export by the foreign supplier. Mama, listen to me very carefully. I am making some goods in India and I'll go ahead and export. The foreign buyer who is there, foreign supplier who is there, he went ahead and gave me 2 lakh rupees raw material without any cost. He gave me free of cost. I imported, supposingly, I'll show you one example. One example I'll show you so that you guys can connect to this. 1 minute. Here, people see. XYZ has imported inputs without payment of duty against advance authorization. You got an advance authorization without payment of duty. You imported inputs. The CIF value of the input is 10 lakh rupees. How much inputs, everyone? 10 lakh. FOB value? The inputs are processed and final product is exported. You will do the processing and you will export the final product. The exports made by XYZ are subject to general rate of value addition. Means how much is the value addition, everyone? General 15%. No other inputs are being used by XYZ in the processing. What should be the minimum value addition? Inputs are 10 lakh. What should be the minimum value addition? 15%. How much should be the FOB value? 11 lakh 50,000. Story is over. 11 lakh 50,000. I'll show you one more question. People, are you able to connect to this now? Nothing. Your input get without payment of any duty. Input ka CIF value pe do value addition, and your FOB value should be more than, means at least 15% value addition. That's it. Now, when you are importing, listen, when you are importing raw material, might be he has given you 2 lakh rupees ka input free. Then they are telling over here, supposingly, I'll show you over here. Beston manufactures goods by using imported inputs and supplied the same under aid program of the United Nation. Okay? People, United Nation means you are supplying to, it's a deemed export supply. I'll tell you how. When you are going in and reading deemed export supply under FTP, no? GST mein we learned deemed export supply, AA, EE, boys PG. Advance authorization holder, EPCG authorization holder, EOU or bank or public sector undertaking supplying goods to an advance authorization holder. These 4 were there under GST. But in customs, in FTP basically, they consider deemed export as all these people. Who are the people who are deemed it? Whom when you supply, it will be termed as deemed export supply. Number 1. It refers to those transactions in which goods supplied do not leave the country. What is a deemed export? Where goods don't leave the country and payment for such supplies is received in INR or in freely convertible foreign exchange. Supply of goods as specified in the foreign trade policy shall be regarded as deemed export provided goods are manufactured in. People, you manufacture the goods, make in India. You manufacture the goods in India, supply to a person who is holding an advance authorization, EPCG authorization, then your supply will be deemed as deemed export. Now, additionally, they have told what are deemed export in FTP. Number 1. If supplies categories which are deemed as export. Number 1, supply of goods against advance authorization or authorization for annual requirement. Somebody has annual requirement ka authorization. I told you 300%. Correct? Or somebody has advance authorization or somebody has duty-free import authorization, which I'll teach you next. If somebody has duty-free import authorization, then also your supply will be termed as what? Deemed export. The next is supply of goods to a unit which is located in export-oriented unit, software technology park, biotechnology park, electronic hardware technology park. So if you are supplying to a person who is located where? In EOU, STP, ESTP, biotechnology park, then your supply will be what? Deemed as export. If you are supplying capital goods against EPCG authorization, somebody has export promotion capital goods authorization and you are supplying to him, then your supply will be what? Deemed as export. If you are supplying to projects financed by multilateral or bilateral agencies funded as notified by the Department of Economic Affairs, Ministry of Finance, MOF, then Baba, your supply will be termed as what? Deemed export. If you are supplying an installation of goods and export to project financed by multilateral or bilateral agencies funded as notified. Baba, one is if it is funded as notified by whom? Department of Economic Affairs, Ministry of Finance, or if it is funded as notified, then also they are telling it will be termed as deemed export. Baba, you can remember if it is supply of goods to a project or supply and installation of goods and equipment to a project which is financed by multilateral or bilateral agencies. Sir, if you are supplying to mega power projects, If you are supplying to home, mega power project. If you are supplying to goods to United Nation or international organization for their official use, or if you are supplying goods to nuclear project, then Baba, remember your supply is what? Deemed as export. Now, here if you go ahead and see, they are telling Bestron Limited manufacture good by using inputs and supplies the same under aid program of the United Nations. Which means you are supplying what? Deemed export supply. The payment for such is received in foreign convertible exchange. Can Bestron manufacturer seeks advance authorization in respect of the supplies? Yes. Advance authorization can be taken for physical export also. And hey, everyone, you remember advance authorization can be taken for physical export also. And if you are supplying to deemed export, which I just now showed it to you, can you take advance authorization if you are supplying to deemed export? Yes. Can we? Go ahead, everyone. The next one. Please see the next question. Now, element has imported inputs without payment of duty. The CIF value is 20 lakh. People, CIF is 20 lakh. The inputs are processed and final product are exported. The exported at general rate. People, can you tell me 20 lakh? What should be the value addition? 15%. How much should be the export value? 23 lakhs. 23 lakhs. Over. Now, sometime what happened? The foreign supplier who is there, he will give you some goods without any amount, free. Now, they are going in and telling the notional value of that item should be added to your CIF value. Supposingly, he gave me 10 lakh rupees ka item free of cost. Did I pay him anything? Nothing. So, sir, if I had imported 20 lakh ka item, plus he gave me 10 lakh rupees ka item free of cost, my CIF value will be taken as 30 lakh rupees. 20 was the CIF value, plus 10 lakh rupees ka item he gave me free. That notional amount also will be added. And now 30 lakh ka into 1.5 time, my FOB value should be how much? 30 lakh into 1.5. No, 30 lakh into 115%, that is plus 15%. They are telling X Limited imports goods 10 lakh free of cost from YINC under advance authorization. It also imported goods worth 30 lakh rupees. People, tell me one thing, 30 lakh rupees CI value, correct? 30 lakh rupees plus 10 lakh rupees ka item free. 40 lakh, how much would be the 115%? 46 lakh. The resultant product of Y FOB's value is how much, everyone? 36 lakh plus 10 rupees ka free of cost wala item. Both side you add it. In when you are seeing the inputs ka value may you add and make it 1.5 time, and export ka value over 36 lakh plus 10 lakh 46 lakh. So see here, determine whether aforesaid export is eligible for advance authorization. See over here, 36 lakh plus 10 lakh of free of cost, 30 lakh FO CIF value plus 10 lakh 46 lakh, 40 lakh pay into 115% is how much? 46 lakh, and Baba, the FOB value of the export is already 46 lakh. Did you guys understand this point? What are they telling? Imported goods worth rupees 30 lakh. 10 lakh rupees ka item was given free of cost. It means 40 lakh is the total. 40 lakh ka into 115% is how much? 46 lakh. FOB value was given already 36 lakh plus 10 rupees ka item. People, exporter when you imported, the foreign supplier gave you 10 lakh rupees ka item, which you will make the final product, and final product may it will be incorporated. So don't you think this 30 lakh ka item to got incorporated, plus 10 lakh rupees ka item is also going with the exported goods only. So total export ka value is how much? 46 lakh. Is it complying, everyone? Will you get advance authorization? Yes. They are telling, see, the minimum value addition criteria is 15%, which is 6 lakh, and the same is met as export value is 46 lakh. However, X Limited can be asked to realize only 36 lakh. Why? Because 10 lakh rupees ka free of cost item has been given along with the product free of cost. So I imported raw material from you, I made the final product and gave it back to you. Now in this scenario, you gave me 30 lakh ka product, plus you gave 30 lakh ka I paid you, raw materials paid, plus 10 lakh rupees ka product was given free of cost. So 30 lakh plus 10, 40 into 115% is 46 lakh. And sir, FOB value is how much? 30 lakh, 36 lakh plus 10 lakh rupees ka item. So it is 46 lakh only. And have you met the value addition criteria? Yes. Chalo, can we go ahead, everyone? Is this example clear to all of you? Yes, no, don't know. Please tell me quickly. If you understood, I'll go ahead. If you did not understand, then I'll go ahead and stop. Did you understand, everyone? Can we go ahead? Now, one thought which can be there is, sir, why import and export both may 10 lakh we are adding? What is the difference it is making? Baba, 10 lakh when you add it to your import ka value, your CI value, then that on 10 lakh also you have to add 50% value addition in India. Even if it is free import, but still value addition on that free import also has to be done. That is why they are adding that 10 lakh rupees over there. Can we go ahead, everyone? So it says over here, see, in case any inputs are given free, see, advance authorization shall also be available where some of the inputs, some or all are supplied free of cost by the foreign buyer. In such case, notional value of the free of cost input shall be added in the CI value and FOB for the purpose of computation of value addition. However, realization of export proceed can be equivalent excluding the notional value. Very, very important from exam point of view. I gave you 2 to 3 examples. Did you guys get it, everyone? Can I go ahead? Next. Sir, important you say, then we'll mark first. See, what are they telling? If you got an advance authorization, till when it will be valid? Advance authorization shall be valid for 12 months from the date of issuance of authorization. So if the authorization is issued today, from today how many days? 12 months it will be valid, not dates. Validity of advance authorization for deemed export supply shall be coterminous with contract duration for of the project execution or 12 months from the date of issue of authorization, whichever is later. People listen to me very carefully. If I am supplying to an advance authorization holder and that supposingly I am supplying for a project import, people, might be there is any project which is going on, and for project if I am supplying, which is a multi lateral or bilateral agencies ka. So it says supply of goods to a project. If I am supplying for a project and the project is going to go on for 24 months, 24 months or 12 months, whichever is higher or lower, Baba, whichever is higher over here. You have to remember minimum time. Okay, advance authorization is valid generally for 12 months from the date of authorization. But sir, supposingly I am supplying for a project. I want an advance authorization because I am supplying for a project. It's a deemed export. Now that project is going on for how many months? 24 months. Then will I get advance authorization ka validity as 12 months or 24 months? 24 months. That's what they are telling over here. Chalo, let's go ahead. Next. Duty exemption. Sir, if I am going ahead and supplying for against advance authorization, people listen to me very carefully. If I have got advance authorization, I can import duty free, right? Now, when I am importing duty free, what are the duties that will be exempted? They are telling you don't have to pay any duty. All the duties, CVD, safeguard duty, anti-dumping duty, everything. Import under advance authorization, if I am importing under advance authorization, are exempted from payment of basic custom duty, additional custom duty, education cess, Baba, social welfare. Now it is not education cess. Now it is what? Social welfare surcharge. Correct, everyone? Then anti-dumping duty, countervailing duty, safeguard duty, transitional product specific duty, whatever is applicable. Remember, all the duties will be exempted. Imports under advance authorization for physical as well as deemed export. If I am going in and exporting outside India or I am exporting in India to a person who is if I am supplying as deemed export, they are telling are also exempted from the whole of GST and GST compensation cess, which is levied under 37 and 39. Imports against supplies given below will not be exempted from the payment of anti-dumping duty, countervailing duty, safeguard duty, and transitional safeguard duty. See over here, these two pay all the safeguard duty, transitional product safeguard duty will be applicable. Number one, when you are supplying capital goods, supply of capital goods by a registered person against EPCG authorization, or so if I am going ahead and supplying to whom? To a person who is holding EPCG authorization, or if you are supplying of goods to United Nations or international organization for their official use, or supplied to project financed by the United Nations or international organization approved by the government of India, then in that scenario, what will not be exempted? Anti-dumping duty, countervailing duty, safeguard duty, and transitional product safeguard duty. This will not be exempted in these two items. But you know what? From exam point of view, you can remember that, sir, whenever you are going ahead and importing under advance authorization. For people, what is advance authorization? Everyone, now you tell me. What is advance authorization? Can you tell me? I imported raw material without payment of any duty. But in India, I have to do whatever is the CF value plus any free item which was given. Total item ka 15% value addition has to be done in India. And I have to either supply it as physical export or I can supply it as deemed export also. People, here I have told you how you can go ahead and supply. Are we clear, everyone? Can we go ahead? Chalo. Here is the advance authorization. One small question can come in the exam. Please be very careful. Now, please move to the next one. The next is duty-free import authorization. Sir, what is duty-free import authorization? Duty-free import authorization is basically going ahead and talking about, supposingly, I went ahead and already have my inputs. So, Baba, in advance authorization, it is given in advance. It is given in advance. What do you mean by advance? Means before you go ahead and export and make the final product and export, for the input you are taking authorization. That is your advance authorization. What is duty-free import authorization? Sir, I bought raw material. Out of the raw material, I made final product. Government told Ramesh, first you make the final product and you go ahead and export. Once you make the final product and you go ahead and export, after that, you come and tell me that I have made the export. For your replenishment, means whatever raw material you require for your next time export, first you prove yourself. See, advance authorization was given in advance. Sir, I have an export order. Please give me an advance authorization. Sir, see this advance. I have order. If you give me advance authorization for inputs, I will make the final product and export. That is advance authorization given in advance. Duty-free import authorization is what? Sir, I already went ahead and bought inputs, made the final product, and I have exported. Now I have proved myself that I am exporting. See, sir. So whatever inputs you require, they will go ahead and give you an authorization, which is duty-free import authorization. Now, that is basically for replenishment. Means next time you are going ahead and exporting, you already have your raw materials ready. But this is known as duty-free import authorization. Are we clear? That, sir, first you go ahead and prove yourself that you are exporting, then we'll give you duty-free import authorization. But remember one thing, in duty-free import authorization, they are going ahead and telling the minimum value addition in India is 20%. Are we clear, everyone? See, duty-free import authorization is a post-export facility to import inputs used in the manufacture of exported product. Did you guys understand this thought? Advance authorization is what you are going to export. For that, whatever raw material you want, you are taking advance authorization, first importing the raw material without payment of duty, making the final product and exporting. That is advance authorization. What is duty-free import authorization? First you exported and then you are telling in the exported product whatever inputs was used. Now you give me a permission to import those inputs without payment of any duty. It is just like when you exported, you first imported raw material. You made the final product, exported, proved to the government. See, I can export. Now, whatever raw material was used, please give me an authorization that raw material can be imported without payment of any duty. Now, either I can import those raw material or my export is already completed. I can transfer it to someone also and that person also can go ahead and import. Remember, advance authorization is actual user condition. If you are only the user, only you can import. But duty-free import authorization is not actual user because, sir, I imported raw material, made the final product, already exported. Now you gave me a certificate saying you can import duty-free. I don't need only. Can I give it to someone else? Yes. Did you guys understand the thought? Duty-free import authorization. What do you want? You want advance authorization or duty-free import authorization? You always want advance authorization only so that you can import raw material without payment of any duty, make the final product and export. And value addition is only 15%. Duty free is what? First you import, pay the duty, make the product, export. You prove yourself, then you go ahead and get the duty free import authorization. It's a post export facility to import inputs used in the manufacture of exported goods without payment of basic custom duty. People, here exemption is given only for basic custom duty, not any other duties. Advance authorization may all. Very important exam question. Baba, what is the difference between advance authorization? See, I'll teach you from here first. Can you see over here? Difference or similarities between advance authorization and DFIA scheme. We'll read this, then we'll go back. Same, everything is same. Correct, everyone? See, in both DFIA and advance authorization scheme, import of inputs, oil, catalyst, which are required for exported product are permitted without custom duty. The difference between, people, this was the similarity. In both of them, they are telling you can import raw material, basically import of inputs, oil and catalyst. Done? Here, sir, advance authorization is not transferable because it is actual user condition. If it has been given to me, I should only import. But duty-free import authorization is transferable after export obligation. Means they are telling you whatever you have gone ahead and what do you mean by this? Supposingly, I have gone ahead, whatever is the value addition? whatever value addition I have done, I have to go ahead and realize the foreign currency. Basically, they are telling only then you can go ahead and transfer. Then they are telling over here, but this is transferable. Here value addition 15, DFI may 20. Advance authorization is available to gems and jewelry sector. DFI is not available. DFIA cannot be issued where SION prescribes actual user condition, as the material is transferable after fulfillment of export obligation. Baba, wherever actual user condition is there, only actual person who was given the advance authorization or DFIA can use. So if there is a standard input output norm which has been set, and in the standard output input norm they have told only actual user condition is there, it means the person who is importing only has to use. Then can DFIA be issued? Because DFIAs are transferable and DFIA cannot be issued. They are telling advance authorization can be issued even if SION for that product is not fixed. DFIA can only be issued if SION has been fixed for that product to be exported. Next, IGST has been exempted under the advance authorization scheme, but there is no exemption available if imports are under DFIA scheme. For DFIA scheme, IGST is not exempted, only basic custom duty, but advance authorization scheme, all the duties are being exempted. They generally, see, it was asked in CA final May 18 as 4-mark question. Now, we'll go ahead and read quickly. Everyone over here, you understood the basic difference between both of them? Advance authorization is given in advance, duty-free import authorization is given later, post-export facility, whatever inputs you have used so that you can replenish, so that you can get the inputs again for next export. Are we clear? Next, value addition 15, value addition is 20. Here, advance authorization may transferable, duty-free import. Now, duty-free import authorization is transferable, advance authorization is not transferable. Let's read. Sir, duty-free import authorization is issued to allow duty-free import of inputs. In addition, import of oil, catalyst which are consumed in the process of production of export product may also be allowed. Domestic sourcing. People, I have duty-free import authorization. Can I buy domestically also goods from someone else? Might be I want inputs. I can import. Can I buy it from someone else also and give him this DFI authorization and buy from him? Supposingly, you are a local manufacturer of those inputs. Can I buy it from you? They are telling holder of advance authorization or DFIA can procure inputs from indigenous suppliers, state trading enterprises, EOU, ESTP, BTP, software technology park in lieu of direct import. Such procurement can be against advance release order or invalidation letter. Basically, these are the this letter, advance release order, etc. is required if supposingly you went ahead and told I want to import inputs, and now you are telling those inputs are available in India also. I can take it domestically from a person. Then, Baba, you need this advance release order or invalidation letter. Only then you can buy the inputs from a local manufacturers also. And for them, it will be considered as what? If those people are supplying to a person who is holding an advance authorization, for them it is a deemed export. Next. Duty exemption. Here only basic custom duty is being exempted. IGST will be payable on the imports. Sir, eligibility. However, this authorization shall be issued only for product where the standard input norm has been notified. Remember, only if standard input output norm is there, DFIA will be given. Because you are telling, sir, I exported 1 lakh shirt. So 1 lakh shirt ke liye how much duty free import authorization will be given for the next attempt? If one shirt ke liye 1 meter is told, then 1 lakh meter of clothes ke liye they will give you the duty free import authorization. If for your product SION is not there, standard input output norm is not fixed, you will not get duty free import authorization. The next is application is to be filed with the regional authority before effecting the export under duty free import authorization. See, if you want duty free import authorization, before exporting only you should go ahead and file your application. Then no duty free import authorization shall be issued for inputs which are subject to pre-import condition or where SION prescribes actual user condition, because if actual user condition is there, duty free import authorizations are transferable. Actual user condition is there, then actual user only should import, and for that they are telling duty free import authorization will not be given. If supposingly one product is there, for that actual user condition is there, then for that product they will not give duty free import authorization. Why will they not give? Why will they not give? Because duty free import authorization are transferable. Next, Sir, minimum value addition is how much? 20%, except for physical export for which payments are not received in foreign convertible currency. Baba, remember one thing, simple as that. They are telling, sir, if you are going under duty free import authorization, minimum value addition will be 20%. Next, validity. Applicant shall file an application with the concerned authority before starting the export. So, people, before I go ahead and export, I should file an application. And once I go ahead and export, they will give me the duty free import authorization. This export may how much raw material was required. For that, they will see the CON standard input output norm and give me a duty free import authorization. And remember, export shall be completed within 12 months from the date of online filing of application and generation of file number. So if I have gone ahead and told I want duty free import authorization, then they are telling duty free import authorization will be given to you. But before going ahead and exporting, you should file an application. And once you have filed an application, within how much time export should happen? 12 months. Then the applicant shall file an online application with the regional authority before starting export. After completion of export and realization of export proceed, request for issuance of duty-free import authorization. It means after completing the export, before starting of export, you should give an online application. After completing of export, you should realize the foreign currency. Only then the DFIA authorization, basically duty-free import authorization, will be given to you. So before starting the export, you should give application. After you have gone ahead and realize the export proceed, DFIA will be request for issuance of transferable DFIA may be made with the regional authority that, sir, please give me the duty free import authorization within a period of how much? 12 months from the date of export or 6 months from the date of realization of export proceed, whichever is later. So, sir, from the date of export, 12 months may you should apply, or once you have realized the foreign currency, from that within 6 months, whichever is later. Regional authorities shall issue transferable DFIA. Baba, remember DFIAs are transferable, and wherever actual user conditions are specified, DFIAs will not be issued because it is transferable, and actual user conditions say actual user only should go ahead and use it. So how will they issue transferable DFIA? And it says with a validity of 12 months from the date of issuance, export proceeds shall be realized in foreign convertible currency except otherwise specified. Always remember DFIA ka case mein you should always realize what? Foreign currency. So people, before starting your export, please give your application. Now do the export, realize foreign currency, then apply for the transferable DFIA. Sir, what is the value addition? I've already told you value addition should be 20%. So, sir, you should always do FOB value of your export minus the CIF value divided by the CIF into 100. So, it says FOB CIF. See, CIF value of the inputs covered plus any imported material used on which benefit of duty drawback is claimed or intended to be claimed. If some items are supplied free of cost, notional value shall be added in calculating the value addition. Same thing which I have told. Export to SEZ, developer or co-developer, irrespective of currency realized, will also be covered. So if you are going ahead and exporting to SEZ, they are telling that will also be covered in your what? Duty-free import authorization. Next. Now, everyone listen to me very carefully. One, I went ahead and told you duty exemption scheme. What is duty exemption scheme? Where you don't have to pay any duty. Number one was advance authorization scheme. Number two was duty free import authorization. What is duty free import authorization? You have raw material which are there, imported raw material, paid the duty. Now you exported, you got the foreign currency, they gave you the duty free import authorization. Now you can get your inputs without payment of any duty. Are we clear? These two are duty exemption scheme. Duty remission scheme is one is duty drawback. Whatever duty you have given, that is given back to you. One more duty remission scheme is RODTEP scheme. Remission, here duty remission scheme mein RODTEP scheme is also there. RODTEP. Everyone here now. RODTEP scheme. Remission of duties and taxes on exported product. Listen to me very carefully. Earlier there was something called merchandise export from India scheme, under which government used to give scripts. Hey Ramesh, supposingly this item which is manufactured in India, no, this is not sold only. Now government wants to encourage the sale of this product. What will government do? No, government will tell Ramesh, if you export this product, no. What is the problem, Ramesh? Why I'm not exporting? Sir, profit is not too much. What government will tell Ramesh, if you export this product, no, of your FOB 2% I'll give you as script. Sir, what will I do with script? Script can be used for payment of your basic custom duties. So basically government is telling Ramesh, export this item. I will give you scripts. I'm very happy. Yes or no, everyone? So that was services export from India scheme के अंदर SEIS scheme was there. Government used to give scripts. MEIS scheme was there where merchandise export, goods export from India scheme में government used to give script. Now these scripts which are being issued was against the World Trade Organization का. Now World Trade Organization went ahead and told, sir, this is not acceptable. You can't give MEIS scheme, SEIS scheme, scripts, etc. So World Custom Organization or Trade Organization, whatever, government went ahead and stopped that MEIS scheme. And then government went ahead and told, we will give MEIS scheme, SEIS scheme, you forget it. Now government have actually against the MEIS scheme, they had imposed this RODTEP scheme. So they deleted MEIS scheme and they have got what? RODTEP scheme, nothing. Government is selling, Ramesh, export the goods, taxes should not be exported. So any local taxes which are there, which are not refunded to you, they are telling we will give you under RODTEP scheme for every item. They have fixed one percentage. Saying, Ramesh, if you are exporting this item, no, might be in India you would have paid some local taxes, might be in India any taxes which you would have paid, which are not being refunded, now will be refunded under the RODTEP scheme. Basically, they have fixed for every item 1%, and that much percentage is given as duty, not duty drawback, is refunded under the RODTEP scheme. So what is the RODTEP scheme? Government has introduced a new scheme, RODTEP scheme, for eligible export of goods. RODTEP scheme is based on globally accepted principle because MEIS scheme was not acceptable and hence they had to delete. Earlier there was MEIS scheme. That duties and taxes not to be exported. People, you should export the goods. Internationally, local duties and taxes, if you go and export, if you go and put export duty, local taxes ka burden on exported product, internationally your product will become expensive. Correct or not? And hence, they are telling, and taxes levied or borne on exported products should either be exempted, means whatever goods you are exporting, on that whatever duties are there, that should be either exempted in India or it should be remitted to the exporter. Means supposingly in India, I am making one product and exporting, and on that product might be some excise duties there, might be some local taxes are there, 10 rupees ka. Either that should not be charged at all, or if that is charged, I should be given back to me. Otherwise, my product when they are going out of India, that will be with those taxes and they will become expensive. So they are telling, Baba, you should never have those taxes ka burden. And for that, India has implemented RODTEP scheme. This scheme provides the remission of the amount in the form of duty credit script. And Baba, duty credit script is nowadays credited to your e-credit ledger. Do you remember e-credit ledger? In your customs also, they have now introduced duty credit ledger, which is their electronic duty credit ledger. And in that, the scheme may, RODTEP scheme may, whatever script has to be given to you, they will credit in the duty credit ledger. Duty credit ledger say you can use and pay your custom duties. So they are telling over here, it will be created to exporters ledger account with customs. People, did you understand the thought of the government? Government is selling, Ramesh, might be any local taxes are levied on your product, might be any duties are levied on your product for which you did not get your duty, nothing. Duties were not being exempted also, duties were not being remitted also, means you are not never given the refund of those duties. Then those duties ke liye they have introduced RODTEP scheme and they are telling we will give you the duty. Basically, they are giving you the duty back as duty credit script. So here, objective is to refund the currently unrefunded. What is unrefunded to you? They will give you refund of those duties. Duties, taxes levied at central, state, local, borne on the exported product, including prior stage indirect taxes on goods and service used in production of the exported product. Baba, whatever goods and service way, whatever duties you have paid, might be excise duty. All those duties which you have borne already, those will be added to the cost if you are not given return. So they are telling we'll give you back to you as RODTEP scheme. Under RODTEP scheme, such indirect tax levied in respect of distribution of exported product, they are telling the objective of this scheme is to refund the amount which is not being refunded, and for that basically they will go ahead and give you what, everyone? Duty credit script. Then it says what are the silent feature? It seeks to refund the exporter the embedded central, state, local duties. Might be local municipal taxes are there. Local municipal taxes are still there. Correct or not? Tobacco pay state excise duty, central excise duty, etc. is still there. Might be when you are exporting, all those duties are never given refunded to you. Then, Baba, they will give it back to you under RODTEP scheme. And they are telling duty credit script, duty credit is issued in lieu of remission of any duty chargeable on any material used in the manufacture or processing of goods or for carrying out any operation on the goods in India that are exported. So whatever product you are going ahead and exporting, on that whatever duties etc. are levied in India, those will be in lieu of remission, means they are charging you, but they are telling later we will give it as refund to you. So they are telling over here where such duty levy and is not exempted, remitted or credited under any other scheme. Then against export of notified product under FTP also. Number one, wherever product you are exporting, on that any duties are there, that will be remitted. Number two, they are telling against any notified goods also under FTP, they will give the duty return under what? RODTP scheme. Value of the said goods for calculating the duty credit to be allowed under the scheme shall be declared FOB of the said goods, or well, RODTP is basically a percentage of the FOB value, or 1.5 times the market price of the said goods, whichever is less. You know what, people, in order to get this RODTP scheme may refund, will inflate the FOB. So they are telling FOB ka percentage or 1.5 times of the market price of the said goods, whichever is less. The refund is in the form of duty credit and it will be credited to your electronic credit ledger in the custom automated system. Duty credit ledger mein it will be created. The scripts can be used only for payment of duties of custom levied under the first schedule of the Custom Tariff Act, that is the basic custom duty. These credit scripts which are being issued can be transferred to another importer, and another importer also can go ahead and use it. People, did you understand RODTP scheme? They are telling we'll give you a percentage of duty drawback, not duty drawback. Duty will be refunded to you. And sir, this duty will be put in your duty credit ledger. You can use it to pay your output tax. Basically, whatever is your basic custom duty, you can use to pay your basic custom duty. You can transfer it to importer and he can use to pay his basic custom duty. The next one, eligibility for the scheme. All exporters are of eligible RODTP export item. Sir, is it there somewhere? Let's see if it is there somewhere where they have given here somewhere they would have given the RODTP related list also. Here. See, RODTP. Here rates of RODTP. Everything you will find it on the DGFT website only. Can you see over here RODTP rates? So they would have gone ahead and given the different rates. How much RODTP? See, 0.05%, 0.05% per kg. Can you see over here? Subject to a cap of 24 rupees. So this is the RODTP, how much they are giving. The next one. Sir, rebate would be granted to exporters at a notified percentage. Did I show you? With a value cap. Did I show you the value cap also? People. Yes. Of the eligible exported product wherever required on the export of the item. However, for certain exported item, a fixed rebate amount per unit may also be notified, which we just now saw that sir, percentage is also given and value cap is also given. Sometimes percentage etc. is not given. Directly one amount is told that okay, per item, per this much RODTP will be given. Next. Remember, this is very important. For which product RODTP will not be given? Following shall not be taken for calculation of entitlement under the scheme. Means they are going ahead and telling, sir, these are ineligible supplies under the RODTP scheme. For this, you will not get any RODTP ka benefit. Remission of duty on exported product. They are telling export of imported goods in same or substantially same form. They are telling Ramesh, RODTP is given for local taxes which are levied. I imported something and exported as such. Any local taxes were borne? No. So they are telling for those RODTP scheme will not be given. Then export through transshipment. What is transshipment, everyone? Goods came to India. I put it in another ship and send outside India. Tell me one thing. In this kind of export, is there any value addition done in India? Any local taxes levied? So on that, RODTP scheme will not be given. People getting it? RODTP scheme is what? For the local taxes. Now, sir, I imported some product, as such exported it. Any local taxes borne? Nothing. So no RODTP may benefit will be given. Next. Transshipment. Goods came into India, put in another ship and transship. Will you get any RODTP ka benefit? Nothing. Then export product which are subject to minimum export price or export duty. Some products are there on which one export price is there. Minimum export price or minimum export duty is there. For that also they are telling we will not give any RODTP. Products which are restricted or prohibited. For restricted and prohibited item they are telling we will not give RODTP. Supplies of product manufactured by domestic tariff area to SEZ or free trade warehousing zone units, on those also they are telling we will not give any RODTEP scheme. Products manufactured in electronic hardware technology park or software technology park, or electronic hardware technology park or biotechnology park. Actually, what happens whenever people supply to this software technology park, uh, biotechnology park, anyways, people don't charge any taxes. Now, when then ESTP is exporting or BTP is exporting, anyways, there is no taxes on those goods. So they are telling for them RODTP may the supplies which they have done, the products which are manufactured in ESTP and biotechnology park, those product ke liye they are telling these are ineligible supplies. You will not be given any RODTP ka benefit. Goods which have been taken into use after manufacture, for that also RODTP scheme is not there. Export for which electronic document in IceGate EDI has not been generated, or export from non-EDI port, basically where custom automated system is only not there, for those ports, if you are going in and exporting from those ports, they are telling we will not give any RODTEP ka benefit. And deemed export ke liye, when you are supplying in India only, for those also you will not get any RODTEP ka benefit. Remember these points, for which they are telling that sir, these are ineligible supplies under RODTEP, means for these supplies they will not give any remission of duties, whatever percentage etc is told, you will not get any benefit. Now, the next one over here is export promotion capital goods scheme. Please come to the next one. Advance authorization, everyone. Advance authorization is basically given for raw material, inputs, oil, catalyst, etc. EPCG authorization is you went to the DGFT and you told, sir, allow me to get capital goods from outside India without payment of any duty. 1 crore rupees ka duty. ठीक है, 10 crore ka capital goods, sir. I have to pay 1 crore ka duty. I don't have that 1 crore, sir. Leave it. I will make product and I will export. And I'll make quality product and export, sir. Allow me to get capital goods without payment of it. Advance authorization for capital goods is nothing other than what? EPCG authorization. Export promotion ke liye, you want capital goods and that authorization is given. Clear? So what are they telling? Export promotion capital goods permits exporter to import capital goods at zero custom duty. But you know what they're telling? You told you will get capital goods. You told you will get capital goods. 1 crore ka duty you will not pay. Because you did not pay 1 crore ka duty, I want 6 crore rupees ka export should be done by you. Your incremental export should be 6 crore. Means average, if I am doing 1 crore rupees ka export every year, they are telling in the next 6 years, I want that 6 crore rupees you earn and give it to me. Foreign currency should be earned. Are you guys able to understand? That's known as export obligation. They are telling over here, EPCG permits exporters to import capital goods at zero custom duty. Zero custom duty, or procure them indigenously without paying. Array, if I am buying from domestically from a supplier, he will not charge me any GST. Do you remember? If I give him EPCG authorization, he will not charge me any GST because he is a supplier of deemed export. He will go ahead and claim a refund of the GST paid. So people, if I am an advance authorization holder, if I am a EPCG authorization holder, I can import at payment of zero custom duty and procure them indigenously also. From a local manufacturer, I can buy it without payment of any GST. Correct? No? In return, exporter is under an obligation to fulfill the export obligation. Export obligation means obligation to export products covered by the authorization or permission in terms of quantity or value or both. Basically, export obligation means you will be under an obligation. Whatever is the duty saved, of that 6 times you have to earn foreign currency and give to the government. Sir, as may be prescribed or specified by the regional authority, the regional authority will specify, but actually it is already there, which is 6 times of the duty saved. EPCG scheme allows import of capital goods except those in the negative list for pre-production, might be R&D stage के लिए, production stage के लिए, or might be post-production at zero custom duty. Capital goods under EPCG authorization for physical export are also exempted from IGST and GST compensation cess. Basically, whatever custom duties are there, IGST, GST compensation cess, you don't have to pay. Levied under section number 37 and 39 of the Custom Tariff Act. Alternatively, the authorization holder may also procure capital goods from indigenous sources, means domestically also you can buy from people. Those people who are supplying you are known as deemed export supplier. Do you remember, everyone? Next, in return, exporter is under an obligation to fulfill the export obligation. Sir, what is the export obligation? Import under EPC the authorization shall be subject to an export obligation equivalent to 6 times of the duties taxes saved on the capital goods to be fulfilled in 6 years. So if I have saved 1 crore rupees, how much should I go ahead and earn? Foreign currency, 6 crore I should go ahead and earn foreign currency in 6 years. Reckon from the date of issuance of authorization. So 6 years will be seen from the date of authorization. 1, 2, 3, 4, 5, 6. In 6 years, you should earn 6 times of the duty which was saved. In case integrated tax and GST compensation cess are paid in cash on import of EPCG, import under EPCG, incidence of the said IGST and cess would not be taken for computation of net duty saved, input tax provided ITC is not availed. Means, what do you mean to say? Supposingly I imported capital goods and I have already paid the GST. I have already paid the GST. If I have already paid the GST, then in that scenario, whatever that will not be taken in, means of that GST, 6 times will not be taken. Why? Because I have already paid the GST. Whatever the duty saved, of that 6 times is saved. 6 times I have to fulfill the export obligation. Supposing at the time of importation I already paid the GST, will it be multiplied by 6? Not required. That is what they are telling. Sir, what are the capital goods I can import? They are telling capital goods including capital goods in CKD and SKD condition. In the exam, they will go ahead and ask you that, sir, you go ahead and import capital goods in CKD and SKD condition. Whether the person can go ahead and take EPCG authorization? Yes. Because capital goods can be imported in complete knockdown or semi knockdown condition also. Computer system software which are a part of the capital goods being imported might be imported a capital goods. To operate that capital goods, one computer also comes together. Can I import that also under EPCG authorization? Yes. Spares, mold, dies, zixers, jigs, fixtures, tools, refractory bricks, etc. Can I import? Yes. Catalyst for initial charge plus one subsequent charge. Catalyst also can be imported. Capital goods for project import notified by the government also can be imported. Remember, once the authorization has been given, EPC authorization, it is valid for how much months, everyone? 24 months. Sir, who are the people who can export? Who are the people who are eligible exporter who are telling, sir, I will export, give me advance, give me EPCG authorization? Who are the people? Manufacturer, exporter, or with or without supporting manufacturer. Might be I'm a person who is exporting and I have supporting manufacturers who are there. They are telling, sir, if I have supporting manufacturers, then also, or if I don't have any supporting manufacturer, then also I can take EPCG authorization. Secondly, manufacturer, exporter who are tried to supporting manufacturer, basically merchant. What do you mean by merchant, everyone? People who are manufacturing, they are giving it to me and I am just trading. I am not manufacturing. Might be I am a manufacturer having supporting, or I am a merchant. Merchant means who is not a manufacturer, but I have supporting manufacturers who are manufacturing, giving it to me. I put it in a container and export. Then also I can take EPCG authorization. It says service provider. Remember, in the exam they will tell you Ramesh Soni is a service provider. Can he go for EPCG authorization to import a capital goods? Yes. Including service provider designated as common service provider, CSP, prescribed, subject to prescribed condition. Basically, you can remember service providers also can take, you know, all this prescribed condition. All these are way beyond in detail, which is not required. For you, they want just to know the basics, whether you know the basics. Because tomorrow what will happen if you are dealing somewhere in custom and you see advanced authorization somewhere, you'll say, what is advanced authorization? That is why they are telling, at least in CA final, little knowledge about FTP should be given to a student. Can I go ahead? Next. Sir, export proceed. Export proceed should be realized in foreign convertible currency except for deemed export. Deemed export ka case mein Indian currency is also okay. Then export obligation shall consist of average export obligation and specific export obligation. Listen, average means what? On an average, if every year I am earning 1 million US dollar, that is my average. You leave that. Barring that, your over and above average what you are earning, you should be earning, that is known as specific export obligation. One is your average export obligation, that much you are earning only. Now, because you have got the capital goods imported without payment of duty, what is your specific export obligation? They are telling at least whatever the duty saved, incremental export over the 6 years should be at least 6 times of the duty saved. Did you guys get the thought? If I was already earning 1 crore rupees, 1 crore from your export, I'm already exporting. That is okay. That's your average export obligation. Over and above that, I should be exporting how much? 6 times. In the 6 years, I should earn 1 crore. If I was the duty say 1 crore into 6 is 6 crore should be the over and above the average export I should be doing, and then only I fulfilled my export obligation. They are telling over here specific export obligation under the EPCG is 6 times of the duty saved on capital goods imported under the EPCG scheme to be fulfilled in 6-year record from the authorization issue date. Specific export obligation is over and above the export obligation. Note, in case of duty direct import, in case of direct import, export obligation shall be reckoned with reference to the actual duty of the amount saved. In case of people imported, or might be it can be domestic sourcing also. In case of directly you have imported from outside India, 6 times of the duty saved. Might be you have procured it indigenously. Export obligation shall be reckoned with reference to the notional custom duty saved on FR value. What do you mean by this? Supposingly I told one person in India only to supply me. He supplied me in India only. 1 crore rupees ka 10 crore rupees ka one machine. On that, what is the notional custom duty I would have saved? If I would have imported the same product from outside India, I would have saved 1 crore custom duty. So they are telling notional custom duty. How much is the notional custom duty I would have saved? 1 crore. If one deemed export ka supplier gave me one machinery in India and I gave him EPCG authorization, in that scenario, he will not charge me GST. But on that 10 crore ka product, how much custom duty would I have to pay if I had imported 1 crore? 1 crore ka 6 times is how much? 6 crores. So they are telling over here, export obligation shall be reckoned with reference to the notional custom duty in case of freight on road, means if it's a deemed export. Are we clear? And you know what? You'll see one more point over here. See, in case of indigenous sourcing of capital goods, export obligation shall be 25% less than the export obligation mentioned above. That is, export obligation is 4.5 times of the duty saved. Means 6 crore ka 75% only is the export obligation. Can you tell me how much will be the export obligation? Hey, calculators. 4.5 crore. Did you guys understand? So if I had imported it from outside India, my specific export obligation will be 6 crore. But if I source it domestically within India, whatever is the notional custom duty saved, of that 6 times multiplied by 75% will be my export obligation, which is my specific export obligation. Are we all clear till here, everyone? Chalo. Now, everyone over here, it says average export obligation is there. Average export obligation under the EPCG is the average level of export made by the applicant in the preceding 3 license years. So, sir, supposingly, this year I am talking about, 22, 23. Okay, everyone? Or I am talking about 23, 24. Okay? Preceding license year, okay, I'll go ahead and take license year, supposingly 2020, 21, 22, 23, 2023. 4 years I am taking over here. Now this year, this year, this year, this year. Now if I have to go ahead and see, supposingly here there was 10 crore, here there was 15 crore, here there was 20 crore ka my export was happening. What is the average export obligation? Means how much export I should do now, average. Divided by 3, 15 crore is my average export obligation. Over and above this, supposingly I have saved duty of 10 crore. How much should I earn? 60 crore, correct? 15 crore to on an average I have to earn. For this year, for next year, the average will be seen of the last 3 years. Are you guys able to understand? So average export obligation might be average of these 3. What is the average of these 3? It will be 15, 30, 45, means approximately 17 crore plus specific export obligation. In the next 6, average so I have to earn only, plus specific export obligation also in 6 years I have to earn this 60 crore, which is the over and above the average in the last 3 preceding financial year, preceding license year which were given. In the 3 license year, whatever I have earned, of that average should be first of all earned, plus over and above that also have to go ahead and earn, that is the specific export obligation, and that specific export obligation should be at least how much? Whatever duty saved multiplied by 6 times. And this I should earn in 6 years. It says average export obligation under the EPCG is the average level of export in the 3 licensing year preceding for the same or similar product. It has to be achieved within the overall period, including extended period otherwise provided, specified. Block wise fulfillment, the authorization holder under the EPCG scheme, while maintaining the average export obligation, fulfill the specific export obligation. People, specific export obligation, first year to fourth year may 50%. Minimum export obligation to be fulfilled in the first 4 years is how much? 50%. It means your export obligations which are there, 60% ka at least 40 crore you should fulfill in the first 4 year. And the remaining, sir, 5th year and 6th year may you can fulfill the remaining export obligation. Can you tell me how much is the export obligation, specific export obligation here? 60 crore. The 60 crore you should earn in how many years? 6 years. First 4 year may how much? 50%. And the remaining 2 years may remaining 50%. See over here, they are telling period from the date of issuance of authorization, first to 1/4 year, and sir, minimum export obligation 50% and remaining export obligation. And remember one thing, one is average and one is the specific export obligation. Are you guys clear with both the point? First of all, last 3 years ka average you should be earning. So this year ke liye, this last 3 years, next year ke liye, last 3 years ka export obligation ka divided by 3 plus incremental also, that is specific export obligation. And that export obligation in 6 years you should earn 6 times of the duty saved. With first 4 year may you should be earning 50% and remaining 2 years may you should be earning 50%. Then note on export obligation, the AEO shall have to fulfill the export have to fulfill every financial year till export obligation is average export obligation should be fulfilled every year till your export 6 years ke liye average you have to maintain. People, otherwise why are you taking capital goods? You are telling capital goods, what you are earning you are already earning, then what is the point? If they are giving you capital goods, then incremental export has to be there. And they are telling average export obligation, this is not authorized economic operator, this is average export obligation shall be fulfilled every financial year till export obligation is complete. Exports or supplies made over and above the average export obligation shall only be considered for fulfillment of export obligation. Then it says in case of indigenous sourcing, specific export obligation shall be 25% less than the export obligation mentioned above, means whatever 6 crore, supposingly you have to earn 60 crore. Can you tell me if you had procured these goods domestically, then how much you will have to earn? Okay, 10 crore is the duty saved into 6 times into 75%. How much? That's it, no? 10 crore is the duty saved into 6 times export obligation into domestic sourcing, then 75%. This is the notional duty which you would have paid if you had imported those goods from outside India. Next, shipment under advance authorization, duty-free import authorization, duty drawback scheme or reward scheme would also be counted for fulfillment of export obligation under the EPCG scheme. Okay. Both physical export as well as specified deemed export shall be counted. Means if I am going ahead and supplying outside India or if I am making exports within India, both will be counted while calculating the export obligation. They are telling not only physical export which you are doing outside India, but within India also if you are going ahead and doing any export, that will deemed export will also be counted in EPCG. The next one, incentive for early fulfillment with a view to accelerate export in case where authorization holder fulfills 75% or more export obligation and 100% of average export obligation till date, if any, in half or less than half of the original export obligation period, means within 3 years. If you fulfill how much? In case authorization holder fulfills 75% or more of the specific export obligation, see, it means you are meeting the average export obligation, you are meeting the average export obligation plus specific export obligation was 60 crore. 60 crore say you earn 30, how much? 75% or more. 75% is 4.5 crore or more in half of the period only. You have earned 45 crore already out of the 60 crore in how much? Half or less than half of the original export obligation period. It means in 3 years only you earned it. Then they are telling remaining export obligations shall be condoned and the authorized redeemed by the and the authorization will be redeemed by the regional authority concerned. Means they are going ahead and telling, sir, remaining export obligation even if you don't fulfill, because you have already fulfilled 75% in 3 years, remaining 25%, so they are telling even if you don't fulfill also it's okay, because we know you will definitely fulfill. If in 3 years you have done it, then they're telling 25% if you don't get also it's okay. Can I go ahead, everyone? This was what? EPCG authorization. Now, we have chapter number 6, which talks about EOU, Export Oriented Unit, Electronic Hardware Technology Park, Software Technology Park, and Biotechnology Park. What are they telling? Units under EOU, ESTP, Software Technology Park, Biotechnology Park. Basically, government have gone ahead and provided them with lot of support, so that all these units which are under EOU scheme, export oriented scheme, units who are under electronic hardware technology park, biotechnology park, software technology park, export their entire production of goods services except permissible sales in the domestic tariff area, can import inputs and capital goods without payment of any custom duty. So if you are a person who is a 100% export oriented unit, you are located in electronic hardware technology park, biotechnology park, software technology park, then your work is what? To export your entire production. In that scenario, you can import inputs and capital goods without payment of any duty. Software Technology Park, ESTP, BTP schemes are available to EOU schemes, and provisions are more or less identical. Baba, they are similar to what? Export oriented unit scheme, and their provisions are also more or less similar. Basically, you can import any inputs and capital goods without payment of duty, because your main work is what? Exports. EOU scheme is administered by the Ministry of Commerce and Industry, while the Software Technology Park, ESTP, BTP schemes are administered by the respective ministries. On approval of application to set up EOU, ESTP, STP or Biotechnology Park, a letter of permission or letter of intent shall be issued by the designated whatever DC. One minute, I'll just tell you. Huh. So here shall be issued by the development commissioner or the designated officer of EOU, ESTP, LOP, letter of permission or letter of intent shall have a validity of 2 years to enable the unit to construct the plant and install the machinery, and by this time the unit should have commenced production. Always remember one thing, Baba, the EOU, ESTP, etc., they will be given a permission from the designated officer, and within how much time you have to go ahead and start? 2 years may you have to construct the plant and install the machinery, and you should have commenced your production. The next one is eligibility. Such units may set up for production of goods including repair, remaking, reconditioner, re-engineering, rendering of services, development of software and agriculture. But remember one thing, Baba, EOU, export oriented unit, etc., basically ESTP, STPs, etc., whenever you are an unit setting up yourself in a ESTP, electronic hardware technology park, software technology park or biotechnology park, you have to have a manufacturing unit, and they are going ahead and telling trading units are not. So they are telling you can be a person who is for manufacturing of goods including repair, remake, reconditioning, re-engineering, rendering of service, development of software, agriculture. But trading units are not covered under this scheme. It means if you are a person who is buying and selling, you cannot be covered under EOU, ESTP, STP or biotechnology park wala scheme mein. So basically, first of all, this point is very important, that within 2 years you should commence your business. Number two, sir, trading units are not allowed. And also, only projects having minimum investment of 1 crore in plant and machinery shall be considered in setting up as EOU. How much, everyone? Minimum 1 crore. Only then you can set up an export oriented unit. However, this shall not apply to units of ESTP, STP, BTP and EOUs in. So, above 1 crore limit is not applicable for electronic. If you are a unit who is going to set up your business in ESTP, Electronic Hardware Technology Park, Software Technology Park, Biotechnology Park, or in handicraft or agriculture or horticulture, aquaculture, animal husbandry, information technology service, brass hardware, handmade jewelry sector. For them, what is not there, everyone? 1 crore ka limit. Minimum investment is not required. Otherwise, EOU ka case mein 1 crore ka minimum investment is required. The next is Board of Approval may allow establishment of EOU with lower investment criteria also. Otherwise, EOU may, if you want to set up your unit export oriented unit. If you want to set up an export oriented unit, minimum investment should be 1 crore. Then you can import input and capital goods without payment of any duty. The next is net foreign exchange earning. EOU, ESTP, STP or biotechnology park must have a net foreign exchange, positive net foreign exchange earner. However, a higher value addition is sometimes specified for some sector. It means you should not be spending more and earning less. You should always have net foreign exchange positive. It means your earning should always be more than your spending. However, how to compute net foreign exchange? Net foreign exchange shall be computed cumulatively in a block of 5 years starting from the commencement of production. It will be computed for how many years? 5 years ka block mein they will go ahead and see whether your earnings are more than your spendings. The next is entitlement of EOU. So if you are a unit under export oriented scheme, ESTP scheme, STP or biotechnology park scheme, then your entitlement for supply, entitlement from supplies from domestic tariff area, you can take supplies from domestic tariff area. Arey, somebody is supplying to a EOU. People, if somebody is supplying to a EOU, ESTP, biotechnology park, then that person is doing deemed export. He will not go ahead and charge you any duty. He will go ahead and pay the IGST, etc., and he will claim a refund. Are you guys able to understand? Next. Supplies from domestic tariff area to EOU, ESTP, STP units are regarded as deemed export, and DTS shall be eligible for the relevant entitlement for deemed export besides discharge of export obligation, if any, on the supplier. The refund of GST paid would be available under the GST laws. In addition, EOU, ESTP, STP, BTP unit shall be entitled to exemption from basic custom duty, IGST, GST compensation cess, and ITC of GST paid on inputs and capital goods. Also, if they, by chance, if they see, one is if I am gone ahead and bought, if I am a unit EOU, if I am bought from a supplier, he will not go ahead and charge me any GST. Import pay, I don't have to pay basic custom duty, GST compensation cess, IGST, etc. But if supplier has gone ahead and charged me, can I take ITC? Array deemed export ka recipient, is there any problem? Deemed export ka recipient can take ITC, and this ITC can be claimed a refund also. Do you guys remember, everyone? Baba, in GST we had learned that, sir, if I am a deemed export ka recipient, supplier either he will not charge me. If he charges me, I can take ITC also, and I can take refund of that ITC also. Next. Following imports are permitted. Export promotion material maximum value of limit of 1.5 time of the FOB value of the previous year export. Then promotional material, people, how much promotional material I can go ahead and export? Of 1.5 time of the value of the previous year export. Whatever export I had done previous year I did 100 crore ka export. Means how much promotional export I can do this year? 1.5 time. Then all types of goods, including capital goods required for the activity from domestic tariff area, bonded warehouse in domestic tariff area, then international exhibitions held in India. Basically, I can go ahead and do the imports from where? From domestic tariff area, I can take the goods. People, if I am a EOU, ESTP, etc., can I take the goods from domestic tariff area? Yes. Bonded warehouse, can I take? Yes. Sir, can I take from international exhibitions which are held in India? Yes. Besides that, you can import also. Next, certain specified goods from domestic tariff area for creating a central facility. Sir, you can also go ahead and import what? Certain specified goods from the domestic tariff area for creating a central facility also. And second-hand capital goods without any age limit, with or without payment of duty or taxes, as told in point number 2, A, point number 2, 1 above. Second-hand capital goods without any age limit, with or without payment of duty or taxes, also I can go ahead and import. Basically, these are the imports which are allowed to a EOU, ESTP, software technology park, etc. Besides that, the next one is chapter number 7, which talks about deemed export, which we have already gone ahead and covered. Done, everyone? Now, if you come to your if you see in this chart, people, I believe that if a student is going ahead and doing this chart properly, I've gone ahead and extensively covered everything. Correct? But beside this also, I'll tell you the additional point which you guys can go ahead and cover. Means what are the point you should remember? Number 1, you can remember what are the administrations of the FTP. Okay? They can write a short note, what is the foreign trade policy, they can ask you over here. Done? Then, sir, National Council on Trade Facilitation, if they go ahead and ask you a small note, you can remember this. Although I don't think so, they will ask you. In this AEO, town of export experience, and this custom status holder is very important. Please see this and go properly. Import export code, you never know, one small point they can ask you. Mandatory document, 3 marks. What are the mandatory documents for import and export? Three documents. Sir, state trading enterprise, one small note they can go ahead and ask you. Please be very careful. They can ask you about Export Promotion Council and RCMC certificates. Please be very careful about it. Might be one small MCQ on import of sample and gift. Export of gift, please be very careful. Advance authorization scheme, the scheme I have explained you, very, very important, because generally advance authorization scheme, DFIA scheme, RODTP scheme, or EPCG scheme. These are the main points which they can go ahead and ask. Advance authorization scheme, duty free import authorization scheme, EPCG scheme, and uh, this is okay. This is okay, but here I have told you, sir, within 2 years you should set up your unit. Trading units are not allowed. These are some points which are important. Sir, deemed export ke liye they can go ahead and tell you to write a short note. Baba, deemed export means what? When goods don't leave India. Domestic manufactured goods, when you supply to a person, they are termed as deemed export. But what are the supplies which are considered a deemed export? I have told you over here. 8 points which I have told you. Out of that, at least 3-4 points you remember. What are deemed exports under foreign trade policy? They can go ahead and ask. Done. Sir, besides this, from the ICI ka booklet which has been released by the ICI, sir, if you want to go ahead and cover anything, Baba, question answers, so you must do it. You can't leave it and go. Beside this, in your ICI ka study material which they have gone ahead and released, see, for 5 marks, in my opinion, if you do the chart book properly, should be good enough. But other than that also, you still want, you can go ahead and mark it. These things are covered. See, some of the silent features of FTP. If you want, you can mark this. Page number 9.3. What are the silent features of FTP? If they go ahead and by chance ask you. Okay? This is okay. Nothing. These are all covered. See, advance authorization, town of export excellence, status holder. Now here, these points also when you read, see, for status holder, although I have gone ahead and explained you status holder, but still some points are there which they have gone ahead and put, which we already know. See, when you are considering points which merit while computing export performance for grant of status, number one, for export performance shall be counted on FOB of the export earnings in freely convertible exchange or INR. Correct? FOB value you will see for export performance. Next, for deemed export, FOR value will be seen. This I have already told you. And how will you convert the FOR into dollars? By taking the conversion as applicable on 1st April of each year. Then, for granting status, export performance will be necessary for how many years? 3 years, current year, and the preceding 3 years, 3 preceding financial year. Export performance is not transferable. You can't go ahead and transfer. Next, it is made on re-export basis, shall not be counted. What do you mean by re-export basis? You imported some raw material, you have exported it for abroad. Baba, you imported some raw material, might be you exported it abroad for some repair reconditioning and you are going to get it back. Re-export is not considered under export promotion. Then, basically export performance के लिए re-exports are not considered. Export of item under authorization including SCOMET I'll talk about, would be included, means under authorization. Okay, if I have gone ahead and done export under authorization, advance authorization, DFIA authorization, export promotion, capital goods authorization, all those are counted in my this 3 million, 15 million US dollar, 50, 200 and 800. All those will be included in this. Then, now this is something which you can take care of it. For calculating export performance for grant of 1-star export house, status category export by import export code holder under micro and small enterprise, manufacturing unit under ISO or BSIS certification, units located in northeastern state including Sikkim, Union Territory of Jammu Kashmir, Ladakh, and vegetables and shall be granted double weightage once in any of the 3 category. Whoever is in these categories will be given double weightage. Double weightage means what? If you have done 1 crore ka turnover, they will consider it as 2 crore. They'll give you double weightage so that you can get 1 star. Basically, supposingly, if I have to get 1 star, 1 star rating के लिए 3 million US dollar has to be done in the current year and the preceding 3 years का export. They will see your export performance in the current year and the last 3 years, and you should have achieved how much? 3 million US dollar. Correct? 3 million US dollar should be achieved. So they are going ahead and telling, in order to see that 3 million US dollar, if you are a person under these categories, then whatever exports you have done, your export performance will be counted as double, so that you can achieve that 1 star house, export house quickly. You said you can become 1 star export house quickly. So they are telling double weightage will be given for the people who are located in or who are doing all these things. Other than that, everything is covered. Huh. Skilling and mentorship, obligation of export status or status holder. If you are a status holder, no, you have to keep under you trainees. They are trying to tell over here. Nothing. They are telling, see, status holder are being made partners in providing mentorship and training in international trade to specified number of trainees each year based on the status they achieve. They have not told anything, how many number of trainees, how much status, etc. So we can ignore this. District hub, we have already understood. Okay. Quality complaint and trade dispute. Baba, they have just given one paragraph, not very important, but yeah. SCOMET item is something which I want to talk about. Everyone listen. What do you mean by SCOMET? Special chemical organism material equipment and technologies. SCOMET means special chemical organism materials and equipments and technologies. India is a signatory of International Convention on Disarmaments. What is this? Disarmaments and non-proliferation, and is a member of major multilateral export control regime. Resultantly, export of dual use item. Dual use item means, sir, any item which can be used dually. Might be if I am going ahead and exporting nuclear fuel. Might be nuclear fuel if I am going ahead and exporting. For an example, I'll show you the comet items which are there so that it becomes easy. Here, this comet ka list is given. So, okay. So, these are the comets which are given over here. Where are the comet list? Huh. Nuclear material. Baba, nuclear material, if you are going in and exporting, might be nuclear material ka use can be to make bomb also. Nuclear material, when you are going ahead and giving to someone, might be the use is industrial use also. Might be there are some nuclear material which are used for nuclear missiles. Somebody is making nuclear missiles and that is good. Somebody ko you are supplying nuclear material and that person is going to make a nuclear missile and attack. So it can be dual use. One can be a good use also, one can be put to a bad use also. Those are known as basically SCOMET item. Then see, toxic chemical. That chemical, if I give to someone, he can do a chemical attack on some country also. Or might be some chemicals which I am supplying. One can be that person can make something out of that chemical item and it can be used as a negative thing. Or might be if I am supplying chemical, somebody is using to make paint item. So those are known as SCOMET item, which dual use is there. So what they are telling over here, including software and technologies having potential civil or industrial application. Means civil means nuclear bomb out of nuclear material can be used and it can be used in industry also. As well as weapons of mass destruction is regulated under FTP. It is either prohibited or is permitted under an authorization unless specifically exempt. SCOMET list is our national export control list of dual use item. Munition and nuclear related item. Baba, nuclear related item, I just now showed it to you, including software and technology, and is aligned to control list of all the multilateral export control regime and convention. Basically, what happens over here, internationally, there is a convention basically where India is also a signatory now. That's SCOMET item which are being exported. Baba, when you are going ahead and exporting, it will be export under, it says, and is a member of multilateral export control and regime. Resultantly, dual use item including software and technologies having potential civil. But basically they are telling SCOMET items are also regulated under FTP. What is regulated? Means, sir, if you are going in and exporting a SCOMET item, it has always to be exported under authorization. It is under an authorization unless specifically exempt. So what, whenever you go in and see the SCOMET ka list, which is the SCOMET ka items either can be exported, cannot be exported, or if they are exported also, they have to be exported under authorization. That's it. Actually, SCOMET ka one full chapter is there, chapter number 10 or 11, but they have told only this much. SCOMETs, if they ask you for exam purpose, you can remember that SCOMET is what, everyone? Export of dual use item, including software technologies having potential civil or industrial application, as well as weapon of mass destruction. Baba, nuclear items, when you are exporting, it can be used for mass destruction also, or it can be used for some industrial use also. Those basically they are telling it is either prohibited or permitted under authorization. That's it. You can remember this much, should be good enough. It is basically dual use items. Next. Otherwise, general provision relating to import and export, Baba, all this ITC, HS, I've told you, goods can be either freely exported or imported. Goods can be exported or imported, and which are restricted. Restricted item, you need authorization. Prohibited item, you can't import and export. And STE, state trading enterprises only through them you can import or export. The next one over here is state trading enterprise, which we have already discussed. Sir, this is already discussed. Now here, they have told penal action. Sir, supposingly one person has gone ahead and done some violation. Export obligation is not fulfilled. Then what will happen? They will be penalized. They are telling over here. Sir, supposingly one person, he has given some self-declaration. He has done some cheating. Then what will happen? That person will be placed under denial entity ka list. All those things they are going ahead and telling. You can mark this point, pip number point. You can read it as homework. Not very important, but additional point. So I'm telling you to read it as homework. Otherwise, all these are okay. Here, everyone, please come to your page number 9.18. Re-import of repaired goods. If I have sent some goods outside India, repaired it, can I get it inside India again? What is the policy? They are telling capital goods, equipments, components, parts, and accessories, whether imported or indigenous, except those restricted under the ITCHS, may be sent abroad for repair. People, going and coming ka fair cost of repair, correct, and labor which was there on the total item, total amount you have to go ahead and give custom duty. Do you remember? So can then be exported for repair export? Yes. For repair, testing, quality improvement, re-import without any authorization. Means you have to remember that, sir, yes, it can be sent abroad and it can be re-imported without any authorization. This point is something important. Next, goods used for project import. People from India, I've taken some goods from India outside India for project, and you are re-importing. Goods used for project import means project abroad. If you have taken some goods from India, you may import without an authorization, but you have to remember one thing. You can import. You have done the project outside India. You are importing the goods back into India. You can import without payment of any duty, provided it has been used at least 1 year outside. Basically, it has been used for a project at least how much? 1 year. Then you can import without any authorization. Next, sir, can I get some prototypes from outside India? Please read this and go. Sir, can I get metallic waste and scrap? Sir, what do you mean by metallic waste? Baba, all these metals, etc., which are there. Now, what will happen? Big countries which are there, they want to send all the metals into India, saying, sir, we don't have dumping grounds. You dump it into India. Can metallic waste and scrap be imported? They are telling over here. Import of any form of metallic waste and scrap will be always subject to condition that it does not contain hazardous, toxic waste, radioactive, contaminated waste, scrap containing radioactive material, any types of arms, ammunition, mines, shell. Shell means gun ka, that outside wala bullet ka outside wala shell is there. Live or used cartridge. Used cartridge means, what is used cartridge? They will hit, all the cartridges will come out. Used cartridges or any types of explosive material in any form, either used or otherwise. They are telling it will not contain. You can import, but it should not contain all these things. Then, now here, this is something which you can remember and go. Actually, I've gone ahead and given this in my textbook also. People, whatever I'm talking, no, those are there in my textbook also. But my textbook, when you see, just a minute. Yes. When my textbook you see, it is extensively given. Means in 30 pages also I have covered a lot. Now the second hand goods which I am talking about, in my textbook it is already covered. 1 minute, I'll show you over here. Here, see. Import and export policy for test. See here. prototypes also I have covered. Everything I have covered in the textbook. But what I'm telling is we are reading from the ICA ka material because only, first of all, you read only the chart book and solve question answers. Lastly, you can go ahead and read your ICA ka material also, which is given. Now, the second-hand goods, you can go ahead and read once. Sir, second-hand goods, can I go ahead and import second-hand goods? They are telling import policy for second-hand goods is as follows. Capital goods, restricted for import and require authorization. What are the capital goods which require authorization? If it is second-hand, people, they can ask you. Number one, air conditioner, second-hand. Baba, you need what? Authorization. DG set, authorization. Desktop, authorization. Refurbished, reconditioner spares of refurbished part of personal computer and laptop. Refurbished spares, authorization is required. All notified electronic and IT goods. All notified and electronic IT goods also you required what? Authorization. Sir, if other than this, any other second-hand goods I am importing, then they are telling free for import. Refurbished, reconditioned spares of capital goods for which chartered engineer certifies 80% of the residual life is there. Then those items you can import without any authorization. Freely you can import. So second-hand goods, sir, can I import? Yes. If it is capital goods, free of import only when the life remaining is how much? 80%. Other than capital goods, you need other capital goods ke liye, they are telling authorization is required. Please remember this point. Air conditioner, DG set, desktop, refurbished or reconditioned spares or refurbished parts of personal computer or laptop, you will need what? Authorization. Sir, all notified goods and IT goods, you will need permission. Then they are telling other than capital goods, can I import? They are telling import for purpose of repair, refurbish, reconditioning or re-engineering. People, I am getting some goods for the purpose of repairing and I'll send it back to outside India. Repairing, re-engineering I'll do and I'll send it back outside India. In that scenario, they're telling, see, okay, here also, this capital goods ke liye, free of import, this was there. And the next one was all other second-hand goods other than above can be imported free. This was for what? This paragraph was for what? Refurbished or reconditioned spares of capital goods for which chartered engineer certified. So basically spares ke liye. Spares of capital goods. Other than spares, if it is any other capital goods, they are telling all other second-hand capital goods above, other than above listed, you can go ahead and import freely. And sir, if it is other than capital goods, imported for the purpose of repair, refurbishing, reconditioning or re-engineering, freely importable subject to the condition. Remaining capital goods means which are not coming into India. Remaining goods, other than capital goods, remaining goods. What do you mean by capital goods which are capitalized? Other than capital goods, if you are getting restricted for import, can be imported against an import authorization. And the same thing I have gone ahead and given in your textbook also. If you find this easy, you can go ahead and read from here also. Sir, desktop, refurbished computer, refurbished reconditioner, spares of refurbished parts of personal computer or laptop. If you want, you can read this from here also, but I'll recommend that when it is already here, then you can read from here only. Done? Chalo. Let's go ahead. Everyone over here now. Sir, I like this. Baba, you can pause the video over here. People who are watching at home also, you can pause the video over here. Write it down if you want to. Sir, what is this? This says desktop computer. Sir, refurbished reconditioner spares of refurbished parts of personal computer or laptop, air conditioner, DG set. Restricted, you can import against authorization. Sir, if it is all electronic IT goods which are notified under the electronic and IT goods, then it is restricted, importable against authorization. Refurbished or reconditioned spares of capital goods, Baba, freely you can import. All other second-hand capital goods other than ABC, freely you can go ahead and import. You don't need any authorization. Sir, second-hand goods other than capital goods are restricted, importable against authorization. Second-hand goods imported for the purpose of repair, refurbished, etc. freely, but there is some conditions which are there. I don't think so very important, but still, because they have gone ahead and given the same thing over here, we should read and go. Can we go ahead, everyone? Chalo, please come down. These are all okay. This, if you want, you can read it. People, other than this, to Baba, there is no limitation to going ahead and reading. The whole foreign trade policy, which is over here. See, duty exemption scheme, duty remission scheme, RODTP scheme, advance authorization scheme. Then after that, if you see over here, validity, okay. Sir, after advance, see, advance authorization also they have written so much. Then they have written common provision relating to advance authorization DFIA scheme, which is there. Domestic sourcing, can I do all those things? Now, if you see everything which I have explained, duty drawback, we already know about it. RODTP scheme also, what we have studied, the same thing is told. Unlimited, they have gone ahead and given. But what I am telling is, first, do your chart book properly, then do the question answers, and then, Baba, if you get time, you can read your textbook. But for 5 or 7 marks, reading the chart book properly, solving question answers should be good enough. More than that, if you really want to spend time, you can definitely go through the ICICA material once. Done, everyone? I'll do one thing. I'll close my discussion over here because spending more than this time on this will be little risky. Then you would not feel like reading this. So please read the chart book properly, solve your question answer. Then if you have time, you can read your ICICA given material once at all. Once you can go ahead and read that. Done, everyone? I'll close my discussion on foreign trade policy over here. Congratulations, people.